I declare open this hearing of the Parliamentary Joint Committee on Corporations and Financial Services into Small Business Insurance. I begin today by acknowledging the traditional owners of the land on which we meet, and I pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islander peoples here today. The committee will be conducting today's hearing in person and via teleconference. These are public hearings, public proceedings being audio streamed via the Parliament website, and a Hansard transcript is being made. I remind all witnesses that in giving evidence to the committee, they're protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It's also a contempt to give false or misleading evidence. Witnesses also have the right to request to be heard in camera. If a witness objects to answering a question, they should state the ground upon which the objection is made, and the committee will determine whether it will insist on an answer having regard to the ground which is claimed. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. I remind any committee members and witnesses who are appearing via teleconference to mute their microphones when they are not speaking. I now welcome Insure Good Times, pride of our Footscray Community Bar, and Chasers Night Club, noting that Chasers have indicated that I think they're parking nearby or arriving shortly and will join us. Yep. We've all had those sorts of mornings. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you all. For the Hansard record, would you please state your full names, the capacities in which you appear? We might start with you, Mr Corcoran.
Seamus Corcoran, Treasurer, Insure Good Times.
And I'm Matthew O'Keefe, the CEO of Pride of our Footscray Community Bar and also the President of Insure Good Times.
Mr Anthony Law, Secretary, Insure Good Times.
Thank you very much. I now invite you to make a short opening statement, and at the conclusion of any remarks, I will invite members of the committee to ask questions. Who wishes to put something on the record? Mr O'Keefe, you have the call.
Yes, thank you for the opportunity. So we thank the inquiry for hearing these issues. So we've had, as part of our Footscray Bar and as Insure Good Times, significant issues with the finding appropriate insurance and dealing with the insurance companies. So we have lodged a lot of evidence. So we lodged a very long submission on behalf of Pride of our Footscray, and we lodged more of recommendations from Insure Good Times. And I guess the submissions will speak for themselves. We submitted a lot of the correspondence, basically all of the correspondence we had with insurance companies, we submitted unredacted so that the committee had everything that they needed. And I know those unredacted emails were not presented publicly, but they are available to the committee so that the committee can see everything that we've been through. I guess we want to share the insurance industry classes us as a nightclub and don't really ask any other questions apart from that. But we are an arts enterprise first and foremost. We are never just open for alcohol. We are open for live performance every single day. So our range of events is we have movie nights and trivia nights and comedy nights and burlesque shows and cabaret shows and the Comedy Festival and Fringe Festival and Midsummer Festival. We do everything and anything, but the insurance industry just say you're a nightclub and therefore you're uninsurable. And you know, long term, if our business was to be uninsurable, you would lose a venue paying artists every day that it's open. And I also just want to reiterate the standing that we have in our industry. So I just want to talk off the fact that if we can't get insurance, if we're deemed uninsurable as Pride of our Footscray, then there's not much hope for everybody else. So Pride opened in 2018. In 2019, we were granted a 3am licence because the council and the local police and the liquor licensing department believed in our ability to run things safely. In 2020, we were awarded a Civic Award as part of the Old Australia Day honours by the Maribyrnong Council. That was for our contribution to the business community. Also in 2020, we received a life-saving, venue-saving grant because of COVID. Our grant was based on our iconic contribution to live music in Victoria. We were running 3 live bands, and that was hosted by a drag queen, which we believe to be a first in the world, combining drag and music. The following year, in 2021, we won another Civic Award. The Civic Award was for innovation in business, and that was from the Melbourne Council. In 2022, for better or worse, depending on your politics, Dan Andrews chose Pride of Our Footscray as the place to do a press conference to award grants to announce a scheme for artist grants. In 2023, we got another local council award, this time for a Rainbow Award from Hobsons Bay City Council for Business. In 2024, Time Out listed us in their 50 Time Out recommended things to do in Melbourne. So we weren't in the top 50 bars or the top 50 nightclubs, we were in the top 50 things to do in Melbourne. So it was Studley Park Boathouse, Science Works, the Children's Farm, Werribee Open Range Zoo, Pride of Our Footscray. Like, this is just iconic experiences in Melbourne. In 2025, we were added to the Visit Victoria State Tourism website. There are very few like venues on that state tourism website, but we are on there. And then to bring us to this year we won Melbourne's favourite queer venue, Melbourne's favourite burlesque venue, and we were named as one of the top 10 queer venues in the world by Time Out. So the reason to start with listing these achievements is because we're such a part of Melbourne and such a part of our local community. It's very unusual for a live entertainment venue to be given civic awards from local councils repeatedly. But to the insurance industry, we have been seen as an unacceptable, uninsurable nightclub. And that is why we're before you today. Yeah.
Well, first of all, thank you for your excellent submission. It provided us with a great deal of detail, and I still remember my Year 8 history teacher, Mrs Davies, who said, go to the primary sources if you really want to find out what's going on, and you provided us with plenty of that, which gives some, I think, really important insight into our considerations. Thank you for the quality of submission. What I'd really like to ask you to do is to go through your recommendations in sub 16. You've got a list of them there on page 7 and 8 of the big pack that you've given us. Just to speak to each of those items and why you believe these recommendations are sound. And I know that you're advocating for your own particular industry and obviously a very successful provider of a platform for artists to continue to create, tell our stories, so important, but also a place for people to gather and connect, which has a social good in terms of mental health and benefit and well-being.
Yeah.
But we don't want to be recommending things that add a regulatory burden. We don't want to be recommending things that are going to cost the taxpayers a lot of money. We've got to have responsible recommendations. So can you take us through and give us your views on each one that you've put forward there?
Yeah, thank you for that. There's a lot of different solutions. Like, I don't think anyone. This is a difficult issue because obviously no one has a perfect solution yet. So we've recommended a number of different solutions. I think the key thing that we would recommend is a government scheme in the same way that WorkCover or TAC operates, where all employers pay into the WorkCover scheme, and if an employer has an accident, they're covered. So it would be exactly the same mechanism as that, and we don't expect that it would cost the taxpayer money, because we don't think the insurance companies are losing money on insuring these venues. So we think that the level of profit that they expect to make is too little for their risk appetite. So we don't think that they're losing money. It's very hard to get an answer from them, but the operating profit is not of interest to them. So they're not interested in doing business with us. So we think if there was a government scheme, it would be profitable. Like, so it wouldn't cost. It would be a small profit, but it wouldn't. I don't think it would be a cost to the taxpayer. And the insurance industry could probably say that to you. I mean, they could say, if they were willing to, we make 3% on these policies, which is not enough for them. They want to make 10% or whatever, which is why they've kind of walked away from the sector. But we wouldn't expect the government to make a loss on it. And I don't know whether work cover operates at a loss, but the employers pay into work cover to make sure that the government's not losing money. There might be criteria about which venues qualify for a government scheme. So we believe, because we always pay live artists and we're not just open for alcohol, or we're not a rave or whatever, we're a live performance venue, that we are worthy of insurance because of the good that we're doing with the performing arts. So that there might be qualifying criteria for to be able to enter such a government scheme. Like you need to be paying people properly, you need to be paying superannuation, and you need to pay your music licensing fees. There's been similar things with the government's the COVID grants. You had to tick 1 million boxes to show you were a compliant venue before you received the grant, and it could be the same with a government statutory scheme for insurance. Yeah.
So in your second dot point, you offer a couple of other versions of the same sort of context, like proposal, a discretionary mutual fund or a hybrid statutory option. Clearly, you know, they're of a similar type, but they vary. Where did the ideas for these other versions of basically government filling in a thin or non-existent market?
I don't mean to speak for
Mr.
Matt,
Cochrane?
but
Yep.
to a degree, desperation.
Okay.
Like, just in all honesty, it does feel like there's no communication between the insurance companies, the brokers, and, you know, the customer being Pride. And I'm a soon-to-be director of Pride. For context, I've worked for Pride for many years. I booked the live music at Pride that got the grant initially. And I was listening to a lot of your, to the previous hearings, and a lot of what was said by the insurance companies was very frustrating, because they were saying, like, we're super engaged, we're providing this sort of insight as to how to reduce the cost of your insurance premium and do the right thing, when we got none of that. We got none of that correspondence. So, yeah.
That goes to your fourth point about transparency, and
Yeah.
you know, like, you're a very different business than some of the regional Western Australian businesses that were represented yesterday, but we're hearing the same concerns about a lack of transparency, and certainly from our point of view, or certainly my point of view, to speak for myself, in terms of making public policy, there appears to be an incredible level of data poverty about what's actually going on. So that requirement for transparency, I think I note at point 4. Could you go to, so that's point 3, could you go to point 4, where you talk about compliance data? Because we did hear something of this yesterday.
So sorry, Deborah. So which what
Pride
paragraph?
is asking the committee to recommend, and we're at dot point 4.
Which submission though?
Oh, 16.
Yep. So 18.4, government to establish a statutory scheme.
No.
There are two submissions.
Yeah,
that have been made.
So is it Ensure Good Times?
Chair,
this one.
what page?
Page 7 of 18 in my book.
7
This
of
one.
18. So it's the
The one
second.
that looks like this.
Oh, it is the other one. So Ensure Good Times.
No, the other one.
Is it?
Yeah.
Does this help, Mr. O'Keefe? This is what it looks like, the first page.
Yeah.
Yeah, it's the Pride one.
Yeah.
It's the second one. Yeah.
It's, yeah, Pride, not Ensure Good Times.
Yep. Sorry.
So this one
So it's
states,
page 7 of your long.
Yeah, I've got it,
118.
Yeah. So I'm on page 7. So it's
It's point 4.
point 4. Yeah. Sorry.
so this is consideration of how regulators' existing compliance data.
Yeah. So
That one.
yeah. No, I'm with you now. Sorry. So sorry. Back on your previous question though about where did the other ideas come from? So there are different schemes already in place for different categories of insurance. So with the medical insurance, there's medical insurance, but then there's a backstop for catastrophic things so that doctors can do their jobs, and there's federal government support for catastrophic medical issues. So there's already existing, there's an existing stuff with the statutory stuff with like work cover and that sort of stuff. There's the existing thing around medical insurance where the government costs it covers the catastrophic stuff. And there's also other schemes, with the the extreme weather and that sort of stuff, or terrorism. So there's a variety of existing sort of government schemes, or half government, half private. So there is a lot of. We're not trying to invent anything new, I guess. So this is us having done research and been affected by things, and looking at what the possible solutions are. I mean, one of the solutions might be that private insurers are required to give public liability insurance, required by the Parliament to give public liability insurance, but if it's a claim over $10 million because something completely catastrophic's happened, then the federal government scheme picks that up. Like it's a halfway house because of the existing market structures. The point 4 that we've come to now is liquor licensing already assess everybody for risk. So we are a venue for 200 people, and we're open until 3 a.m. So the liquor licensing department in Victoria say, okay, because you've got this many people and you're open this late, you are here on the risk matrix, and your liquor license is therefore $10,000, and we are going to inspect you 2 or 3 times a year to make sure you comply. So they come in and make sure, are we not serving people too much alcohol, and do we have our security cameras working? Do we have enough security guards downstairs? Like, the way in which liquor has been regulated for a long time is enforced by the liquor licensing department, and they give you penalties if you breach something. So we have a 5-star liquor license, but if one of our cameras wasn't working, you would lose a star, or if we didn't have the right amount of security, you'd lose another star, and you'd be a 3 or 2-star liquor license. And if you are, your your liquor licensing renewal is $20,000 instead of 10, because you're not compliant. So
this information exists, and the gap that exists between insurers and their risk rating and currently compiled and available data that is verified by the state seems to be a significant gap. Is that a fair statement?
Yes, because this liquor license data that I'm talking about is public. So we can all look up front of our Footscray now and see that we've got a 5-star liquor license. And if someone else had a 3-star liquor license, we could confirm that. So there is a lot of effort made by the liquor license. I presume the liquor licensing regimes in each of the states and territories are roughly similar. So there is a lot of work going on to create these licenses and to regulate these licenses. So there is a lot of public data that insurance companies could rely on.
But sorry, with indulgence here, but Mr. O'Keefe, I don't think they care. I don't think they want to be in the business of providing this insurance. So when I see that your insurance premium went up 25 times, 25-fold over the course of 4 years, from $6,000 up to $157,000 if you include the financing portion, because you simply can't meet that lump sum. That suggests to me they just don't. There's just market value. They don't want to be in this business, and it strikes me anything that involves drinking after midnight, they just don't want to be there. In terms of live entertainment venues, which sort of begs the question for us as a committee who want to keep that cultural activity alive, keep it going as an important integral part of our community, and your record speaks for itself, that if we do nothing, then, and I love the turn of phrase you used, or it resonated with me in one of the submissions where you talked about this inquiry almost being an autopsy into the hundreds of venues that have already closed because they're just unsustainable. So we've got to work out how do we keep this industry alive, because doing nothing doesn't appear to be an option. Is that a fair summary?
Yeah, I think that's. Thanks for saying that. I think that's right, and I think it directly contradicts all of the efforts. Like we were talking about the COVID grant that we got to save the venue. So in 2020, the Victorian government saved us because of our contribution to the arts, and then all the governments throughout Australia since COVID have been trying to rebuild the nighttime economy and to rebuild work for artists and musicians specifically. So while all of this good government work is going on with the venues on the ground, like ourselves, the insurance industry have decided to step away from the market, basically. So it is contradictory, and it doesn't really make sense. And they didn't, even though it was very clear what the government was trying to rebuild these nighttime economies and work for artists, the insurance companies didn't tell anyone. They didn't say your industry is about to become uninsurable. They didn't tell the government, we think there's an issue insuring the arts. There was no grace period. They just walked away en masse.
Although they do, as you recognise in your submissions, the Insurance Council of Australia does recognise there's a problem there, but the issue is they never gave you notice of the emerging problem, right? They just you just found out you couldn't renew, or the premiums just exploded. Yeah,
that's right.
Yeah,
Walked away.
Yeah. But I don't think they want to be in the business.
And they know we need it. Like for building insurance, for instance, we need building insurance to obviously operate, and they just walked away and didn't really provide any reason at all as to why.
They wouldn't. They said Pride's activity, subject to all of those awards, is too dangerous for the bricks and the concrete now.
But why? Like, no claims, there's no sort of like, things haven't gotten, riskier for Pride specifically. It's just a blank canvas. That's how they look at it, unfortunately.
So you ask for an investigation into the cancellation of building insurance by those insurers. I guess that's questions we can put to the insurance industry about their decision for doing so. I'm interested in how that might interact with any loans that exist on the properties with regards to banks and assurances.
I think that's a really good point. I think the intersection between the building insurance and also because the landlord holds the building insurance.
Correct.
And then the tenants of the building pay it. So there's 3 tenants in our building, and whatever the insurance is, it's shared by the tenants. So we've got, we had building insurance in 2023. Our landlord had building insurance in 2023, and WFI cancelled it on 30 days' notice and said, and the letter's provided in the submissions, but the letter just says the activities of one of your tenants is unacceptable to us, and we're cancelling your long-held insurance. And they didn't specify the activities or even the tenant. So is the Vietnamese grocery store downstairs doing something wrong? Or is the gym upstairs doing something wrong, or are we doing something wrong? So the landlord rang WFI and said, which tenant have you got a problem with? And WFI identified us and didn't provide any reasons really to the landlord. So the landlord gave us approval to prosecute the issue with WFI, and they really, the correspondence is all there, but they really didn't want to say anything. Because if activities are a concern to them, they could have said to us, these activities are a concern, can you moderate them please? So we spent 3 months talking to them about what if we replaced our grunge bands with, violinists, to what extent could we moderate the activities? Like, do they not like drag queens? Would they prefer musical theatre over drag? Like, they just would not give us any information, but we really pursued them over 3 months, and with some assistance behind the scenes from politicians and through the Insurance Council, and they ultimately said that they would restore the building insurance if we cut our capacity to 100 from 200. If we cut our capacity to 100, if we had people seated at all times, and if we closed no later than midnight. But what that would do is convert one of Melbourne's most renowned live entertainment venues into a wine bar. Like, it's like Paul said, they don't want to be involved. And but they have to be, or someone has to be, because under the commercial leases with the landlord, the lease says, almost every commercial lease for a venue says you must have public liability insurance. So if every venue like ours has a lease that says you must have public liability insurance, but they don't want to be involved in the industry, where does that leave us? So at the moment, we still don't have public liability insurance, which means our landlord could kick us out at any day. So despite all of these things that we've contributed, we could be removed tomorrow. And
you become the subject of another autopsy.
Yes, that's right. And I wanted to link that back to Deborah's question about the banking. So the banks are supporting us. So the banks have lent us quite a lot of money. And that's because the economy's been difficult and COVID was difficult. So how do you save a venue that can't trade during COVID, or how do you have enough capital to get through a pretty tough economic situation? So it's Westpac Bank. I'm happy to say that it's supporting us, but if we're uninsurable and the landlord kicks us out, then Westpac have just lost all their money. We can't trade. So it does affect the value of the commercial building if you can't have a live entertainment venue in there or it's restricted. And Westpac's investment in us is definitely at risk. Yeah.
And this would be just a comment to close off, but I think that this is what we are hearing everywhere now, that, these are businesses that are sufficiently robust to garner investment from judicious providers of finance and capital. That they're investing in what you're doing. And it's the tail of insurance now wagging that innovation dog. And there's a problem there that's not just happening in inner city Melbourne at a live music venue, live entertainment venue, but it's happening in regional Australia. Different shape, different form, same problem. Over to colleagues for questions.
So I might ask some questions of the representative of Chasers Nightclub. So, Miss Martha Summers.
Mm-hmm.
So you've been listening to
apologies for being late, but there was
No, that's okay. We've all been there. But I'm interested in your reflections on the discussion to date and whether or not there are any additional points you'd like to add.
So there, obviously we're in the same boat. I do have insurance, but it's absolutely unaffordable, and God knows what's going to happen when it is to be renewed in November. But I've been doing some research on maybe how the committee can maybe look into a solution. Work cover, the whole thing about insurance, and I've been speaking to a lot of insurers and also brokers, the whole thing is about claims. So at the moment, we have an injury threshold of 5%. If the injury threshold of 5% is very easily met, so many people are obviously going off and making claims at the 5% because you can get it over the line very easily, but they're making claims 6 to 12 months, a year down the track when footage is lapsed and everything else, and the no-win, no-fee lawyers jump in and tell you how bad you are and all the rest of it. What I'd like you to think about is work cover changed their threshold from 5% to 20%, and otherwise it would have gone broke, and I think the government stepped in, and that threshold of change between 5 and 20% reduced the amount of claims, which meant you needed to be obviously really injured, had to be injured to make the claim. I'm thinking that if that was the same, that percentage was applied to public liability, the appetite for insurers to stick around and support us, because we have 7 layers of compliance. You walk in, you can't even walk past someone standing around watching the floors, the whole thing. We work on paranoia just in case something happens. But when claims come in a year later, and most of them are really questionable, 2 of my occasions that I've had them, I've kept banks and banks of footage for this purpose, and they are liars, but you still have to go through the insurance policy. You still need to let your insurer know, which means your premium goes up, which means your excess goes up the following year. But if the threshold, because most of them only made it to just over 5%, was increased to even 10%, I think that is a really easier way to try and help our businesses, because the claims now are just starting to come in because work cover's got a very strict percentage on injury.
So your insurance has gone from public liability insurance has gone from 39,000 in 2019 to 127,000.
Correct.
In 2026. So you've had a 300% increase over 7 years. And what has the insurer or the broker said to you as the reason?
Basically, it's that the market is very limited. There was only one insurer that was interested in insuring us. We've been around for close to 49 years.
Yep.
I've been there for 22. We've only had 2 claims. Both of them have worked out to be dodgy. Nothing to see here.
Work cover claims or public liability?
No, public liability. We haven't had any work cover claims.
So just in terms of those claims, the 2 public liability claims, did the claimants claimants receive any compensation?
No, just the solicitor receives $60,000 for his time. So when you go to
Who's
these,
solicitor?
the solicitor of the plaintiff. So what I
Oh,
realised,
so you paid their fees,
just their fees.
and the plaintiff didn't receive anything?
No, he wanted 300,000. Now the thing was we had footage, but because we basically had to action our insurance. There's a bit of a, I believe, I'm not sure if this is right, I was very, very against them receiving any money, the other side, which is the other no win, no fee lawyers. I get the impression that I'm taking you to court, I've got some fees, you get some money for me, next time you're in court, I'll make sure you get your fees. There was no reason for the solicitors on the other side to receive any money because it was a bogus claim.
So you didn't make that decision, the insurer made the decision.
But I had to kick and scream from 150 that they wanted to give the other side because of their fees, and basically went berserk on it and said, you know, okay, if you're going to pay their fees, we'll get them taxed.
Okay. And the other claim?
The other claim is still ongoing because the particular, these are both in 2021. Particular person says she was walking down the stairs and her heel got stuck in a concrete step going down the stairs. We were looking for footage going down the stairs. As it was, we found the footage that she went up a step in the smokers area and she was doing a sexy dance going up the step and went backwards. So she's only just found out that we've actually found the footage that doesn't support her VIC claim, and she can do everything in her life. The only thing she can't do is cut roses. So her 5% was just met. Now, if I had known that footage and gone to the medical panel with it, like I did the first footage, it would have been no claim. But it was, you know, the information was incorrect, so we were looking for the wrong thing. So that one will probably be struck out too.
Okay. And then, but then also the building insurance has increased from 30,970 to 85,000.
It's because the property values have gone up, but
Okay.
then they went up quite a bit and they have come back down, but there's no adjustment down the other way. So we cop it both ways.
Okay.
And we pay that, even though our landlord, we actually get it for our landlord, but it's under his name and we pay for it. So my other venue, Inflation Nightclub, in 2019 was $26,000 building insurance, and it went up to $125,000 within a year. You know, like it was just, so it's just gone up. So my insurance at inflation is $320,000, building and public liability. It's just as much as my rent. So if it goes up more, if it keeps going up, I will just shut the doors. I'm not going to sit around for that.
It's just not sustainable.
No. Because there's less people drinking, less people going out, and there's you have to sort of work out ways on trying to, you know, diversify your business, because there's the cost of living, everything else. It's just.
But this is the point that Mr. O'Keefe makes, that governments at all levels have been doing everything we can during COVID to support businesses like yours, and then coming out of COVID to support the resuscitation of businesses and trying to increase that business activity. And whilst the governments are giving grants and activities, and Pride's been recognised for its service to the community, so at the same time as the government trying to provide support, there's this failure from the insurance industry side.
I don't know how much you can do with insurance, because I believe they're private businesses, but I think the thresholds of injury is something that is regulated through the court system. About where someone can sue and where that can go is something that might be of interest for you guys to research.
And different states and territories have different schemes, so that's it's one of the things we are looking at. But as the Chair said, looking at different models, if this model is broken, which it appears to be on the evidence we've got, that it's broken, and you're not alone. It's caravan parks have become uninsurable just about, and we heard testimony in Queensland of a couple in their 90s who can't sell their caravan park because no one wanting to buy it can get insurance. So there's market failure. The diversified mutual fund model, with perhaps some initial government seed capital to get it started. In the interest in your views on this, one of the benefits of that is you can set the standards of those who participate. So both of your entities seem to have very high standards with respect to mitigation of risk. You're not getting rewarded for that by the insurance companies. But in a diversified mutual fund, the members of the fund could all be required to meet those standards, so you're not dragged down by poor performers, and then potentially everyone contributes into that fund. At the start, there's some seed capital, if I can put it that way, from various levels of government to provide the body, and then it sort of funds itself. Is that potentially a feasible model, do you think?
It would be, but I mean, we were on a 5-star rating, and we do everything, and we get compliance people to come in and spend money on massive reports.
Yeah.
But if no one's looking at them...
But that's not bringing down your insurance
They're not valued.
at the moment.
You're
not getting any return for that investment.
But if your model does look at that, and then we basically can flip into that, that would be great. But I think the percentage of risk with injury is going to be your biggest, obviously payout issue.
And Mr. O'Keefe, that sort of model, is there a capacity
I think that's good. I mean, effectively, it's the same. It's almost the same as the statutory model that we were suggesting, like work cover, but that's sort of like an industry-based one.
Correct.
So
it is an
very similar.
industry-based one.
Yeah. So I think if the government was to provide seed funding and we just provided the premiums to that model rather than providing the premiums to the government, it's a similar model. So we'd be supportive of that, and the standards that you're talking about where the members can be held accountable to being responsible, there's been some great work done by Live Music Victoria or some of the peak bodies around the place, like the Australian Live Music Business people. So standards about the best ways to operate are readily available and could be implemented tomorrow about you must meet these requirements. Everything is basic. We're just talking about having a floor steward mopping up every spill. And we don't serve alcohol in glasses. We serve it in plastic, which is a horrible experience, but it's for safety. So you could have this list of 35 key things, and everyone in the industry that complies with these 35 key things can be part of this discretionary fund, and it's managed by industry rather than by the government.
And Mr. O'Keefe, we're running out of time. I've just got 2 quick questions. It really struck me in the submission, and I think you mentioned that you're in this position where you don't have public liability insurance at the moment. So that puts huge pressure on the owners or the directors who are bearing that risk. That must take a real personal toll.
It is extremely stressful, particularly for me who guarantees the debts of the enterprise. And one serious claim would knock us out financially, and it would also, if that was to end the business because there was a claim that could not be covered by insurance because there was no insurance at the moment, that would also end Westpac's investment in us. So we're one bad, dance floor slip away from disaster. So that is extremely stressful, and it's also we're in breach of our lease. So our lease says we must have public liability insurance, and we are in breach of that. So we could be kicked out of the venue tomorrow. But we can be public about this because our landlord is so supportive of what we're doing. Like, they really they've seen hospitality operators in their building for years and really respect us. So they're allowing us to say, you must have public liability under the lease, but until you sort this out, we're willing to be supportive of you. But if they decided to change their mind tomorrow, they could kick us out.
Oh, well, compliments to your landlord.
Yeah, we're grateful, yes.
Can you convey that? But just the final question to each of you. Is it right to say that action must be taken now? It is a matter of urgency, and if it isn't taken, then there is going to be another wave of closures across the live entertainment industry. Is that a fair comment, Mr. O'Keefe?
Definitely, both in the respect of, if we had one injury tomorrow that we couldn't fund, we'd be gone. And it's just sustainability. Like, who would open a live entertainment venue or a nightclub if you're uninsurable? It's a bit like your caravan park example. If nightclubs or venues like ours are seen as uninsurable, the banks won't support them, people won't go into them, the artists won't have a space, and it's just impossible to even budget for. So if insurance was 6,000 in 2020 and then 43,000, then 160,000, is it going to be 400,000? It's impossible to run an enterprise or an industry based on all of these things. So there's a lot of work that needs to be done. It needs to be done quickly, we did get one after being pretty public about this. We did get one quote for insurance, and it's a good quote for insurance, so long as we kind of say we're a restaurant instead.
The biggest,
not solved yet.
The biggest issue you have is if we do close, it'll just go underground, and then you won't be able to regulate what really goes on. At the moment, we have so many layers of regulation, video footage, training, security. Everyone is, it's highly, obviously there's so much compliance. If it goes underground, all these kids will be having rave parties, and there'll be deaths and all sorts of things going on, drugs, the works. So I think that's the alternative you need to look at. Those buildings will stay closed, so landlords miss out, places become ghettos, boarded up, but it'll go underground. People will still keep going out, but they won't come to a place, well, obviously they can't go to a venue like ours because we're just increasing our prices because of the cost, but it will go underground, and that'll be a problem.
Okay, thank you, Chair.
Thank you. Can I thank you for being here today? I just want to restate one of the paragraphs from my opening remarks this morning. I just want to remind all witnesses that in giving evidence to the committee, you're protected by parliamentary privilege, and it is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to this committee, and any such action may be treated by the Senate as a contempt. So I want you to be mindful of that protection and about the evidence you've given here today.
So if you get any blowback from anyone for what you've said today, let us know.
That's what that means, okay?
Very good. Thank you for your time.
Thank you.
Thank you. Apologies again. Thank you.
No, it's great. Good to see you.
And Chair, I did say I thought Mr O'Keefe's submissions were wonderful. It's very rare that I smile when I read submissions, but they were very well written.
Some colour and movement there.
Yeah.
Wonderful. Thank you.
Also, just compliment you on bringing a solution to the table, both of the parties rather than...
And a description of the problem.
Yeah. So, thank you. The committee does take that into consideration.
One of the things that I've spoken to many lawyers, no win fee lawyers, they love Victoria and they don't want to go to New South Wales and Tasmania because there are issues with these thresholds or whatever the rules are. But Victoria, they're lapping it up and they're making a lot of money on these little things that are going on.
Yeah. There was a report the other day about how that industry is operating in the papers. I can't remember which article, but it was a time lapse of what's happening here in Victoria with litigation. Okay, so thanks very much for your evidence this morning.
And keep us informed.
Yep.
No, absolutely. Yeah, and the same. We look forward to.
Yeah.
You've got a big job to do.
Yeah.
And you're going to hear so much. It's great that we've gone around the country to hear from people like yourselves. And
Thank you.
Good luck. Yeah.
Thank you. I now call forward representatives from Volunteering Australia and Volunteering Victoria. And the committee will suspend just for 1 minute. Welcome Volunteering Australia and Volunteering Victoria. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you all. For the Hansard record, will you please state your full names and the capacity in which you all appear? We might start with you, Mr. Pearce.
Good morning, I'm Mark Pearce. I am the CEO of Volunteering Australia.
And now Ms. Garner.
And I'm Gillian Garner, and I'm the Policy Officer at Volunteering Victoria. I'm here on behalf of our CEO, Jeff Sharp, who wasn't able to be here. So
Thank you very much. Now, do you both have an opening statement?
yes.
I do.
Okay, we'll start again with you, Mr. Pearce.
Thank you. As previously stated, I'm Mark Pearce. I'm the CEO of Volunteering Australia. I appreciate the opportunity to appear before the committee and welcome the committee's interest in understanding the specific challenges facing volunteers and the organisations that they volunteer with. Volunteering Australia is a national peak body for volunteering. We work with the state and territory volunteering peak bodies to advocate for and support and advance volunteering in this country. On that note, I'd like to acknowledge Gillian, my Victorian colleague in the room. Volunteering Australia's mission is to ensure that volunteering is not only recognised but effectively supported and considered in all government policy as a critical part of this nation's fabric and capability. We represent the interests of more than 9.5 million volunteers who participate formally, informally or both in Australia and the tens of thousands of organisations they volunteer with. Insurance is of particular concern to more than 5 million Australians who volunteer formally through and with organisations. Volunteers comprise a large and important workforce, but they are different from paid workers in how they're treated in legislation and their relationship with the organisation that they work with. As a result, the insurance products that organisations need are different because they have volunteers who also differ. I'd like to acknowledge the expert advice we've received from our partners in preparing our submission, specifically from Justice Connect on legal issues and from Aon on insurance products. Questions on those aspects of our submission may well need to be referred to them specifically. Volunteering Australia's two main concerns on insurance are, first, that not all volunteers are appropriately covered by insurance, and second, that in some cases it is increasingly difficult for volunteer involving organisations to get insurance they need for the activities involving volunteers. Without action, the risk is that some types of volunteer involving organisations will have to cease or reduce operations, and the community they serve will miss out on the services and the opportunities that they offer. As we highlight in our submission, volunteers are generally not covered by workers' compensation, with different exceptions in each jurisdiction. In addition, it's not mandatory to hold personal accident insurance for volunteers, and research shows that 1 in 4 organisations don't hold this type of insurance. In relation to our second concern, organisations face challenges with information asymmetry and the availability, affordability and coverage of insurance products. They can figure out what insurance they need, find a broker or a company that offers it, and then decipher complex and differing product information with little idea how prices are calculated. They may still find that insurers are not willing to offer insurance for the activities that they need or only at a cost that they can't afford. It's particularly complex. Volunteers do a wide range of things, from chairing boards to coaching sport, and they participate in sectors as varied as aged care, environmental protection and the arts. Volunteer involving organisations include a large number of small, entirely volunteer-run charities, as well as government entities, larger not-for-profits and commercial organisations who also have employees. So volunteering isn't just one thing, any more than paid work is, yet all volunteers should reasonably expect to be safe and protected from physical and psychological harm when they volunteer. Risk must always be managed, and insurance is one tool which helps with that. The question is whether the risk burden is appropriately shared between volunteers, volunteer involving organisations, insurance providers, governments and broader society. We recommend the Australian government take a leadership role and encourage national consistency, sharing of what works and proper consultation on all insurance issues by convening meetings involving all key stakeholders Our submission also sets out other possible actions to better enable insurance to support the operation of volunteer involving organisations, improve the safety and well-being of volunteers, and to ensure the important services they provide remain available within our community.
Thank you very much, Mr. Pearce. And we'll go to you, Ms. Garner, now for a Victorian perspective, noting that Volunteering Australia has observed that Victoria is the only jurisdiction to have its own comprehensive state-funded insurance scheme, so that makes your evidence particularly important. And there is some evidence that Tasmania has recently considered establishing such a similar scheme as well. So with that context, if you could provide us with your opening statement. Thank you, Ms. Garner.
Yeah, and thank you to Marcus. He's provided a good overview, and I think that is the point, is that we were part of that submission. We work very closely with Volunteering Australia and all the other national state peak bodies. And so, in a way, what we wanted to add was more hearing the voices from members, but also just more broadly our sector, because we look after everyone in Victoria in terms of volunteering, and just find out where the gaps are in that architecture. And trying to get those voices through. I think part of the issue is a lot of the information we get is anecdotal. It's not necessarily strong data on actual costs of claims or how many claims are coming through. So there is a limit in terms of the information that we have, but we have been hearing this for a long time, which is why we put in our own submission, because we've worked very closely with Justice Connect and in this space for many years. And I think what we're mostly seeking is government recognising insurance as an essential enabling cost of volunteering. So in the same way that workers' compensation is recognised as essential for paid staff, volunteers also deserve the same protection from injury, harm and loss. But there's no requirement for those organisations to have that insurance. So it's a structural inequity that people who are undertaking socially vulnerable work can be exposed to harm without any assured pathway to protection. And an example would be one of the senators working at maybe a little local food place. And this is not the big ones. Your food banks and your Red Crosses are all fine. They are covered. They're well resourced. But there are lots of little community ones that operate in a little area. And as somebody climbs up the ladder, falls off the ladder, whether that volunteer is covered or not is up to the organisation, and often they are not. So it's particularly the very small ones, particularly the ones that are completely volunteer run. And you have a volunteer-led board that's trying to manage these kind of issues. So I think having gone through some of the transcripts, we were talking about hotspots, I think. And we would think that volunteering is a hotspot where there's just a gap. So I think also for the very small ones, it's just a very complicated exercise. We know it's complicated for big organisations, never mind these very small ones. And we're talking very small, very local, entirely volunteer run. A lot of them are not even really aware that their volunteers are not covered. A lot of them have to have public liability, particularly if they're in an event space. And I think they think that maybe that public liability covers their volunteers, which it doesn't always, or mostly doesn't. So there is an education piece which, and Mark would know this, that we try and fill the state peak bodies and Justice Connect, trying to educate these organisations to get them up to speed, to understand what those risks are. They don't always know, and because there's no requirement, they will just keep operating. They are in the space, they're doing it. There are thousands of these little organisations. So we have done a little bit of exploring. We've obviously explored a little bit with our government, state government, but haven't got terribly far with that. We've also explored with the VMIA, which is absolutely there and great, and we are very fortunate in Victoria to have that, but it is very limited because it is only government-funded organisations. So it's neighbourhood houses that receive funding. We are funded through VMIA. We have explored whether our members, if they are members of us, and so they're in our space, and we are providing them with information, could also perhaps fall under our cover. We haven't necessarily got too far with that, but that, you know, might be something. And maybe it is a, I guess it's an eligibility level. So if we could have kind of some standard where you could have organisations that are in their state peak bodies, like Landcare does. I think that was in our submission and then with the VA submission, where you're a member of Landcare, and so all those organisations then also can piggyback on the insurance. But the market is not reliably providing suitable insurance for socially valuable community activity, and that's the tricky part. And we have also spoken a lot to Aon. They do provide really good products in our sector, and some of our organisations are really happy working with them. But they just say it's not their problem to solve. It's not, you know, and if it's affordability or accessibility, then it needs some other catalyst or lever to just sort of get it going. And we've got a few ideas as to, well, there are already examples of it. So maybe it's how one rolls that out in a broader way. So I think that's about as much as I need to say.
Thank you very much, Ms Garner. I'll go straight to Senator Scarf.
Thank you, Chair. Just, Ms Garner, first in relation to this Victorian scheme, and it's the Victorian Managed Insurance Authority scheme, yes?
Yep.
But it only applies to community service organisations that actually receive government funding from the Victorian government.
Yes.
Is that correct?
That's correct. And for as long as they receive it. So if it stops,
for as long as they receive
yes.
it. Yep. And what's the definition of community service in that context? Is it quite broad?
I think it's quite broad from what I know. I think from what I know, they have to be registered in some capacity. I think that they probably have to be registered with the ACNC. I'm not entirely sure, but I think a lot of government funding, that is a requirement.
Right.
So remember, there are a whole bunch that are not registered charities, but I think so. There's some requirements, and I think there would be some reporting arrangements.
Right. So say in a Queensland context, my experience is a lot of community organisations, grassroots community organisations that undertake a lot of work, including supporting multicultural communities, wouldn't be registered charities, but they're incorporated associations, and they may receive grants from the government from time to time. But there are interruptions to those grants, so they might be successful in a grant for a particular event one year, but then the next year they wouldn't receive a grant. So,
Bit of a yo-yo experience.
Exactly. So applying looking through the lens of the Victorian Managed Insurance Authority, those sorts of organisations may be covered by the scheme for a period of time, but then would cease to be covered by the scheme. So as the Chair says, it would be a yo-yo-like situation. Is that correct?
Yes.
Okay. All right. I understand. And I must say I wasn't aware of this, and I might look further into this, but can either of the witnesses give an update with respect to the status of the Tasmanian re-establishing a Tasmanian insurance office? Do we know where that's up to?
Mark, I don't have an update. Do you have an update on that?
I don't have an update either, I'm sorry.
All right.
My sense is they're pushing hard for it and they're exploring it, but I don't know how close it is to.
You don't know if it's been established yet. So, I mean, this is, I've been thinking about this during the course of the inquiry, that Queensland, for example, had a state government insurance office and then it was privatised. So there is no government-owned insurance agency that provides, sort of has a mandate to try and go out and make sure Queenslanders have appropriate levels of insurance and have the ability to insure. But it's interesting from my perspective, the Tasmanian government's come to the view that maybe that gap needs to be filled. So we might ask our Secretariat Chair to get some further information in relation to that.
Maybe Volunteering Tasmania can give us the perspective,
We can
and we
too.
can also seek some information from the government itself.
Because it'd be interesting to know, obviously they've gone through a process in Tasmania of working out there's been market failure to take that drastic step, which is quite a substantive step. There is, I was interested in the case studies that are provided in the Volunteering Australia submission. I actually went to the Scouts AGM in Queensland last week, and there are, so I'd like to place on the record my appreciation to Scouts Queensland for all the work they're doing, and they've got 8,600 youth members, and they're dealing with all the issues under the redress scheme, those historical issues, and they're doing that in an extremely responsible fashion. But one of the statistics there that struck me was during the course of the last year, their organisation has been supported by 1 million hours of volunteers. And from an economic point of view, there has been work done with respect to the value of each of those hours. So are you, either of the witnesses, aware of that work and what the value of volunteering is in Australia and how important it is that we protect it and nurture it? That's the easiest question you're going to get.
It's immense, And Mark,
Mr. Pearce will go first.
Mr. Pearce.
Sure, thank you. The valuation of volunteering is really problematic because it depends upon how you ascribe the value to certain, I suppose, contributions. And so we don't tend to look at the dollar value per se. I mean, you could look at anything, it depends upon the reports that you look at, anything from sort of around $50 billion annually up to around about $300 billion annually. And those figures are supportable in various circumstances and the consideration of contribution. Perhaps more importantly, we look at the value of volunteering in terms of the contribution it makes to individuals and to community, supporting community, things like inclusion and diversity. And obviously, you look at sport, for example, over 3 million Australians volunteer their time into sport. Sport at grassroots level wouldn't take place if it wasn't for volunteers. And by extension, we wouldn't have elite sport, which is, I mean, obviously in the lens at present with the Commonwealth Games and the recent FIFA World Cup. The other piece around this is the actualisation of individuals. Their ability to volunteer, to be engaged in community is critically important. So we tend to look, I suppose, predominantly through the lens of those more intangible contributions and benefits that come from volunteering. The other piece that's worthy of note, and the ACNC makes specific mention of this within their report, is that if you look at the charity sector, for example, the charity sector employs around about 10% of Australia's paid workforce. It's around about 1.4 million Australians are employed by charities. But to a large extent, those jobs are only available, that economic incentive to work for charities is only available because they're supported by over 3 million volunteers. If the volunteers weren't there, 10% of Australia's workforce would be at risk. So, yes, there are lots of numbers out there to talk about the economic value, about the hours that are contributed by volunteers, and they are very, very significant. But I suppose the more important piece is that part which is far more intangible but essentially critical to the well-being and the fabric of community. And Gillian, you may want to make some comments with respect to Victoria.
Ms. Garner?
With respect to what, Mark? The value?
To Victoria.
Oh, yeah. So we put a value on, when we did our State of Volunteering report in 2020, we put a value on it and it came to 58 billion. 58 billion? Yes. I think it is. No, yeah, billion.
Yeah, and I understand, I should say, Ms. Gunnar, I understand the point Mr. Pearce is making, that the dollar value is one thing. The contribution it makes to quality of life, to especially young people having the opportunity to fulfil their potential and participate in all the experiences that make them who they are. It's impossible to put a value on that. But at the same time, in terms of motivating governments to take action, They look at things through different lenses. In the Victorian context, you said that the value of volunteering was assessed at $58 billion.
Yeah, and our problem, when we did our 2025 state of volunteering, we didn't put the value in because we didn't feel we got really far. Because, in fact, when you give a figure that's so huge, I'm not sure they take you too seriously. I think they think that is just crazy. But there was they got to that figure in some way. So,
Yeah, okay.
So there are various ways of doing it.
Yeah.
Yes.
In terms of case study 2, into the Scouts, the ACT, one of the things that struck me was they went through so much work in terms of risk mitigation, in terms of doing all the things they possibly could do to demonstrate that they'd done the things needed to mitigate risk, but they still only achieved a 17% reduction in premiums, which to some extent underlines the systemic nature of the issue. Is that a fair comment, Ms. Garner?
I would say a lot of the information that we've got back didn't really touch on that. So I don't have anything that has a figure where it says.
Okay. Mr. Pearce, do you have any comment on that?
Look, I would agree wholeheartedly. It's not an isolated incident or organisational specific reflection. Certainly, we've seen insurance costs and the availability of insurance costs have gone up, availability has reduced, and whilst there have been some circumstances such as the one you've just mentioned, where we've seen a material drop in the cost of insurance relative to the quote provided, it's important to understand that in the context of from various time periods, such that insurance costs have increased really dramatically. Seeing a cost reduction is still a significant cost increase on perhaps a previous year's quote. The ability of organisations to be able to meet those insurance costs, noting, of course, that volunteer involving organisations exist to meet community need where there is no other option, oftentimes means that organisations either need to choose to be uninsured and have volunteers uninsured, or they just stop providing those services which are essential to community.
Yeah, and I can give you an example of one of those services that Scouts Queensland's been providing for decades, and that is they give an opportunity for disabled young people to go on a camp supported by older Scouts and members of Scouts, and give them the benefit of that experience. And you wonder the cost of to the community of people being deprived of that opportunity because of insurance costs is hard to put money on. Is that a fair comment, Mr. Pearce?
It's an entirely fair comment, and I suppose it speaks very specifically to the comment that I made around the fact that volunteer involving organisations meet the needs of community, and those needs are many and varied. They're everything from physical response to emotional, psychological, pathways to employment, the ability to create networks, as well as the broader self-actualisation, health needs and the like. And without those services within community, again noting, and I stress this point, again noting that volunteer involving organisations exist to meet community need where there is no other solution, that has a profound impact on the wellness and the well-being of community.
Okay, I've no further questions.
Thank you. Can I just ask, from my observation of many volunteer groups, some of the volunteers that I've observed are people who are struggling to get employment. They're looking for somewhere to belong. Mm-hmm. They might have a job service provider who encourages them to undertake volunteer work to develop skills. And that places a very particular kind of responsibility on those who are leading in those community entities in their volunteering role. I'm just interested in how that is managed, and in terms of a risk assessment, what Volunteering Victoria and what Volunteering Australia have to say about that, And are the insurers interested in any of that level of detail? Mr. Pearce?
I might actually ask Gillian to answer in the first question, given the fact that Volunteering Victoria provides services and engages directly with volunteer involving organisations with respect to obviously the appropriateness of services and a whole lot of resources. I can speak more broadly. So
Okay.
Gillian, perhaps you
Ms.
might
Garner
want to lead
then.
off.
Thanks.
And in fact, there is an employment inquiry underway where they're looking at the mutual obligation arrangements and restructuring them. And volunteering is an option if you're older or in certain circumstances. So in Victoria, the way it works is that we have a number of, we call them volunteer support services. Sometimes it's through a local council. It just depends on the organisation. But we have a number that we work very closely with. And they would have a lot of people who just walk in and say, I've got to do 30 hours of volunteering for my mutual obligation. Can you help me? And they will sit with that person and they will help them. They are not funded to do that, which is what job services agents are. So they will place people, but in the volunteering space, there is not the funding, which is one of the things we're putting into the submission. In terms of the insurance, I'm not entirely sure. I think that it just is covered under their general insurance, but most of those volunteer resource centres, volunteer support services, and the councils will have the required insurances. They will have personal injury and they'll have public liability.
Okay. And we're talking perhaps in the urban setting that such larger entities exist. As we start to move into regional Australia, and yesterday we heard a lot about Western Australian regional businesses, the shape of the community differs and the volunteering opportunities and the responses to the committee are going to be to the community are going to be very, very unique. And I think perhaps in regional parts of Victoria, you might be able to help us out with this. You write in your submission that there's a rise in informal and spontaneous volunteering, and from my experience, that is very common in more regional settings. You have a recommendation there about setting up a limited insurance fund or mechanism for volunteers who are actually unprotected. Is that essential, given that some of these volunteer groups might not have a board that is doing the kind of board level work? And I'll come back to the problems with that. So could you just speak into the fact that volunteering is just going on, risk is happening, and there's no structures around it?
Yep, absolutely. And I think that's what's sort of changed, and I think Mark will agree in terms of, so from our state of volunteering from last year, that is where the significant changes. People want less of the formal kind of volunteering, so Red Cross or your aged care centres, and it's more, they want to just do it on the fly. I think young people have always wanted to do that, but more and more people, they don't want to be locked into a schedule, or they want more flexibility. There would usually be some kind of structure around how that's being organised, but that can vary, as you say. And I think that in Victoria, we're fairly lucky. We do have quite a few regional support centres that we work very closely with. Not all the states have that infrastructure.
We've got two Queenslanders here, and it's a big state.
There's a bit in Queensland, but all the states are just very different in terms of we tend to work quite closely and try and get them to do it at a place-based level because we feel that is optimal, right? They're on the ground, they're here. So in the mutual obligation situation, you'll have somebody wandering in. They would normally be fairly vulnerable, right? Because if they could go online and find a role, they would be doing it, and there are a lot of resources and platforms where you can go on and search for roles. These are people who actually just need someone to talk it through with them. If you're over the age of 55, which is most of that volunteering, then actually you want to use your skills, but you're not necessarily looking for a major job, are you, at that stage? You're trying to find something that will fill the time that meets your mutual obligation requirement. If it gets you a paid role, wonderful. But they would explore those needs with them. Your job services agents are less able to do that, obviously, in the volunteering space. But our volunteer resource centres do it a lot still. But it's tricky, I think.
Yes.
And they just don't have much funding, and they don't have a huge amount of resources. And the further out you go, the more you will have that.
Which goes to the development of training, risk assessment tools, etc., which is another one of the recommendations that you have here. And what we're talking about is an entire sector which needs its own sort of brief of what could be possible, and that's what you're doing here.
Yes.
In terms of the insurance part of the training, I note that you talk about affordability as an issue, you talk about navigating insurance as an issue, and you talk about the umbrella group cover of local government authorities. 3 critical issues. Can I take you to the second one? Navigating insurance.
Yes.
From a volunteer, spontaneous volunteering point of view, like that seems profoundly challenging to me.
They wouldn't even really be in their space. I'm not sure they would even think about it. They would just be doing it, I think. If it's informal and a little group pops up, at some point you would hope they do think of the insurance aspects, but it probably won't be top of mind, because they'll just be trying to organise their people and getting, rosters sorted and getting your numbers and keeping them there. And so obviously we and Mark and Volunteering Australia, we do a huge amount in terms of trying to support those organisations to do that better. And the national standards that we now have, it is about doing as best practice. But I think in the spontaneous and informal volunteering space, that is tricky, because there'll be organisations that do not know we exist. We know that, because we'll get them coming to us every now and then saying, "Wow, we didn't know there were all these amazing resources." Just on the insurance companies, so Aon, they do have a fair number of tools, and we do work quite closely with them in this space. So they're the one insurer that really has tried to do something in this space. But there are just not very many of them that want to operate, because it is a lot of hand-holding that has to happen, I think.
Okay. Mr. Pearce, can you give us a national perspective?
I can, and thank you. I think Gillian's provided a really fantastic foundation for that. One of the things that we make mention of within the submission, and I suppose it speaks really profoundly to the comments that Gillian made, is that where people involved together in the provision of services, or just in terms of volunteering more broadly outside of the formal realm, they may not actually see themselves as organisations. Oftentimes they are very, very mission-driven. They see an issue within community, they develop a solution, they get people together and they go and address that. As Gillian says, whether it be in Victoria or South Australia or ACT, around the country, that experience, there's a commonality to that, where people just get involved. People put up their hand, they get involved, they engage in activities which probably should be covered by insurance, but they may not actually see themselves as being part of an organisation, invariably unincorporated. And even if they do, they may not have the skills, the time, and the ability to be able to look through the myriad of information to see what's appropriate by way of insurance, let alone engage with appropriate actors to provide them with advice, whether that be the state and territory peak bodies or whether it be insurance brokers or insurance companies more broadly. It's an issue because we have seen a prevalence of formal volunteering, because communities are changing, because community expectations are changing. There are more and more people who are doing these things informally. They find a problem, they get involved, they develop a solution, and they just roll it out. And they're not covered by insurance. And that's fine until insurance is needed. And we see that across the country.
In your submission, I'm just sort of flicking through here to see if I can find a note that I made for myself. You put forward a proposition, yes, here it is, that for volunteer, it's page 60 in my book, Volunteering Australia is involving organisations that do not receive government funding. Volunteering Australia suggests that insurance continue to be an eligible spending category under the federal volunteer grants program. I'm interested in that recommendation, given that we're seeing an ever-increasing pricing for this insurance. Part of what the government wants to do is keep things safe, but if the money is being soaked up by an ever-increasing insurance premium, then the work that is the priority for investment for the community's well-being, is being hoovered up. Have you given any consideration to that challenge?
We have, and I suppose we're very aware of the fact that in the first instance, money that is made available for insurance doesn't go to the organisation, heads back out to insurance companies, and there is a mismatch there. Having said that, however, insurance is a critical part of the core operations. The ability to be able to deliver on mission and to community and support volunteers requires appropriate insurance cover. So we see that as a core part of mission delivery. And consequently, where grants are provided in order to assist in mission delivery, we think that this is appropriate. It's not ideal. We would far prefer to see that the money goes into the maintenance and the support of mission itself. But without insurance, we see that the ability for organisations to be able to deliver on mission is significantly constrained.
You also point to Umbrella Group and local government authorities as a suggested model, collective model, that could make cover more affordable and more easily accessed. I guess this is, instead of 500 little organisations having to establish a board, negotiate individually, find out that they can't afford the insurance, either disband or go ahead without the insurance. This is about, I'm starting up a group of volunteers. All I have to do is ring this number and we're covered. That's essentially the proposition that you're putting there, isn't it? Ms. Garner.
Yeah, I think so. From our one, yes, it was. Because I think what we were thinking is if they were a member of Volunteering Victoria and they were able to tap into all of our resources and guides and they're getting all of our training, then they could be covered under a scheme that we were part of.
Which would take a huge administrative burden away from
Absolutely
local community organisations.
And it would, and maybe you do create eligibility levels. So we would have an assessment of whether they should be members, and then we can push the fact that there should be best practice and they should be following national standards of how to do volunteering right. You get them in the tent, I guess, which would be good. But yeah, that would be, I think, for a lot of our members, if that was an option for them, they would absolutely jump at it because it's a big cost for them.
You make some very solid recommendations, and in your conclusion you sum up the situation, I think, very, very well. You're right, volunteers need and deserve to be protected from injury, harm and loss while volunteering in the same way that paid staff are protected in the course of their work. Yet the evidence from our members show that many volunteer-involving organisations are being asked to operate in an insurance environment that is costly, complex, uneven and too often not fit for purpose. That is quite a description of where things are with regard to insurance. You go on to say that the pressure is placed then not only on an organisational budget but on the sustainability of volunteering itself.
Yep.
If the committee were to make one major recommendation to stabilise insurance access for the volunteering sector across the country, which involves hundreds of thousands, dare I say, perhaps more than 1 million Australians, what would your core message to this recommendation that you would like this committee to make?
Do you want me to go first? Or do I?
Yes.
Okay. I think it's really getting government involved to leverage it and get it to happen, because I think the market's not going to do it on its own. We know that. So something else needs to happen that will encourage the industry, I guess, to come to the party and then have products. And I think the other would be getting information and data, because there just isn't that information on are there claims out there for volunteers and how much are they and what's the extent of that.
Okay, so data poverty, solve that problem, make policy to address the issue, create a product where a product does not exist.
Yep.
Government involvement to do so.
Yep.
Okay. Mr. Pearce.
Yes, I agree 100%. Federal leadership and coordination is critical. All of the other remedies which we look towards a solution for are predicated upon that. Better access to insurance, improved affordability, transparency, fit for purpose product, especially for smaller organisations. All of those things are a function to a large extent of federal leadership and coordination, bringing together key stakeholders, improving the efficacy of data, the data collection, the analysis of data and the use of data in both micro as well as macro environments. With that in mind, we're able to then look towards better access to improved affordability, the greater transparency and fit for purpose products. So yes, we would absolutely look to the federal government for leadership and coordination around some of those core activities.
Okay, well, thank you very much. Can I thank you, Mr. Pearce and Ms. Garner, for appearing today. If there are any questions on notice, you'll be provided those by the Secretariat, and if you could provide the responses by the 18th of August, the committee would be most grateful. The committee will suspend now and return at 10:45. Recommence. I now welcome the Bright and District Chamber of Commerce and Ovens Valley Insurance Brokers. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you all. For the Hansard record, will you please state your full names and the capacity in which you appear today? We might start with you, Mr. Prince.
Steve Prince, Director of Ovens Valley Insurance Brokers.
My name is Bruce Hall. Good morning. I'm the Secretary for the Brighton District Chamber of Commerce.
Good morning. Marcus Warner, and I'm the President of the Brighton District Chamber of Commerce.
Thank you very much. I will invite you now to make a short opening statement. Who's seeking to make a statement?
Myself.
Mr. Warner,
Yeah.
Okay. And of course then the committee will follow with questions. Over to you, Mr. Warner.
Thank you. Chair, members of the committee, thank you for the opportunity to appear before you today. As I said, my name is Marcus Warner. I'm the President of the Brighton District Chamber of Commerce. I'm also the CEO of a small agri-business in the Ovens Valley and Deputy Controller of the Bright SES as a volunteer, having lived in the region for 12 years. As we've already explained, Bruce Hall is with me as my secretary, and Steve Prince, who has his business has been operating in the Ovens Valley for over 45 years as the sole insurance broker. We're not a professional lobbyist group. We're a volunteer committee representing around about 100 small and micro businesses in the Ovens Valley. Towns such as Bright, Porpunka, Wandillagong, Harriettville and the surrounding communities. Our membership spans accommodation, primary industry, hospitality, retail, trades, agriculture, professional services, tourism and a large outdoor recreation industry. I suppose our message really is clear to the committee today is that insurance is now becoming no longer simply expensive in regional Australia. For some businesses it's become unavailable, commercially unviable and in some cases fundamentally disconnected from the actual risk of the individual businesses that they run themselves. In Bright, local businesses have experienced premium increases anywhere from 30 to 500% in the last 5 years. Typical motel premium recently increased from $3,780 in 2022 to $12,975 in 2026, with its excess increasing by over $5,000. A property owner leasing premises to a restaurant saw his premium increase from $2,700 to $10,400. These increases cannot be explained by ordinary inflation alone, and obviously the increase in construction costs may be a mitigating factor. Local property and land values in the Ovens Valley have increased, but land value is not a satisfactory explanation for some of the scale of these movements that we've seen as business owners. Insurance generally responds to the cost of rebuilding insured structures and replacing their contents rather than the value of the underlying land. The scale of the difference points towards structural underwriting factors, including catastrophe modelling, reinsurance costs, reduced insurer competition, limits on the amount of exposure insurance are prepared to hold within a particular postcode. These increases are not marginal adjustments. I think it's important to understand they are materially affecting the businesses that we run every single day. And these small businesses really are the lifeblood of our communities, and over 3 million people living in regional Victoria would be a testament to that. They're local employers, they're family members, they're volunteers, and we continue to try to invest in our businesses every single day. We've got a number of examples we can share with you, and we'll happily disclose more of those during questions, but a typical vineyard near Porpunka recently, despite maintaining a very, very pristine and cleared vegetation risk, cleared its fire breaks, has been unable to find an actual insurer willing to insure their property. These outcomes demonstrate that good risk management doesn't always necessarily mean that that's going to result in any access to insurance, let alone a reduce in their premium. So that's a consideration. You've also received an application and submission from the Alpine Shire Council, who won't be appearing today, but they've partnered with us in some of the correspondence. Its submission notes that businesses across the Shire are still unable to obtain insurance at any price and identifies reinsurance costs, catastrophe modelling and insurer accumulation risks as key drivers to the problem. What we're asking for a system is basically to allow a much more intelligent, locally and transparent and properly recognised mitigation in terms of our policies. I'll give you a couple of examples. The Bright and Porpunka postcode insurance scheme is actually quite a blunt instrument to be used. For example, the 3741 postcode, that covers approximately 724 square kilometres and includes Bright, Freeburg, Harriettville, Smoko, but also Mount Hotham. Within that single postcode, the landscape extends from Bright, situated in the Ovens Valley, approximately 300 metres above sea level, all the way to the top of Mount Hotham, which is 1,861 metres above sea level. The adjoining postcode, 3740, is even larger. That covers 980 square kilometres, including Paulpunka, Buckland and Mount Buffalo. It extends from a low valley with very large open agricultural land to properties that are then bounded around Paulpunka and the Buckland Valley with small communities with an active and prompt CFA station, all the way to the Horn, which is the highest point of Mount Buffalo at 1,700 metres. These two postcodes encompass materially very different elevations, vegetation types, slopes, road access, water availability, emergency response, building characteristics and obviously local fire behaviour. Yet businesses within each of these postcodes may still be assessed using a broad postcode level fire or flood likelihood in their settings. The result is that actual characteristics of the business, its claims history and its investigation into mitigation can basically become a secondary factor when being given a policy. So the Chamber really today is asking for 5 practical priorities that we'd like to focus on. The first is to establish a greater national consistency and proportionality in public liability insurance. A small community event or low-risk operator should not automatically be required to carry the same liability limit as a major event or high-risk operation. Secondly, to support insurance products that reflect how seasonal tourism, adventure businesses and actually operate. A business operating for several months, especially maybe during the snow season or during the summer months, such as whitewater rafting, should not have to purchase 12 months of insurance to operate for only 3 months. Thirdly, we require clear explanations of the major premium increases, exclusions and non-renewals. Why are some insurers now not choosing to insure us? We've been given no explanation for that by those corporations or from wider bodies such as yourselves. And what are some of those limits and why are we operating in such a dire situation in terms of our operating costs? Fourth, we require meaningful recognition of verified mitigation. Businesses that invest in fire-resistant construction, vegetation management, flood protection, great safety systems and emergency planning should be seen as a measurable improvement in access to premiums, and excesses in their policies should be reduced accordingly. And finally, we need to consider a targeted government-backed natural disaster reinsurance mechanism for non-cyclone risk areas. Both the Chamber and the Alpine Shire consider that this is a credible pathway to restoring competitive availability. So to conclude, insurance is essentially an economic infrastructure. Without it, business cannot secure finance, lease premises, participate in events, employ people or invest with confidence. We are not seeking artificially cheap insurance. We are seeking a functional market that is competitive, transparent, proportionate and responsive to the actual risk that we're exposed to. Without reform, more regional businesses will become underinsured, uninsured or actually forced to close, which we're seeing as of today. So I'd like to thank you for allowing me to present those facts to you, and we are welcome to the committee's questions.
Thank you very much, Mr Warner, and thank you, Mr Hoare and Mr Prince, for being here. I'm going to give the call to the Deputy, but I just want to ask a practical one. You've indicated 5 key recommendations there. That is a little at odds with the submission number 19 that you have put to us, where I note 8 recommendations. Have you fine-tuned your recommendations in further consultation?
That's right. For the practicality of the day and the time permitted, there's sort of the 5 key focus areas.
Okay, but you don't resolve from the 8 that you put in the original?
We'd still like to see some of those.
In addition, okay, just that's the practical question. I'll go now to the Deputy Chair, the Honourable Mr Bockholz.
Thank you, and thank you, gentlemen, for appearing in each of your own rights. The Chamber of Commerce play a very important role in our civic platforms, and I appreciate the volunteer hours that you give to participate. One of the dilemmas we have as this committee is trying to make recommendations that fall within our legislative purview. Through the Federation isn't all it's made up to be when it comes to applying common sense, and I want to tease out maybe that first recommendation point with the low risk, medium risk. How do you see that? How would we implement that from a federal perspective? Is it a directive to the insurance underwriters? How do you see us implementing that recommendation?
I think looking at that, I went on holidays last year to Cairns,
Yeah.
and the resort I was staying at, I spoke to the manager about your
Kent in Ireland?
Cairns up in Farnham.
Oh, Cairns.
Cairns, mate.
Cairns.
I thought he
It's in
said,
Queensland, brother.
I thought he said Kent.
We all love Cairns. Great place to holiday. The family. It was great. And I just spoke to him about there. Obviously, it's 6-7 story high building, and what's happened since the cyclone pool was introduced, and their premium went from $400,000 down to $100,000 overnight, just to help mitigate. So the government intervention there straight away, domino effect, so they can get more employees in. The cost of overnight stays comes lower, and then more people are visiting and spending more dollars within the region. So with government intervention there, helping the insurers, paying the cause, it just softens the blow on the premiums.
In the introduction, Mr. Prince, you're from the insurance sector?
Yeah, correct.
Do you have any recommendations other than the underwriting? We've been to and spoke with a number of insurers to assess how sophisticated their models are for assessing risk, and they're extremely granular. The amount of data that some of the firms have, and when they go to their underwriters to put their case as to what they perceive the risk is extremely sophisticated.
Yeah.
How do we change that or alter that?
It's a good question. You got local government, you got state government, you got federal government. When you build a new house, you have BAO rating. So it depends how close you are to the bush. You might have to spend another $100,000 to make sure your house is safer. The insurer would just look at the postcode and go, "Oh, you're still to the bush, close to the bush, so we're not going to write your property." So automatically, you're just getting declined on merit for your location geographically, which causes a lot of grief in our area.
Yep.
So I know that the insurers have all the data in the world, but I think obviously they've got to protect themselves with the reinsurers going overseas, and they might have limitations what they can actually achieve in certain areas. And 3 million Australians live near the bush.
Is it
very challenging?
Just 1 second. Is it fair for an insurance? What we're hearing more and more is that insurance companies are just extracting themselves from the market,
correct,
mitigating their risk, leaving the one who stays carrying the bag. Is there some government intervention that needs to be considered about making sure everyone's got a play in the market, to share the risk? Because that's been another thing the insurance guys have mentioned to us. We need to share the risk. We just can't be taking, we being the insurance company, we just can't be taking all of the risk in these high risk areas. If we can share that. Sorry, no, come back to you, Mr.
My apologies. So as an example, when we refer to a high risk area, so my own personal insurance for my property, my house, the situation occurred where I am in a flood risk zone.
Yep.
In an area that hasn't seen a flood since gold mining.
Yes.
And tailings, back in the 1800s. I have mitigation in my place with easements. I've carved those easements out and made sure that there is full drainage at the back of my property, because there is a risk of springs in the mountains and for that water to flow into a local creek and then out to the river. So that's all been in place. I've spent quite a bit of money on that. However, my insurer has said, no, you're just in a flood risk. So what we're trying to identify is that while the insurers appear to have all this information, especially when you deal with automated insurance quoting and claiming, quoting, doesn't take that into account. And unless I approach an individual broker and explain that situation and get that insurer broker to fight on my behalf, realistically, that's the only way forward. And I'm not sure that is a reasonable expectation of 5,000 residents going to an insurance broker and trying to explain their case by case basis.
Can I just? We're dealing with a data poverty in the public place.
Absolutely.
But at the same time, the committee has observed a richness of data being held by the insurers. And there's an enormous gap between those two things based on evidence we've received right across the country, whether it's in a regional or an urban setting. That knowledge gap is a very interesting place in which brokers seem to have some very particular knowledge that is unknown to anybody else. Right? And there's a desire to trust brokers, and yesterday we heard evidence in Western Australia that, you know, brokers are actually doing a good job working for their local communities to see what they can do. But can I put it to you that brokers are not any more transparent with their clients than the large companies? So what we have is data held, preserved and being used for business models which are either making huge profits or withdrawing, and it looks like it's one or the other. Yeah. And then we have all of the other Australians, spontaneous volunteers, people in caravan packs, as Senator Scarr has been saying, 90-year-olds who can't sell because they can't get insurance, to local businesses that we've been hearing about here operating now without public liability because they cannot be insured. There's a real problem here. Data blindness for the entire market, data wealth for those who are coordinating the information. How can that gap be traversed, or is it too late?
With that, I think the insurers have the data, not necessarily the broker.
Yeah.
When we go back, obviously we're working for our clients and trying to get the information to be able to present to them. So if we go back and ask questions, and obviously in my paperwork we show our clients where you're located on a map and where you are near a river and the likelihood of a flood could happen in 50 years or 25. And unfortunately, there's no consistent flood mapping around Australia. All insurers use different mapping models, and that's why the premiums are so different. You could be paying $5 for a flood over here with one insurer, or you could be paying $20,000 with a different insurer because their maps are so different.
And
I don't know where they get their mapping from, so I can't answer that question.
We can ask them this afternoon. We're speaking with Lloyd's of London.
Yeah,
so
absolutely.
Can you just give us some thoughts as what a line of questioning we should be asking those guys as the underwriters?
Yeah.
About, you know, centralising the risk. I mean, I find that astonishing that you've been supposedly living in a flood area and there hasn't been a flood there since the gold rush. I mean, that's ridiculous.
Maybe just some observations from my experience, both SES flood and then running a business, is that I think the disconnect in terms of, like, we collect enormous amounts of data. These things that we carry everywhere is just accumulating huge amounts of data. There's photographic evidence. There's huge amounts of big data available to insurers. The interim step between when I put in to Steve asking for a policy on a new farm or a new piece of land or a new piece of equipment is that it usually comes back with a no, and Steve says, I don't really know why they've said no, and yet
See what I can do.
The locals, you know, we see it right across Australia during all of our major natural disasters. It's people like myself and other volunteers you've heard from will jump in a truck or fill sandbags. We know where the creek is going to pop out. We know where the fire risk is potentially going to be. And we know our business is better than most people. And so when you say that you've made a huge concerted effort to really ensure your building in terms of everything you've done around flood mitigation or your risk, a lot of that is just lost in that collection. They've got a lot more personal data and your finances and whether you've done your tax returns, but the actual specifics and the mechanics of where your business is located, those 700 square kilometres and 900 square kilometre postcodes, they don't exist in, you know, metropolitan areas yet. We seem to be applied very quickly that's unfortunately the difference in, you know, nearly 2,000 metres in elevation will indicate that you're going to be at the same risk. You're not. And I'd love some way for this more transparent, personalised capacity. So the properties I maintain, immaculate, we have a whole bunch of mitigation in place, but if my neighbour's not doing the right thing, I'm tarnished with the same brush, and that's a challenge as well.
It has been a constant in the evidence that we've been taking around the country, where there seems to be a very low weighting on those businesses or communities or individuals who lean into mitigation. There doesn't seem to be any any reward for those efforts. I cited in Western Australia yesterday an example in Queensland where a community had been affected. The whole of town just went underwater with 2 floods, 2010 and then the mid-teens. As a result of that frustration, the council built a levee bank around the community. Since then, there's been another 2 or 3 floods. Not one house has been inundated, yet their insurance premiums have continued to increase. My point is, at what stage does mitigation work?
Yeah.
Stop telling us that mitigation is the answer if there's not going to be a financial reward for it, because they should have just kept that money, let the houses go under, make the claim. They can't have it both ways.
See, one of the things I find frustrating is I run a fleet of vehicles from very large tractors to vans, and getting motor insurance is really simple because it's based on your age, your driver experience, behaviour. Policies seem to be quite transparent with motor insurance when you come to insure your car. And the information we collect on those individuals, we don't really know what they're up to in terms of whether it's delinquent behaviour, whether they've got the genuine experience, etc. But my business, I've got hundreds of pages of spreadsheets on budgets and analysis and how to run that business and what risk it has, and we spend hours and hours and hours every week in terms of staff safety. We put in everything that's asked of us to be basically operating a small business in a very bureaucratic world. And I would say the information we have available is much more transparent and much more agile for those insurers to say, right, well, that's a well-run business. We can do it with things like car insurance, even if we don't actually assess a driver's ability maybe once in their lifetime when they pass the test. Yet businesses every day and every month are going through a huge amount of scrutiny to operate safely and effectively and profitably, which is the whole purpose. And yet none of that's taken into consideration. So maybe Steve can think of some questions to ask this afternoon, because I'd love to know why they say no, as opposed to just the increase. The increase is that we're getting all sorts of stories of building that's being repaired in Bright. The quote came through for a repair of $70,000, and when they actually broke the invoice down, $28,000 of that was the accommodation for the builders to travel from Melbourne. Now, why are we not using locals? Is there an issue there? Is it around the fact that they struggle to get the right insurances based on the quite centralised metropolitan policies and bureaucracy that's applied to regional Victorian businesses? So I can't answer that, but we'd love to see more transparency if we can get it.
In the just before I go to the next senator to ask some line of questioning, you mentioned fire in your submission. As a community and a Chamber of Commerce, have you done any analysis on the benefits of mitigation, the properties that have been affected, the ones that weren't affected because of proactive mitigation? Have you got any observations?
An example for you, if you like.
Please.
So it's actually on my document, the last property at the Hobby Farm, 2012 Hardy Plank Construction. Recently did that renewal. Now it's $17,000, so it's gone up another 45–50% on last year.
Sorry, which page is this one?
It's page 10 of my document. So the premium is now just under $15,000. It did come out at almost 20, but I went back to the insurer and negotiated sharper terms.
So that's the one which was, the premium was $12,807
Yeah, correct.
last year.
Yeah, and now it's above
most
17.
recent figures,
17.
17,000.
And this property, like, the client is very proactive, and he's even looking at changing his hardy plank to colorbond steel. The premium would reduce by $200. That's it.
Right.
And then for him, on his property, 2 roof-mounted water cannons on the house.
Yep.
He's got 2 water cannons again on 3 different sheds. He's got 35 pop-up sprinklers over 2 acres. Quite green grass, I believe, at his house. He's quite proud of that. Full sprinkled system covering that is operated by Starlink, so he's got full access. He's got eyes on his property. He's got 9 cameras. 110,000 litre water tank for irrigation firefighting. He's got a 100,000 litre water tank for drinking water. 3 20,000 litre water tanks around the property. He's got a 2 million pumping licence from the Ovens River, so he's got access all year round for his property. 2 fire reels around his house as well, and then he's got water carts, mobile water tankers to fight fires if they do come on the property. You go to insurers and a decline because it's too close to the bush or bushfire location.
So he did all that.
All that, and he still doesn't get rewarded from any insurer.
Gets a 32% increase year on year.
Yeah, 45. Yeah,
And he has no claims history.
no claims.
I think that's one of the messages I would send is, in all the examples where I've been visiting with our members, is the majority don't have any claims history. So right through with public liability, contents, the building, business interruption insurance, which is an area I'd like to cover, they have no claims history, yet we're still going through this.
Has there been any claims in that postcode? Because it seems to be postcode, what you mentioned, postcodes. Yeah, but what about the next door
So
neighbour?
a property
that
being
precinct?
burnt by a bushfire or a business interruption loss? Or
Well, that one was personal residence, wasn't it? The example?
residence? Yeah, correct.
Yeah. So at that residential precinct,
So in the 2019-2020 bushfires, I had one total loss, and it was from those postcodes about 45 k's away.
okay, so it's not close.
So that was just the one dwelling burning down, which was pretty close to the river.
Does he back onto a national park? Is there?
Yeah, he's near the bush. Yeah,
Okay.
and it backs onto a lake, and he's not allowed to build there again. Because
So
of
he
otherwise,
can't mitigate that
So
risk from
correct.
next door because it'll be protected under the state's Lands
Yeah,
Act.
but they won't let him rebuild there because it's backing onto the Murray-Goulburn water supply.
But the Alpine Shire itself is 92%. Is the actual Alpine Shire rateable land is about 8.5%.
Yep.
So 91% is parks, or mountainous parks, or those sorts of, or the what do you call it? The ski fields.
Yeah.
So there's actually only 8.5% or 8.2% that is actual usable land.
Mr.
or
Prince,
rateable land.
can you, for the benefit of Hansard, who do you find, with your years of experience, was there 45 years of experience in the insurance sector?
No,
Go look
I'm
that
only
up.
41, but
Yeah,
our
yeah,
business
yeah.
has been there, so
Oh, the business has been.
our business has been operating.
So which insurance companies do you have a preference to work with? Who are more favourable?
Not a preference as such. We will go to all the insurers on
Yep.
behalf of our client.
That was very well answered.
Well, make it very clear I'm here for our clients and not for the insurers.
Well,
So.
if you look at someone's book, there's normally a leaning towards.
Yeah, definitely.
Very rarely
But,
get
and I guess for us, like,
Don't expect him to compromise his relationships with.
short-term rentals is a great example. Like, you got underwriting agencies and you have insurers. Underwriting agencies, their security changes every 2, 3, 4 years. Events will happen. The security changes with someone at Lloyd's, or they've got to go shopping to get adequate cover again. And then the insurers like CG, Allianz provide cover. We go to 3 or 4 other insurers for short-term rentals in Bright. They just decline because of natural perils, which is bushfire and flood risks. So it becomes a very limited option, and we know that they'll support us, but it does come at a cost.
As I said before, the reason I ask is
Yeah.
when we speak to the insurance companies, they want more competition in the market. They
Definitely.
want to be sharing the risk. They want
Yeah.
competitors in there. It's not something that they want to be carrying the whole bucket on their own.
Definitely, and
And I don't know
Somebody
what.
once said you don't always get what you want.
That's right, but I don't know what legislative instrument we have to.
funny they want
force
more
that.
competition, but they own most of the competition anyway, the big 4.
Well, that's interesting, isn't it? Yeah.
Exactly right.
There's a couple of stables, isn't there?
Just market it different. They use different profiling and get
Thank you,
different rates
John.
for
Thank you. Allow
I
Mr.
have a
Senator Scarr.
So in terms of solutions, the possible extension of the reinsurance scheme up in northern Australia, which was introduced because insurance was just becoming unaffordable for many of our constituents in far north Queensland, for strata unit owners, for businesses, etc. And the injection of that reinsurance scheme has led to an increase in competition, as I understand it, but has also meant that premiums have come down.
Yeah.
So the question I'm reflecting is,
Well, as a result of that, I think Allianz had said that they wouldn't go above one of the parallels as a result of
26,
that. Now that they're in, yeah.
Correct.
Yeah, so they're all in there now.
so it's a similar issue in terms of Bright,
Yeah, absolutely. And
because of the bushfire risk, right,
Yeah.
which is another catastrophic environmental risk.
It couldn't be just us isolated, because there's 3 million people that live near bushland, and the Great Dividing Range goes all the way from Victoria to Queensland. There's so much bushland on the eastern border of Australia where people are living closer to the bush, and the more Australia grows, it will push out further into bush.
Yeah.
I think the urban bushfire risk now is also there, like in Perth.
Yeah. Well, we've had
The recent
we
fires
just
over
came
there,
from
so-
Perth, and the
Yeah.
recent bushfires in Perth were raised that you know, this isn't Northern Australia. This is Perth. But again,
It's on the fringe.
you simply it doesn't matter what our friend who's almost like a fire station. He's got more mitigation than a local fire station, and he still isn't getting the benefit of that. To me, suggests the market has failed. Is that a fair comment?
100%, I totally agree.
Okay. And this goes, reading the submissions as well, this goes to this is existential for some of these communities in terms of people being able to live there, people being able to operate small businesses in those local communities, and the local communities are dependent upon those small businesses for employment, for economic activity, for bringing in visitors at the rent, at the accommodation, providers of accommodation, etc. It's all part of on the upside, a virtuous circle, but it's a vicious cycle if you can't get insurance and people start leaving and saying it's just too hard. Is that a fair comment?
I think and we represent quite a few different types of industries within our chamber, and I think the important thing to understand is that those very well-run businesses that have been around for many, many years, we're not talking about a lot of startups here or people jumping in on the short-stay accommodation bandwagon with their investment property. We're talking about primary industries that have been in the valley for decades and generations are now struggling to find that the one thing that's going to probably stop them ceasing to exist in the next 5 years will be their insurance costs, not competition from overseas or a change in the industry with the advance of technology and AI. They are very, very good operators who have delivered year in, year out, paid their taxes, employed people, become part of that community, volunteer in various different sectors. And, you know, Pepper Farms that I run, my premiums have just been climbing. It used to be a single-digit part of my balance sheet. You look at insurances, and I'm in a relatively high-risk industry in terms of farming and agribusiness. We also run a tourism arm, and we are a food manufacturer, so we touch a lot of different bases. The one area that is really starting to really make me think about which one of those industries are we going to pull back from is the insurance costs. And I don't understand it, because I'd say we're a very well-run business, and we've really exacted the model, and we can present all of the data we've talked about, similar to that property, put everything in place, and yet we are still not treated fairly in that respect, I think, and that's the thing. We spend a lot of our time as volunteers in the chamber. Bruce walks many kilometres every week, just not dropping in on retail businesses and finding out how they're going, and the one thing that they're just appalled is they can't get insured, and I find that hard. We had numerous challenges since COVID and bushfires and flood, and then the cost of living crisis and the ability to find good staff because accommodation's so expensive. We've managed to trade our way through all of those things, and now when you get a flat no, businesses love to try to trade their way out of negotiate. We have no form of negotiation. I feel sorry for Steve when he visits us every 6 months. Like, I've tried, but I can't do anything for you. And I don't know what he's trying, how hard he's working. I'm sure he keeps saying he works for us as our clients. But to be given a flat no, that's heartbreaking for businesses that have been going for many years. And it makes it very hard for the age of business owners now, and you see the number of businesses for sale, new people wanting to come in and give a go, and that's the sort of the Australian dream, is have a crack at it. The one thing that we said, you could try to open that business, but the problem you won't get is insurance.
Can I just make reference to submissions that have already been made? You were talking earlier about 90-year-olds who are trying to sell their business. Now, that's from the Caravan Parks Association in Queensland, right?
Correct.
So that's who they were talking. Now, it's a matter of, so those are your higher capital, but still small business. So that is your tipping point for businesses across the rural and regional areas. And that'll be slowly but surely, that issue will make its way through your entire regional business structure. So, we've seen that. We've also seen from the Australia Lawyers Association, and also Morris Blackburn made a reference of what they're worried about underinsurance. or people operating without the right insurance. And we, to that extent, agree with them that if we can't right-size insurance, then no one is safe. You know, and this is the failing. It's not that we're not asking outright for cheap insurance, because cheap insurance doesn't give us the coverage that we need. What we're looking for is accuracy in the assessment of risk. They're taking into account for mitigating circumstances, especially those people who spend a lot of time doing formal risk management and business continuity planning. These are the things we are looking for.
But I note that, but the reality seems, especially looking at the figures of increases year on year, 25%, 38%, 49%, that the insurance companies, that the model's broken. The insurance companies aren't prepared to delve down and consider that on a side-by-side basis. They're just making general business decisions that are almost indicating, from their perspective, this is too hard, we just move on, right? So I'm not sure, in terms of us formulating recommendations, I'm just thinking this through. We can't force the insurance companies to sit down and take into account our friend's mitigation risks at his home and consider that. Maybe there's got to be an alternative model that provides a basis where that can be considered.
I think after the 2019-2020 bushfires, probably a good summary. I think a few of the insurers have had a bit of shrinkflation on their policy limits and what they can offer and what they'll actually write.
Yeah.
I'll have some underwriting agencies where I can get terms for a client, say $2 million building and $1 million for a business interruption.
Yeah.
But it might be limited to $250,000 bushfire cover.
Yeah.
So it's not worth the bit of paper written on.
Which isn't, and taking Mr. Hall's point, this is the issue of underinsurance. What's that give?
Correct. And some of the terminology and deep in the wording, if there's an evacuation, the bushfire has to be within 1K of your property. Some insurers used to offer it at 50 kilometres as a radius. So everything's just been wound back to cover off that they're going to be out of pocket for the very
So that means you're looking at trying to do something structural, like the extension of the reinsurance scheme to cover regions like Bright, to try and change the structure of the market. Yeah.
And then it flows on. Like, you have a large-scale event. Tourists aren't coming back to our town for months. Who's going to go to a burnt-out town, or the tourist attraction's gone? If there's a large fire, it happens down, I think a couple of years ago, down Lawnway and that area. Like, the people just didn't come. Grampians, 2 years ago.
Yeah. Okay. Well, can I I'm sure everyone agrees, can I thank you for being such great advocates for your local community? It's your community is really fortunate to have such strong advocates, and I think you've made an outstanding contribution to this inquiry. So thank you.
The thing I would add to your evidence today is that in the ideal world, you want everyone making a contribution, some type of contribution to insurance. Because that's the most equitable for all, is when everyone's making a contribution. When the insurance companies are then, or people are exiting the market because of the cost pressures, that just expedites the pressure on the remainders.
Absolutely, pushes it to someone else, and premiums have to.
So we're cognizant of that. We need to find, in the ideal world, where we can return to that environment. I don't suggest for a moment that the insurance companies are banking super profits.
No.
Otherwise, there would be more entrants coming into the market.
They've got to have a lot of reserve, and I think the last 4 or 5 years, every dollar they're putting in the domestic portfolio, they're paying out $1.04 in claims. So their investment income's actually paying their shareholders. So that domestic side is.
Can you just repeat that again for clarity?
Their domestic portfolios, it's just been a lot of pressure, and every dollar they write, $1.04, $1.05, is actually getting paid out in claims. So their investment income is actually paying shareholders, not actually the premiums that they're collecting.
So they need prolonged periods of time without an event to
but we're in Australia. There's always going to be events. We could have cyclones, could have bushfires, could have floods all at once.
It's a big country.
Absolutely.
It's a wonderful country. And we're not the first generation to confront the challenges of the need for insurance. And there have been a range of different models of moving to create insurance. And it wasn't always let the market rip. And there might be a few people in this room who are able to recall a pre-privatisation period of time. I mean, there are people across this country who hold shares only because some of the big insurers demutualised. Are we seeing at this moment the outworking of the failure of neoliberalism with a market that is so profit-oriented and so stretched internationally now by changes to climate that it is simply structurally unsustainable as it is? Mr. Warner.
Oh, it's a very
That's a big question.
philosophical question representing a Chamber of Commerce where small business is looking to do the same.
But you're an Australian who is trying to survive in a market, and you need a product that you are telling this committee that is now unavailable to you, right? We have seen the outworkings of demutualisation. We have seen the flourishing of private enterprise in terms of the insurance industry. We're hitting a bit of a precipice from what you're telling me in terms of the collapse of business in regional Victoria, in your particular area, because of a market failure for insurance. So it's not a little thing that you're here talking about.
No,
You've put local flavour on it, but we're talking about a structural challenge for the nation.
Well, I think...
Where do we go?
I think going back to the point both of my colleagues have made, I think we need a minimum bar that's set that is non-negotiable. You're not allowed to go below that floor. So when an insurer pulls out, they need to give a compelling reason why they refuse to offer a product. I mean,
So that's a policing. That's a
it's
recommendation to police
I don't know,
private
I'm just dropping
enterprise.
an analogy now, but if you're a doctor, you only treat a certain, condition and you refuse to treat others, but as a doctor you're meant to look at the holistic view for the patient in right. And it's interesting how some insurers have just, based on their maps and their actuaries and their modelling, just say no, and others do. And I think we need to be a minimum level of insurance, and I think there's a role for states and governments to play in making sure there's a minimum bar, and then within that space, please allow people to be competitive. I think as a business, if you start a small business, you have to register, you have to pay your taxes, you have to pay your GST, you have to look at your workers' compensation. You've got a number of minimum bars that you have to do as a cost of entry, and I think that's just the reality.
People are actually doing that now
and
without getting the insurance.
That's what we
getting
do.
things in
Whereas
place.
allowing to be complete cowboy territory and maybe profits going offshore or leaving us very exposed in a country that we know we require so heavily on insurance being part of the mix. Maybe there's a role for all of us to play in that. I think it's also important and incumbent, and it's not lost on me when we've had some pretty major things happen to where we are in our region with fires, floods. We've had the Port Punker incident. It's been very evident that just putting your hand out and hoping the government will bail us out, that is not how we operate in the regions.
And we all pay taxes,
We're
whether
resilient.
you're working and paying as you go, or whether you're running a business and paying appropriate taxes, we all benefit from that. And there's been some considerable discussion about the reinsurance pool. So $10 billion guaranteed in total. Between 2022 and April of 2026, there have now been $1 billion of claims, more than $1 billion paid out. And over that period of time, 20 declared cyclones. The insurance pool for these large multinationals will no doubt be impacted by the fires that are now operating in Europe, right? But the belief in competition in a marketplace only works when there are those who wish to be in that marketplace. Are we facing a point where the market is failed and we need to reconsider government-based insurance schemes, as were once the case, notably Suncorp in Queensland?
Well, every state had a government.
Can I just offer a perspective? I'm not sure that the market has failed, but it's not far away. My own personal experience in my business. So is there a question of there's an opportunity to move earlier than later? The challenge is that when...
To what though, Mr.
Oh.
You're obviously a bit of an expert in mitigation. You've undertaken those flood works in your own property. So your disposition is towards prevention, and I'm not surprised that you're saying we're seeing something coming, we need to do something about it. The thing that we are interested in this committee is what is the something? And what I've just proffered to you is a response to what looks like imminent market failure for large sectors of our economy.
Yeah, absolutely. And I think it's not just industrial sectors. We're now talking about geographic sectors is where I'm going with that. And so we're in a situation where if the last of the few who are willing to insure in our area, everything fails. Our visitors are no longer protected because we can't get public liability insurance. You know, the Chamber of Commerce runs 4 or 5 festivals. We support various committees. You know, if we are unable to get those volunteer and those insurance policies, those things stop. Community activities stop. So I think we're in a situation where that we look north to what's going on with the insurance pool in Queensland and are wondering if that's the right way to go forward.
So the insurance pool, as I've just described, $10 billion, you know, I haven't even given any thought to what the number might need to be to cover off the rest of the country.
But I don't think that comes free, right? It doesn't come with oh, you know, you've got an insurance pool. It needs to come with the community outreach and the education that's required. People need to be better at business continuity planning. They need to be better at planning, even self-insuring. You know, we're very lucky that we've got one of the people who contributed to the first outdoor Australian safety program that was put together, and he is a big advocate of self-insurance. But there are a lot of people, especially in the small and micro-sized business space, who don't have time to get into that level or to learn that. And I think we do need to make that easier for people, because you don't get a free pass with insurance. You should never get a free pass with insurance. It's a two-way street.
So the data poverty problem that I commenced with, you know, the gap in knowledge, Mr. Prince, you've indicated that brokers also operate with a degree of blindness as to the determinations of the potential market providers. You've indicated that of a range of market providers, there are 2 that are particularly responding to the needs in your community. Was that GHU?
CGU and Allianz, and that's just on the short-term rental space.
Okay.
So there are other providers, and we...
And what are the other providers that dominate your book?
We've got quite a spread, so our portfolios are made up of 25% domestic, a third SME, third agriculture, public liabilities. So being a broker, we have access to 120 insurers. The domestic and SME business, you've probably got 10 insurers who throw the hat in the ring. Then from there, you go to the underwriting agencies if those insurers can't participate, and see what terms you can get, but they'll be a bit restricted with coverage and terms and conditions.
So when you go to the underwriters, can you just take us through that process, Mr. Prince? You failed at your normal first doors that you knock on.
Yep.
What happens next?
Get all the information from the client that we'll need to get a submission together. Provide photos, any risk management that's been put in place, and sell it to the insurer as hard as we can to get adequate terms.
And what is your success rate once you provide that detail at that level? Because detail doesn't seem to matter with the other products.
Yeah.
Right? But you're indicating that detail may matter.
When I get, if a client comes in, it depends on their business. I'll understand if I need to go out and see them and really understand it more. If it's a bit more complex, and normally in the SME space, we have access to the systems that really ask a lot of underwriting questions to get the detail, so the insurer can provide it, a quote. But 3 or 4 straight off the bat will say, because you're in Bright, we can't offer terms. So automatically I just know straight away, there's no point even offering that to a client or going to that insurer and knowing.
So in the SME space around Bright, who provides insurance?
It depends on your business and occupation, so what you're doing, and possibly your makeup of your property. So if you're 1970 timber construction, you haven't had rewiring done to your property, most insurers will just say no because it's outdated. But then if it's a motel risk, they might only have access to 3 of those insurers. And then if you're a restaurant, you maybe have access to 6 insurers. But if you're an office risk, you're an accountant with $50,000 worth of contents, 3 of those insurers or 4 will still say no because you're in bright, even though you got very minimal risk of something going wrong.
Thank you for that. Yesterday we heard from the AHA about being able to insure part of the business, like the pub and entertainment centre, but not being able to insure the accommodation. Are you having a similar experience in your region?
Yeah, if I have a pub or a caravan park, I normally just refer it to a specialist to make sure they can get the best terms they can get, knowing our region is so expensive to insure a hotel or a pub. And I think Michelle Weston alluded to it, like brokers, if something is just too hard or we know what the market's up to, we're unable to assist clients. So it makes us...
And is that increasingly common, Mr. Prince?
It depends on what the product is and where it is. So I used to look after 12 caravan parks, now I look after 1.
And what's happened to the other 11? Do they have no insurance?
Due to risk, 3 of them I just couldn't get insurance for, but we did offer terms. One was like $5,000 for 8 cabins, and the premium this year is 15. And I told her to go direct to a specialist. She still wants to use me as a broker, so I've had to do that and then put a small fee on that to help her with the process, even though she could go direct, but she still wants to use a local broker to be an advocate.
So my question is, did you say 12 caravan parks?
12, yeah.
12, yeah, okay. And 2?
Just 1. And a few got sold to bigger corporations, so we did lose them just by acquisition.
Okay, so they haven't just disappeared, they haven't just shut
They haven't
up shop and
disappeared,
walked away.
but because they've got the monopoly, they'll be able to get covered for that park because they've got their risk covered around Australia.
Well, and we do know what monopoly does to the prices of things in regions as well.
Correct.
So if I can just take you to recommendation number 6 in your original submission to this, submission number 19, which is where I'm trying to go with, business-headed people who are always, great business people solve problems. They solve problems day in, day out. That is what you get paid to do, and if you've got the entrepreneurial spirit to do it, you can make profit, pay your wages very properly and do a good job. You've put in this submission, support alternative models where commercial market has failed. You're already there. You're already there. You talk about support evaluation and pilots for mutual risk pools, structured self-insurance for larger operators or groups, and other alternative models where traditional cover is unavailable. What percentage of the businesses that you represent are at that point? And can you cast forward to say what you think will happen in the next 12 to 18 months?
So I can't say across the entire, I didn't poll, I didn't go to all of our membership base. I spoke to specific businesses one-on-one.
Yep.
So I can't answer the first part of that question of the percentage. But certainly, if you take a look at the accommodation, so the motels that are in this situation, they are a perfect example where their costs through no claim or no fault situations is, some of them have gone, upwards of 200 and 300%. So they're in a situation where that tells me over 5 or 6 years since COVID that there's a problem, right? Because we now know that inflation is kind of like 19%. We know that the cost of building materials is kind of 26, 28, 29%, those sorts of spaces. So how is it that you're in that situation where for a motel, all of a sudden that cost is absolutely ballooned, and excess as well, right? So excesses have increased from 1,000 all the way through to 5,000, for including glass, a broken window. So that's an example of is there power in all of those motels coming together?
And that's the
Mr.
point,
Warner.
to add some context. The reason why the bigger groups are buying up these caravan parks and using that monopoly is a lot of the business owners are tired and they see this next 2 to 3 years as being almost untenable, and it's a shame that their easy option out right now, having been super successful for probably the last, you only have to visit Brighton, there's people who've been coming for 30 years to the same caravan park, to the same cabin. The easy option now is to sell out to one of the big mobs and multinationals, because they're giving a nice big fat check. But up until that point, they've withheld that competition. They said, no, we're fiercely independent, family run. That's what makes the fabric of regional Australia such an amazing place to visit. And Bright is an incredible tourist town. But the fact that they no longer can operate financially viable, the easy option is to sell out. And that's what's going to happen, is you're going to get this consolidation. And as your great fear and our fear is that once that happens, we lose that fabric of society and what small businesses mean. So they've held on, but they can't hold on any longer. So to give some context around the 100 businesses that we sort of represent, if we were to give them a quick straw poll today, if you had the option to sell your business in the next 18 months, would you? Before COVID, that would be no, absolutely not. This is the best job in the world. Most would take that option now. And it isn't all just around the insurance costs, but we repeat regularly to the business I run, and I think, Senator Scarr, if you want to ask Lloyd's a question this afternoon, it would be to any big multinational, big national insurer, is what's your purpose? You know, I grow food for a living so that Australians eat nice, healthy, locally grown produce. That's what motivates my team every day. It's really simple. It comes off the tongue, so simple. You go out in the paddock, we grow food. What is the purpose of an insurance company? The word insurance very much tells you that you are putting arms around people and looking after them, and it doesn't feel like that right now, and that'd probably be the question I want to know, is going back to it. Yes, we realise they have to deliver shareholder value, but at what cost?
Thank you very much. Thanks for your evidence today. We certainly appreciate the particular insights. I know that you represent one community, but can I say that it echoes much of the evidence we've received from regional Australia right across the country. If there is any further information you wish to provide us, we'd be very happy to receive that. Any questions on notice or additional information, please provide by Tuesday the 18th of August if possible, and the Secretariat will be in contact with you regarding that. Thanks again for being here.
Thank you so much. Thank you. Always appreciate it.
You're welcome. And I invite Financial Counselling Victoria to come forward to the table. Joining us. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you all. For the Hansard record, will you please state your full names and the capacities in which you appear today?
My name is Zil Hervenga-Warkope and I'm the CEO of Financial Counselling Victoria.
My name is Kelly Davis. I'm the Disaster Recovery Lead at Financial Counselling Victoria.
Thank you very much. I now invite you to make a short opening statement, and the committee will follow with questions. Ms Davis.
Chair and committee members, thank you for the opportunity of us appearing today. Financial Counselling Victoria is the peak body for financial counsellors in Victoria. Our members provide free, independent and confidential assistance to people experiencing financial hardship, including small business owners and sole traders. Every day, financial counsellors see the real-world consequences when insurance fails to provide the protection that businesses reasonably expect. Insurance should be a cornerstone of business resilience. It should give business owners the capacity and confidence to invest, employ staff, and recover from unexpected events. Instead, our members are increasingly seeing insurance become a source of financial hardship. Small businesses are facing rapidly increasing premiums, reduced availability of cover, higher excesses, and products that often do not reflect the realities of modern business operations. In some regional communities, businesses simply cannot obtain affordable insurance, leaving them exposed to catastrophic financial loss or forcing them to cease trading altogether. Even where insurance is available, many business owners struggle to obtain appropriate cover. They rely heavily on insurance brokers to navigate increasingly complex products. However, financial counsellors regularly see situations where brokers do not fully understand the operations, risks, and insurance needs of a small business. This can result in businesses being underinsured, overinsured, or insured under policies that fail to respond as expected when a claim is made. Unlike large corporations, most small business owners do not have the financial capacity to obtain specialist legal, insurance, or risk management advice, nor the resources to challenge insurers when disputes arise. They should not be expected to navigate a highly complex insurance market without appropriate protections. In our view, small business should be afforded protections equivalent to those provided to consumers, recognising their limited bargaining power and the significant imbalance that exists between small businesses and insurers. We are also increasingly concerned about cyber risk. Financial counsellors report that many small business owners are unaware of their exposure to cyber risk. For those seeking insurance, cyber policies are often expensive, highly complex, and contain exclusions and limitations that render them not fit for purpose. As a result, business owners may believe that they are adequately protected, only to discover after a cyber incident that significant aspects of their loss are in fact not covered. Financial counsellors also regularly assist businesses experience prolonged claim delays, disputes over policy interpretation, and significant shortfalls caused by underinsurance. These delays place enormous pressure on cash flow, increased debt, and can ultimately result in otherwise viable businesses closing permanently. These are not isolated cases. They are recurring issues that our members see across Victoria, particularly following natural disasters and in regional communities. Our message to the committee is simple. A resilient small business sector depends on a resilient insurance sector. Small businesses need insurance that is affordable, accessible, transparent, and fit for purpose. They need protections equivalent to those afforded to consumers. And they need greater accountability across the insurance sector, including insurers, brokers, and regulators, to ensure insurance delivers on the promise it makes when businesses need it most. Thank you.
Thank you very, very much. Can I go straight to the cyber insurance issue? You talk about the complexity of cyber insurance. You make a couple of recommendations about communication with small business. That's one part of it. But the main thing I'm interested in is the cyber insurance products that are currently available. You say that they don't align with the actual risks faced by small business. Could you give us a little more information that, the nominal product that finally a small business realises it's got to have, they want to purchase, but the product that's available to them actually doesn't meet their risk? Is that what's going on?
Yes. So financial counsellors have worked with clients who, by shift in consumer behaviour, are forced to change the way they trade, and that opens up online and therefore cyber risks. In some cases it's simply a matter of the risks of emails being hacked and intercepted and invoice details changed. So the products that are on the market that we have seen through our casework are really aimed at larger corporations. There's not a product that meets the unique needs of a smaller business with limited capacity. And by limited capacity, I mean limited finances. They can't afford really high premiums on these products. They don't have expertise in cyber threat area, so they rely on brokers to support them through purchasing that product and understand the risk, and we see a lot of fall down there. And they don't have a lot of small business owners manage and need to wear many hats in a day, so they don't have time allowances to really investigate the details of these products, which
become an expert in cyber.
Become an expert in something that is not their main area of business, but is in some cases being forced upon them. So what we do see, and this is an emerging issue, what we do see is a lack of understanding of risk, a lack of understanding of policies that are affordable policies for small businesses to meet their unique risks, and then a lack of understanding of...
Can I just ask who is lacking the understanding there? Like in the first one, a lack of understanding of risk, yes, I can...
Yeah, by the small business owner.
Yeah, the small business doesn't understand. The next one, a lack of understanding...
Most business products are sold through brokers, so small business owners rely on the integrity and the knowledge of the broker, and we see great disparity here. I'm not suggesting that all brokers fall down, but we, financial counsellors in an area we work in, see the worst cases. So we do see significant issues with brokers not taking the time to adequately understand the needs and the risks of the business, and therefore not adequately informing the business owner of a policy that may match those needs. Particularly when you think we work with people who have different capacities. English may be their second language. They may not have run a business before. They may come from a country that doesn't have the same regulations as ours and the same systems. So there's a lack of understanding of the systems in the first place. Then they're being required to take out insurance. They're heavily relying on a broker, and we see a lot of fall down in the advice that is given there. So that small business owner remains uninformed, even though they're seeking some professional advice about what risks they should be mitigating.
Can I just put an example to you that I'm aware of, which is not about a knowledge deficit by the business owner. So the business owner is a specialist surgeon, and with a high degree of literacy clearly implied in that. But the business owner has their emails hacked, and when a payment of $20,000 is made, the email is interrupted and the money's deposited into an account which is open and shut very quickly. The money is lost. That sort of cyber risk, we are hearing, well, I'm certainly hearing anecdotal evidence that is becoming increasingly common, and in fact perhaps replacing ransomware, which may have had its day. What's your sense of the risks that currently exist in terms of cyber, and are the products moving to meet the changing nature of the cyber risks that are never ever static?
So through casework, financial counsellors have fed back that no, those products are not meeting the needs, that the risks have advanced past the product offering. And the unfortunate event that occurs from that is the client finds that out. So the small business owner finds that out when they go to make a claim. That's a pretty hard time to find out that you're not covered for a financial loss that you thought you were protected against. Then comes protracted arguments. I like to call it advocacy, but it's often an argument with either a broker or an insurer over whether that client believed that they were properly informed of their risk. And cyber risk is an area where I think more education is needed as well. The scenario
By who? Because it's always the government that seems to be saddled with this responsibility.
No, I'm suggesting insurers. Yeah, no, I'm suggesting insurers through plain language help people understand. A small business owner in the scenario that you've just described doesn't necessarily recognise that email interception as cyber risk. So some plain language around insurance products and some examples of what that cover might be would be very beneficial for people when they're considering policies. But unfortunately, we're not even starting to look at plain language in the insurance sector. So it makes it really tricky for people. But imagine if you had an information sheet on a policy in front of you or advice from a broker in plain language, clearly setting out what cyber risk covers and a scenario such as you've just described. That would trigger me to think, I hadn't thought of that. I'm a small business owner. I hadn't recognised that as a cyber risk. I can insure against that, and that is, as you suggested, an increasing area.
So we're talking about a product and a market, and there's assumptions it's about that it's available. You know, our previous witnesses were talking about, I think Senator Scarr used the word existential threat to access to insurance. Cyber insurance is available. I'm assuming it's affordable to a degree, but a lot of the products that still remain, you make a point, are often littered with exclusions and limitations. So I could just ask you to speak to what you're seeing, you know, at a point of claim. So this is not nationally, I can't purchase. We're further down the food chain with you at a point where a problem has emerged because the product that was purchased is not meeting the need, presumably, in most circumstances. So limitations, exclusions, what do we see?
The fine print. So I'll go back to the case that the scenario that you just proposed. The fine print can require, in many policies, it's my understanding it does require, that business to have adequate protections in place. So adequate virus and software in place. Adequate. What is adequate? A lot of these terms are not defined. A small business owner may have determined that they had adequate. They may have purchased something that is a well-known product and believed that to be adequate. And at the time of claim, the insurer argues that that wasn't adequate. So we sit in this space in many of these exclusions and limitations where you now are in a prolonged dispute because there's not clear definition of terms in contracts. So I might take out a very well-known software protection and have it installed and up to date on all of my business systems, but the insurer may have determined, and in the fine print, that you've got to jump through several pages to have a full understanding of. That may not be what the insurer's interpretation of adequate is. So often in those disputes over these policies, it is the fine print and it is interpretation issues. So lack again of plain language and proper definitions that are standardised across insurance contracts. Business owners are trying to read a 70 to 100 page product disclosure statement and try and find if they're covered in their business operation.
So have the insurers provided any reasons why those risks are excluded from their policies?
No, not to my knowledge.
Okay. And when this matter, do you take matters to litigation?
We don't. We do not give legal advice, so we would refer to legal for that. So sometimes we may see a client come in, do the groundwork in obtaining the information around an insurance claim or a dispute, and then may have to refer to legal. So we don't always know the outcome of that case.
Okay. And are there any, one of the things we've considered a lot is data poverty. There's another sort of interesting site there. Somebody comes to you, financial counselling, you're not quite sure how it gets resolved. Occasionally, I'm sure you do get resolutions. How are your resolutions achieved?
Through advocacy. So if the matter can rest within the scope of a financial counsellor, they will advocate on the client's behalf with the insurer. And sometimes that may have secondary legal opinion in the background, but
provided to you by?
Provided either to the financial counsellor.
By whom?
By a lawyer. I might point out that we speak about getting legal advice for small businesses, but unless they can afford to pay for it, there's very little free legal advice available to them, which is another gap in the insurance space. So there's community legal centres that consumers, you or I, could go to as a consumer. Small businesses are ineligible for many of those services.
Right, so they're ripe for the picking. Really?
They are very ripe for the picking. They are presumed to have means to be able to pay for legal consult, but it's very often, in our experience, not the case for your average small micro business.
And that's in some of the anecdotal materials that you provided to us. Thanks for that. I might go to colleagues now with questions. Senator Scarr?
Thanks very much, and thank you for your testimony and everything you're doing in terms of supporting people who are in trouble, many times through no fault of their own, but through force of circumstance. This has a real human cost, doesn't it? In terms of small businesses, and thinking of all the scenarios you've outlined there, and we heard from business owners in the live entertainment industry, and one owner who's got the personal liability hanging over them because they haven't been able to secure public liability insurance, right? So they know they're trying to get it, but as we're sitting here today, they don't have it, and they're at great personal exposure until they get it. And it seems to me that issue of underinsurance or inability to get insurance on terms which are affordable must impose huge stress on small business owners and have mental health outcomes, impacts and family impacts and impacts on people's well-being. So I'm interested in your thoughts with respect to that.
Yeah, significant effects on them, on their mental health, as you suggested. But from a financial perspective, most small businesses are underpinned by the family home. So if the small business fails, the home is lost. If you look in regional areas in high disaster risk spaces, and I listened to the previous testimony, some of this was touched upon, where small businesses cannot obtain insurance for that highest risk, so whether that be flood, fire, storm, they simply, that is not on offer to them. They carry that risk. So when an event happens, it's their responsibility to financially reinstate that business. So not only are they losing income, not only are they losing trade across the period that they're closed, they're bearing the cost of reinstating their premises. If they can't afford that, what happens? The business closes, the business pays the mortgage. What happens now? We see, I have previously worked in a regional town impacted by flood for 2 years as a small business financial counsellor. You see real life decisions being made where they may be the 4th or 5th generation that have grown up in that town. They were unable to obtain cover for the risk, in that case flood, and they had to make real decisions about whether they were going to stay where their family was, where their community contacts are, where they've grown up and have a sentimental attachment to. And the business is not able to be, most businesses are not portable in regional areas. So it's not able just to be picked up and trade continued somewhere else. So the financial risks are high. They may also, if they have loans and they're not adequately insured, similar to the mortgage situation with home building, they may be in breach of their loan contracts as well. So there may be some pain points with lenders there as well.
And financial consequences for other lenders as well, right?
Significant. The banks are often the silent industry in our discussions around insurance, but they are exposed to huge risk and it should be considered part of the solution to some of these problems as much as insurers should.
So why are they a silent industry?
I think, I'm not a banker, so I'll speak from my own personal perspective here, because it's not a professional informed opinion, but I think the banks are probably quite fearful of being transparent about their exposure to risk where people are not insured under financial lending products.
Okay, but there's a connection there. There's interconnectedness between the different providers of financial products. Mm-hmm. So you've got the insurers providing the insurance products, but you've also got the banks who have advanced loans to small business owners, and in the event certain risk events occur, they're exposed in terms of getting their loans repaid, correct?
They are. If the business is unable to reinstate, how on earth do they continue to make loan repayments? Again, on their business loans and then on their mortgages.
Yep. Yes.
While you're just having a look there, yesterday we started asking some questions about the banks, and I guess the committee will be communicating with the ABA to get their perspective on this matter. But this morning, if I can put it to you, we heard some evidence of businesses that are just ploughing on, not just underinsured, but uninsured in some ways, at odds with the legal requirements, but they can't see any other way of continuing the business. So is this an increasing phenomenon?
In my experience, yes. Yes, and we can look at several regional towns in Victoria that have been impacted by flood or fire in the last 5 years. Coming into those events, many of the small businesses were unable to obtain cover. So when their businesses were destroyed or partially damaged, they had no financial protection, and they certainly were not able to obtain that afterwards. Where a policy was...
Did they shut down, Ms Davis?
Some did. Some...
Others are trading without insurance?
Yes, some did, yep. Well, they had no choice, so they had to walk away, which creates a complex web for them, because if they're not the owner of the building from which they trade, they've also got a commercial or retail lease to consider as well. So they have a legal liability that's ongoing to that landlord. It's a separate situation to residential tenancies that may be able to end the lease. They don't have those trigger points in many commercial and retail lease agreements. So they might not be able to afford to reinstate their business, but they're still bound to the landlord to be paying rent for however many years that lease has left to run.
Back to you, Ms. Carr.
So I was just looking for this quote that struck me from your submission, and it's on the second page. I quote, "Regional and rural businesses often face higher premiums and reduced availabilities of cover compared to their metropolitan counterparts, despite often operating on smaller margins and with fewer financial buffers. This increases inequitable outcomes and threatens the sustainability of small businesses, particularly in regional communities where the closure of a single business can have significant local economic and social impacts, increasing the risk of communities becoming," and this is the term you used, ghost towns. Could you expand on that, please?
Certainly, thank you. So in a regional town I worked in post a flood, at the 2-year mark, 50% of the businesses had not reopened, and most of those had not reopened because they were either in a dispute with their insurer or they had no insurance because it had been unattainable for them. When I say unattainable, I'm not referring to unaffordable. I'm unequivocally stating that they were not offered insurance to mitigate flood. So it was not available even if they could afford it. When businesses, when there's 50% of a regional community business closure for a prolonged period, that has a on-flow to local jobs, local schools, local kindergartens, local sporting clubs and other community organisations. Those businesses underpin those communities. They support, the children are in schools and sporting clubs, keeping those open. The businesses often sponsor children's clubs and events.
Sure.
They're a local source of employment and income for others.
Yep.
When they can't get insurance to mitigate that, they're left with some hard decisions. Do they walk away from that community? And we should not underestimate the weight that small business owners feel of their duty to a community. All of my small business clients stated that when they were having discussions about whether they could reopen or not, the responsibility to the community was at the forefront of their mind.
And their families might have had connections to the local area going back generations.
They do. In many cases, that was true.
Can I play devil's advocate for a second, though?
Yes.
And, you know, I'm watching this terrible story play out, and I see all the images, etc. And I'm a taxpayer, and I live in an urban area where there's no fire risk that is significantly affecting my insurance, and there's no flood risk where I am. And I just say, well, why didn't they figure out 2 generations ago that they can't actually keep their businesses there? Like, they want me... Why should they feel sorry for these people? Couldn't they read the tea leaves? This was always going to happen. They should have made a better decision to move their business somewhere else before they found themselves in this situation. You know, because there's a compassion that people feel when they see it. But there's also, it's not me, and I don't care about it. And I'm not interested in my taxpayers helping people stay in a flood zone. Is part of a conversation, I think, that is actually, or in a cyclone zone or in a bushfire zone, is part of a conversation that is unpleasant to have, but is nonetheless happening. What do you say to people, because you're talking about difficult decisions, and there's a huge emotional part there, and pride of place and connection. All of that very palpable, and that's part of what people get when they go there as a tourist as well, that sense of connection and community. But these are competing narratives about whether public purse should or should not support good money after bad, sound investment, poor investment. There's a whole raft of considerations there, Ms Davis. Do you have a view?
I almost wanted to answer that question, but...
I've heard that narrative many times, and it would be fair to say I've been involved in many robust conversations on that very topic. I think there's many reasons that community members stay where they are. I'm aware that the town of Grantham, after a flood, was successfully moved by the mayor within a short period of time away from it, but they were quite unique circumstances and a number of decades ago, different times. And I probably would say, who are we to judge how people choose to live? But I appreciate your point about taxpayer dollars. And I question back, why must it just be taxpayer dollars? Those people do pay taxes, but why can't we have product innovation? So a solution to that scenario may be an insurer innovating for a very high premium product that mitigates that risk. So all other standard cover under that product might be subject to a reduced an average premium that is affordable. But where you're seeking to insure yourself against loss in a high-risk area, there is opportunity here for insurers and banks to collaborate and to innovate. A high-risk premium could be offset by a pre-approved loan. That loan, the trigger for that loan being drawn down, could be that a claim is made against that premium, and then the loan falls into place and repayments, affordable repayments, set in place over a number of years. The business is insured, the business remains in the town, the family remains in the town, the local housing market is not impacted because they're not suddenly, small business owners are not all selling their properties as well. But the insurer's risk...
The bank, by providing the potential loan, has protected its own investment in the business.
In the business, and also in the recovery of that business, because there's quick access to the funds to recover. So a quick policy payment that comes immediately because the bank is paying the premium on that, quick drawdown on that policy, quicker reinstatement. We're talking 6 to 12 months rather than 2 to 3 years, which is what we see for reinstatement as pretty standard. The business is up and trading, and it's not just one business up and trading, it's all of the businesses on the main street of that town up and trading if they choose to have access, or if there is access to an innovative product or products.
And Ms Davis, is such a product available?
No, but it could be. It just requires collaboration between... I would refer the committee to another project that Financial Counselling Victoria works on in collaboration with several partners called the Legacy Housing Project, and we have a Housing Resilience Action Plan 2030, and in that we suggest many products like this for home and contents for people that live in these regions. But the same principles of innovation and collaboration between sectors apply to small business, and it is possible. It is made possible by government pulling levers, and I again state I'm not talking financial, but helping reduce some of the regulatory overlay and encouraging industries to come together. It is possible by insurers and banks having open and honest conversations about what this may look like if you offered this, and working through that product development. And we have set that precedent.
And dealing with some of the power asymmetry that you referred to.
Absolutely. And there is appetite for everybody, for these industries. We had a forum last December, and there is appetite. The decision makers in the room were very enthusiastic and continue to have discussions, but they need to overcome, it needs everybody to act at the same time or it fails. And we need...
Chair, the CEO perhaps had something. Is there something you want to add?
Sorry, Zil.
I was intrigued. I was intrigued by your scenario. And I was just going to make a remark about the scenario of somebody potentially in Melbourne looking out at the regions and saying that's not my problem. A lot of what we've heard today, we were in the session before, so we heard some of the commentary about risk and risk mitigation. Melbourne used to be a flood zone, and over generations, the government and the people have undertaken massive amounts of infrastructure investment to mitigate the risk associated with it being in a flood zone. That's why the banks of the Yarra don't flood the lowland areas around, which still have effects to this day. But the difference really is just the timescale we're thinking about. And ultimately, I mean, it's a bit of an off-topic response, but what is the role of the government in providing for the infrastructure to build the nation? I mean, it's definitely the role of the government to do that. So for the scenario of the person looking out from Melbourne and wondering why bother, well, it's because if we didn't bother, we wouldn't even have Melbourne as it is.
Well, and you've also got the GDP that's generated in our regions.
Well, we're creating a society, and we're accessing the wealth of the state of Victoria.
Yeah.
I mean, if you sort of avoid all of those problems and imagine we'll just cram everyone back into Melbourne and leave the rest, you'll miss out on a lot of the great things that Victoria has to offer.
Yeah, I'd say it'd probably shrink the economy fairly significantly too. Did you have any further final questions?
No, I think we're just about out of time.
We are,
so.
indeed.
Yep. Thank you, and thanks for everything you do.
Yeah.
I'm sure you've helped countless people.
I can imagine getting the call to say you have got an appointment at 3:15 on Wednesday afternoon is kind of like the life-saving moment for some people. So, yeah, thank you for the work that you do there. You actually referred to an article there, I think that was tangentially related to small business. If you could provide any further information to the committee, you'll be in touch with the Secretariat. If you could assist us with providing materials by the Tuesday, the 18th of August, that would be much appreciated. That concludes this session, and the committee will suspend until 1:15 p.m. I welcome Motor Traders Association of Australia and the Royal Automobile Club of Tasmania. I understand that information on parliamentary privilege and the protection of all witnesses giving evidence to Senate committees has been provided to each of you. And for the Hansard record now, will you please state your full names and the capacities in which you appear today? We might start with you, Mr. Riley.
My name is Patrick Riley. I'm the RACT Chief Insurance Officer.
Bruce Bilson, Executive Director, Motor Trades Association of Australia.
And Claire Johnson, Advisor to the Motor Trades Association of Australia.
Thank you very much. And we have two opening statements.
Yes, Chair.
Well, we might commence with you, Mr. Bilson, and then we'll go to Mr. Riley, and then I'll give the first block of questions to Senator De Liga.
It's very kind of you, Chair. I understood Mr. Riley's was Gettysburg-esque, so we'll come to that shortly. Chair, Senators and members, thank you for the opportunity to present today. Motor Trades Association of Australia, through its state and territory members, these are the Motor Trades Association of Queensland, the Motor Trades Association of South Australia and the Northern Territory, the Motor Trades Association of Western Australia, and the Victorian Automobile Chamber of Commerce, represent thousands of automotive small businesses across our nation. These businesses are overwhelmingly small and family-owned and employ more than 320,000 Australians. Our mantra is pretty straightforward at the MTAA: you choose your wheels, we keep you moving. That commitment is now at risk for too many small businesses operating in the sector because a growing number of our members can no longer obtain the insurance cover that they need to operate. For small business workshops, it's not like a household where a person might choose to underinsure, self-insure, or perhaps even not insure at all. Insurance is not optional for these businesses. The message from our industry, which we hope to convey, is clear. Insurance is a legal and operational necessity that for far too many motor trades businesses, they are finding it's not accessible or affordable. Across the market, coverage is becoming increasingly expensive, inadequate, or simply unavailable. Several businesses have told us that they face closure, not only because of poor trading performance and conditions, but because they cannot obtain essential insurances. Premiums have escalated and escalated sharply, while coverage has contracted with an expansion of exclusions and things insurers are not prepared to provide cover for. Across our member surveys, businesses report increases far beyond what a low-margin operation can easily absorb. One small workshop, Madam Chair, with 12 staff now pays more than $30,000 a year in insurance and describes the situation as, quote, simply not sustainable. Insurers are withdrawing from motor trades, underwriting altogether, and in some subsectors only 2 underwriters remain willing to quote. These challenges are increasing, not decreasing. Extreme weather and the vehicle electrification transition are compounding the problems. The Insurance Council of Australia reports that more than $34 billion in natural disaster claims have been processed since 2010, and insurers are increasingly reluctant to cover businesses that store, repair or tow electric vehicles, citing battery fire risk. Now, this directly undermines Australia's net zero transition, and we think there's some opportunities to address that concern. At the same time, the regulatory framework has not kept pace. Insurers are not required to justify very substantial premium increases. They're not obliged to explain why they've refused to insure somebody or the rationale for particular exclusions. Mitigation actions often do not materially affect insurers' risk assessments, and insurers have no duty to maintain product availability in high-risk regions or industries. Some businesses sit, Madam Chair, in a regulatory grey zone without many of the protections afforded to consumers. Even the whole of government examination led by the Department of Prime Minister and Cabinet that has seen the creation of the Hazards Insurance Partnership did not extend to small business insurance and commercial lines. The MTAA's position is that the committee should consider recommending action on 3 particular streams: strengthening regulatory oversight of SME insurance, including an enhanced capacity for our regulators to review pricing trends and underwriting constraints and withdrawals; minimum availability expectations so that essential cover such as public liability, motor trades insurance and storm cover remain accessible in all regions; and targeted affordability mechanisms, including risk-sharing schemes for disaster and crime-prone areas. This is not simply a business cost issue. If insurers cannot insure, roadworthy inspections are delayed, collision repairs take longer, freight vehicles stay off the road, and regional communities lose essential services. Insurance affordability is a national productivity and public safety concern and goes to the heart of our mantra, we keep you moving. MTA stands ready to work with government, regulators and industry to design practical and nationally consistent system that delivers better insurance outcomes for our small businesses. I'm grateful for you receiving that opening statement, Madam Chair.
Thank you very much, Mr Bilson. Can I go now to you, Mr Riley, for your opening statement?
Thank you, Chair and Committee, for this opportunity to appear today. RSCT is Tasmania's largest mutual organisation with more than 223,000 members. As a mutual, RSCT is operated for the benefit of its members, not shareholders. Through our wholly owned subsidiary, RSCT Insurance, we are also Tasmania's only locally owned and operated general insurer. We underwrite $55 billion of Tasmanians' home and motor assets. We also advocate for long-term insurability outcomes for our members and the wider Tasmanian community. That combination gives us a distinct vantage point. We sit inside the insurance market as an underwriter with a locally based team providing expertise on Tasmanian risk. We also engage regularly with our members and communities on issues that are important to them. In developing our submission, we engaged with Tasmanian small business industry groups and our members to provide the Commission with insights into the small business sector in Tasmania. Tasmania's geography, natural peril profile, broad industry mix and market scale mean that trends in insurance may play out differently than at a national level. Small businesses in Tasmania generally have less than 20 employees and for many less than 5. They are economically significant and account for 31% of the total state employment. Many operate in climate exposed and regionally concentrated industries. There are 3 areas that are central to our submission. They're accessibility, affordability and availability. On accessibility, small businesses find that the insurance market is complex to understand and navigate, resulting in operators being particularly vulnerable to underinsurance or no insurance. With regards to affordability, the drivers of insurance costs are compounding. These increases are occurring at a time when small businesses face other pressures on margins. These drivers include climate risk, particularly bushfire and flood, which is increasing claims frequency and costs and impacts the availability of coverage in higher risk areas. Other inflationary impacts across insurance types include public liability and workers' compensation. While it's important that governments are able to fund emergency services and mitigation activities, any conversation regarding insurance affordability needs to consider the compounding impact of percentage-based state government taxes and levies on the insurance premiums as well. And on availability, reduced insurance participation in the Tasmanian small business segment is limiting product choice and tailored coverage. This is particularly the case for non-standard business operations, often common in tourism and regional environments. We don't see these challenges insurmountable, and our submission points to 3 practical areas for the Committee's consideration. The first is to support a joint national and state structured review of legislative settings that affect claims costs in Tasmania, particularly with regards to workers' compensation and civil liability acts. The second is working with industry groups to develop targeted practical support to build insurance literacy and risk management processes among small and micro businesses to allow them to present better to the insurance market. And the third is investing in mitigation actions, and particularly linking insurance, research, fire and land management actions and flood mitigation information so that all levels of government can adopt local risk profiles. To expand on that last point, bushfire is Tasmanian's peak natural peril and an increasing peril for many regional areas in Australia. We encourage you to continue support of research into bushfire. RCT is supporting the link between scientific understanding and actuarial outcomes through our $1.2 million investment in University of Tasmanian Fire Centre, one of the world's leading bushfire mitigation research hubs. Our discussions with industry showed us that there was not one simple solution to the small business insurance concerns. However, a competitive, sustainably regulated market remains the best long-term mechanism for affordable insurance. because price and coverage signals are what drives sort of genuine risk reduction. Our recommendations are focused on strengthening that market's foundations, not replacing it, and we welcome the committee's questions.
Thank you very much, Mr. Riley. And I'll go to the first block of questions to Senator De Liga.
Thank you. Excuse me. Thank you very much, Chair. And just before I start with my question, I'd just like to declare that I, through all my adult life, I've either had an RACT membership or an insurance product with them, as they are a Tasmanian business and with Tasmanian employees that does a really great job. And so it's been a great pleasure to have their products for all of my life. And I'd just like to put that declaration on the record.
I don't see it as a conflict of interest. Let's go.
It's like Mr. Riley, in your submission, you were talking about some of their state insurance taxes as part of they can increase small business premiums by up to 54%. How do does Tasmania state taxes compare with other jurisdictions?
So in Tasmania, there is sort of three sort of levels of taxes. So firstly, in sort of commercial property, there exists a fire services levy that's applied to the insurance premiums and it's collected through that mechanism. So certain parts of the insurance premiums that small businesses would pay would pick up that levy, which is I think it's 28%. Then there is a stamp duty of 10% and then GST that sort of applies on top of that of 10% as well. And those will compound out to about sort of 54% for those property risks. Other risks will have a lower sort of tax burden.
And is that fire levy, is that comparable to other states?
I believe the only other state that has a fire levy or emergency services levy applied to their insurance premiums is New South Wales, and they are undertaking reform in that regards.
Okay, thank you. And as our Tasmanian local insurer, how do you tailor your insurance products specifically for the Tasmanian market being a unique island state?
Well, for us, what's really important is we want to make insurance work for Tasmania, and we want to make insurance to be as broad-based as we can. And so probably the first part of the answer would be that we certainly make sure that we look to underwrite the whole state and in the classes of insurance that we do underwrite. And so we certainly don't look at particular sort of blanket exclusions. We certainly look to try to have a broader based product. Then we sort of try to make sure that our product actually meets the needs of Tasmanians and meets the needs of them at that time when they need to make a claim, and we need to deliver on our promise to our members.
Thank you. And looking at some of the information that you provided to us in your submission, you indicated that business insurance is often priced according to standardised risk segmentation rather than a risk assessment tailored to individual businesses. And that a lot of these challenges are compounded in Tassie due to the relatively small number of insurers offering small to medium enterprise insurance in the state. Obviously, competition is really, really good, but also, that having bigger players in here might also be negative to the interests of RACT. How can we balance getting insurers to be able to offer a more of a tailored risk assessment to individual businesses?
So, certainly in terms of competition, through our research, what certainly emerged was that there was often sort of quite a small number of insurers who were actually offering insurance in Tasmania, and in certain sort of sectors and certain locations, there were there were potentially no insurers who were offering sort of insurance for particular sectors. So in terms of, you know, that is not sort of a competitive market when there is very few insurers who are offering sort of insurance. So we would obviously like to encourage as much as possible that there would be more insurers in whatever capacity sort of providing sort of products in the market. So that's the first part sort of that sort of that approach. From RACT point of view, sort of in the categories of insurance that we offer, and particularly sort of property, there are 8 or 9 insurers who would be offering products in our market. So that's much more competitive for that sort of homeowners and motor insurance. So we're comfortable that sort of competition would be in the best interests of Tasmanians to get the lowest premiums that they can, be that with RACT or be that with another organisation. And equally, a more competitive market would encourage sort of insurers to actually sort of think about sort of the risk and have different views of risk and potentially offer sort of different prices rather than just have one view of risk for all of Tasmania.
Interesting, thank you. If I could also just go back to one of your recommendations about developing of insurance literacy, particularly for business. Could you sort of touch on how that could look like with peak bodies in the industry, and how we could actually get more education and develop the literacy of smaller micro businesses?
So in our discussions, particularly with the industry groups, is that they're really sort of emerged that the members of those bodies don't actually understand sort of necessarily the language of insurance. They don't necessarily know what risks that they are facing and necessarily sort of what risks that they may need to make sure they're insured. We're also aware of examples where they may not have sort of put forward the right information and perhaps got an incorrect premium as a result of that. So we would sort of envisage that there would be a program to build education sort of modules, if you like, that the small businesses within these organisations, within these industry groups could access, and that would then allow them to actually be able to find the information required to be able to navigate the insurance and perhaps to engage with their broker and actually be able to ask for what they need, which matches their risks. There is a cost associated with building that sort of material, and that would be, our recommendation would be that the committee should generally think about sort of how it would support the creation of that material that actually supports the businesses and those groups to be able to access appropriate information that allows them to navigate the insurance landscape.
Thank you. And just finally for me, it was a really good presentation that the RACT did for parliamentarians in Canberra last year to talk about some of the risks in relation to bushfires that you've been doing with the UTAS. Are there any updates you can provide to us based on your research as to some of the risks in some of the areas in the state which are exposed to the greatest risk?
So the commencement of the research with UTAS, I think we sort of announced the funding in sort of December. It's still early days in terms of, I know the working groups have been working through various aspects. We haven't sort of necessarily had something ready for public release. Parallel with this is also that we're undertaking a pilot program with the King Borough Council and the Greater Hobart Council to understand sort of what sort of motivates or what incentivises people to be able to take action to mitigate sort of their property risk as well. So that's also another sort of program that's just been undertaken.
Madam Chair, could I just add something that Mr. Riley's probably too shy to mention? Mr. Riley and his team at RACT do some outstanding work, but it is one of only 2 remaining motoring organisation mutuals on the continent that provides insurance in the way that they do. The other one is in Western Australia, and there's currently an acquisition proposition before the ACCC for IAG to take over that operation. That model's happening everywhere. We've been vehemently opposed to that because of the concentration that it would develop, but also these motoring organisations have incredibly trusted brands, and to have that brand still live, but sitting behind it's actually a multinational or a large insurer that's not the mutual, is, clearly that's the attraction and the market advantage that the acquisition, particularly in WA, is looking to focus on. But it does take competition out of the market, and Mr. Riley's evidence about the competition is so important. In Western Australia, they've got a very interesting mutual operating in Western Australia, and I'd encourage the committee to consider engaging with Capricorn. It's an area closely related to the MTAA's area of interest. I think the history was largely service stations not being able to obtain adequate insurance. So this cooperative joint insured arrangement called a discretionary mutual fund, which was established in Capricorn, is now a very important part of that competitive landscape in Western Australia. But it's also a model of where traditional insurance might be dysfunctional. The insurers will say, oh, this is the market, this is the price based on risk. Well, okay, it doesn't work for the insured. What else could we do? That discretionary mutual fund model is something that may be of great interest, and Capricorn's a substantial player in that space.
We certainly didn't take evidence from Capricorn yesterday, but the concern about competition was raised. And I think it's timely now that we sort of switch the call. Thank you, Senator DeLeaker, and I'll give a call to Senator Scarr.
Thank you, Madam Chair. And I note in my home state of Queensland, Mr. Bilson, that it was only last year that IAG purchased RACQ's insurance business for over $850 million, and RACQ now only holds 10% of that business, of which I'm a member, and I'm sure Scotty is. And IAG has an option to acquire that 10%. So, and Mr. Bilson, as you said, RAC in West Australia seems to be going down the same path, subject to ACCC review. Is MTAA making a submission to the ACCC with respect to that proposed acquisition?
With bells on, Senator. We've made a submission at the beginning. We made a more recent submission when the remedy, or we might be familiar with the undertakings proposition, was put on the table, which we characterised as a fig leaf and not really dealing with the structural problems. And we'll be making a submission in the next 48 hours in response to the IAG's position in response to people's views on their remedy. For us, obviously the consumer interest is a driving force, and the consolidation means a loss of choice, but it also means a concentration in the procurer of smash repair services. It's already alive and well. Our Queensland colleagues, the MTA in Queensland, are very prominent in our division, which deals with motor repairs. And there's a code that's in place that's, variously described as being there, but maybe not doing all that it should, that tries to govern that relationship between a small and family business repairer and the insurer, for whom the small business is incredibly dependent on for flow of work. And so we've been pointing out in the Western Australian example how those safeguards are, in many repairers' eyes, falling short. We've got some particular ideas on how that code can be strengthened. There's good engagement with the Insurance Council of Australia on refreshing that code. But by way of example, there's some 580 odd issues raised through that code mechanism. All bar two gets resolved internally. So you wonder why an insurer needed to raise it in the first place if it's so readily resolved, and only 2 matters ended up going forward for determination. Now, that's the current code.
Yep.
We think there's an enormous fear of retribution if you put your hand up and say, hey, we're being told taking that front bumper bar off with all the technology that's in it is an 11-minute job, and the professional repairers are saying, no, that's a good hour given all the tech that's there. They have an argy-bargy, there's an aggro moment, they work it out, they move forward. We hear a lot of that concern, but it doesn't always surface because I think of that dependency on the insurers for supply of work into those workshops, and it really puts people in a tenuous situation. So we've been advocating some changes to surface where there's a price discrepancy of, say, more than 10%. The insurers have got those systems. They should publish that and let the code review committee have a look at it and just see where the patterns and the scale of the problem is. So that's just an area where consolidation affects the small and family businesses that the MTAA and our state MTAs represent.
No, it's a point well made, and you know it's interesting, Mr. Bilson. You made the comment about the two mutuals left, with one in the process of trying to exit. I actually had to check. I thought, oh, RACQ, what happened? Because they still operate under the RACQ insurance
Badge
moniker,
engineering, yeah.
But 90% owned by IAG, and I wonder how many members of RACQ realise that 90% of the ownership of RACQ is now with IAG. It's an interesting point. Can I ask you, Mr. Riley, just in relation to RACT, what would be the process RACT would have to go through in order to, and I'm not suggesting you're thinking of doing this, on quite the contrary, but as a mutual organisation, what would the process you'd have to go through before you made a decision to sell your insurance like others have done?
So certainly what we would...
Would you need the consent of, say, a majority of the members, or is that something where the board would have the power potentially to dispose of that business?
So I think I would need to take that question on notice, just to be really sort of accurate on what's required. It would certainly require the board to make the decision in the first instance, but I'd need to take on notice whether that would require a member to vote. Yeah.
I'm not really sure what process RACQ went through. Do you know?
No.
So there you are, we're both members. So it's an interesting question. Can I ask you, Mr. Riley, just one more question before I go to Mr. Bilson? We've heard from other witnesses that the Tasmanian government was considering the establishment of a Tasmanian insurance office to potentially step into the gap, if I can put it that way, that various stakeholders in Tasmania are unable to procure insurance. So there was consideration being given to establishing a state-owned insurance office. Do you know what the current status of that is?
So yes, Senator. So they did initially announce a policy establishing a state-owned insurance office. Now that we sort of welcomed the discussion around affordability and availability when they announced that, but there's a lot of work that needs to go into exactly how you approach that.
It's a very diplomatic answer.
Yeah,
I'm impressed. Go on.
It is a small state, so but they did sort of go. They did ask for some public consultation, which would have happened in sort of I think there was submissions in December. They also appointed John Trowbridge as an industry expert to provide them some guidance on what direction they might head. And then in May, they've actually sort of released a sort of their position paper and discussion paper around what Tasensure is. So it's not about sort of establishing a government-owned insurance office as it was perhaps originally envisaged, but effectively establishing an organisation that will actually sort of work to work through some of the issues that are in sort of in small business and homeowners insurance in Tasmania. I think they highlighted in that sort of position paper that they would look at sort of a market division, which will look at sort of where there has been sort of market failure or hard to place insurance, and what are the solutions to that. A consumer division, which would do something very similar to what we discussed in our recommendations around how people can understand insurance to be able to navigate. And then ultimately, sort of, there is a piece around sort of risk mitigation and the coordination of risk mitigation for the state. So that's sort of where the most recent position on TasInsure is.
Okay, thanks very much. Mr. Bilson, first, congratulations on your work wearing your previous hat as small business ombudsman. I want to ask if I could. Can I ask you some questions in that respect?
Sure. I'm mindful there is a new improved version that's been appointed after my term expired, so I'm happy to make some comments, but I'm sure you've been engaging with my successor as well. So.
We have been. Yeah. We have been. Can I ask you? You did what I thought was a very impressive piece of work around, if I can call it, the amusement in park industry. And I think the report was called "The Show Must Go On."
Show Must Go On. No, well said.
Was that? Did you come up with that title?
I'm afraid so. I'm known for some odd, cheesy lines, but
great line. And in that report, one of the recommendations was that would governments have a look at potentially establishing a diversified mutual fund model, or providing assistance to the support the creation of that model for that sector, recognising that would require some changes to laws at a state and territory level as well. Yes. So it would need to be a national response to that issue. From your perspective, I'm interested to know, after you delivered that report, what happened?
Well, not much, sadly. So I was concerned about, the real pressing nature in the amusement, active recreation and leisure area, that so many were finding it hard to find accessible and affordable insurance. Long history, the report characterises intergenerational businesses involved in that space, and some of the assets that they'd invested in, the insurers are saying, yes, we'll let you do that, but leave all those to one side. Because we're not prepared to insure those, and then it was having an impact on the regional and country show system network, was having an impact on some of the more popular amusement parks that you'd know well in the southeast in the great state of Queensland.
I don't get to them as often as I'd like.
No, I used to mark the age of my kids when their height by what rides you could go on, but they're all a bit more mature now. But it also had implications, and I remember talking with the government about the tourism strategy for Australia.
Yes.
Very much about getting out into the country, out into the bush, living and experiencing, the magnificence of our nation. They were the very areas where insurance was getting harder and harder to access. 150-year-old weatherboard pub. Don't have rhythm and drink alcohol was the message that the insurers were giving them because it was too much of a risk. Fire-prone area, we don't want to touch you. Yes, paddle around an island, but by the way, we can't get you insurance in case something goes wrong. So this was popping up in the visitor economy and was really prominent in the amusement space. The insurance industry was saying, well, that's the market pricing the risks attached to it. We're going, well, hang on a minute, what are you looking at? And we went deeply into that and then looked at some international examples. And in the UK, they have a discretionary mutual fund that deals with, mountain bike riding and all this, not just
that's the term, it's a discretionary.
It's a discretionary mutual fund.
Discretionary.
And the discretion piece is important, and because that means judgment is exercised on what type of claim is paid for, and that's managed by the group of shared interests that are party to that fund. So everyone contributes. It's like a cooperative essentially, but to manage risks. And what it also does is, because it's run and managed by the members can also drive better practice, risk mitigation. They can decide not to bring in a cowboy that is a heightened risk because that has impacts for the fund. What we were saying, though, was...
So they're not dragged down by the poor operator.
Correct. And then one of the things that was often said, in this area you've got people that are a bit a bit fly-by-nighty, and that's where the risk sits. Well, okay, why not work cooperatively with the sector leading improved standards and better quality assurance to reduce the risk? So that was the argument, and we thought that was a good argument in an area where we thought the insurance market was dysfunctional. There were some overseas people coming in, they'd stay 5 minutes and they'd rack off. And you'd wonder, well, how does that help? And more particularly, how does that help the consumer where something does happen? You want them to be properly supported. You don't want them to find out someone's decided not to have any insurance.
So I had public liability insurance in inverted commas, but
and then it's not there.
XYZ Co based in the Bahamas that just disappeared.
Correct, and it didn't amount to anything. And under state and federal law, Great Gabrumpa and a lot of land management laws at a state level say you must have insurance up to 20 mil. There's an argument whether that's too much. But the word insurance actually has a meaning. A discretionary mutual fund does not meet the legal obligation of insurance. So what we said was get the regulators to, what in my former life we put forward was get the regulators together. That would be APRA, the Prudential Regulator, ASIC, Treasury, to determine where a market is dysfunctional and not meeting the national or community or industry interest, and then another regime could kick in that would be equivalent of insurance, i.e. discretionary mutual fund. So there's some safeguards around it that we thought were worth having a look at. We did suggest government might put some coin up front in the early years, maybe as a loan, because you'd have to accumulate reserves over time, and heaven forbid you might have a bad experience that would draw down your reserves quickly. One to think, I think it's the PAIR Association. They have a frost risk policy. This is going back a fair way, and as you know, I'm pretty old. They had a policy that saw a lot of money going out of the agricultural sector on the off chance there was a frost. So each year they're paying handsome money, and of course the frost didn't come. So the insurer's just saying, thanks very much, all the best to your family. They created a discretionary mutual fund to keep that money in the sector, knowing that if a frost event happened, the support would be there, but knowing on the years where there's no frost, they'd keep those resources to improve frost management, varietal selection, training and education. And I loved what my colleague Mr. Riley said about, I'm trying to not verbal you, sir, but literacy for insurance. I've been urging people to have more of a relationship with their insurance. It used to be a set and forget thing, but a need to stay involved. What's covered, what's not, what risks have been identified, what steps can you take to mitigate those risks, and then saying to the insurance industry, don't go around telling everybody that risk mitigation is rewarded. It's frankly not. No. So you can do all the things that anyone could ever ask of you, and there's no financial recognition.
And that's a continual frustration.
It is frustrating.
Through the evidence we've received in this inquiry, that whether or not people are in the hotel industry, the amusement park industry, live entertainment industry, customers are feeling that they're not being recognised for all the risk mitigation steps they're introducing, nor are they being recognised for the fact they haven't, in many cases, ever made a claim.
And this is the frustrating. Western Australia recalled a visitor economy operator in the Margaret River, a fire risk area. He buried all critical infrastructure. The cabins were in the earth. He had his own fire brigade. And they're going, no, too bad, you're in a terrible fire risk area. But hang on, I've done everything you could ask of me. Isn't that my part of it? And shouldn't you meet me part way? I'll give you an example in our space. We've seen the popularity, government policy, and the consumers are voting with their feet, electric vehicles and new energy vehicles.
Yeah, I was going to ask you about this electric vehicle.
So imagine you and I were running a workshop. You've bought the vehicle, it comes in for some repair.
I'd be writing the customer contracts. You can do the mechanics. Sorry, go.
They come in, and all of a sudden the insurer says, oh, hang on, you've got a battery in there. Yeah, but I've spent the $15,000 on the fire containment infrastructure. Surely you should reward me for that. Oh, no, we just don't like the vehicles in there. Now, that's an example where if someone's making all the right moves, they should be rewarded and incentivised for it. I mean, to the government's credit, they've got the Driven program. Round 3's coming out. That was originally about having EV charging in dealers and the like, so that they could, meet that market and in other located places. Round 3 starts talking about, well, what support's needed for workshops to be able to provide that level of we keep you moving if it happens to be a new energy vehicle or an electric vehicle. That's a good measure, and maybe this could be part of it if we're funding those fire containment measures and other safety measures, because I don't think anyone doubts that the motor mechanic technicians are best placed to keep vehicles on the road. If they've invested in that sort of infrastructure and there's an incentive there to support the rollout, you know, that's a good win-win. That's the sort of practical action steps we think.
So moving...
Make an observation there that we've got a bit of a contradictory narrative going on in terms of grow your literacy, speak to the insurance, but the power asymmetry means that even the most literate, it's like talking to a brick, right? There's no conversation possible where the power is so vast.
It's not always a fulfilling conversation.
Different,
I
right?
think that's right.
And the very significant difference is that the mutuals that we're talking about and these discretionary entities are actually about a community of conversation with a very different power structure. It's not just a technical business structure or a sustainability structure. There's a power structure there that changes the nature of the conversation. And I looked up your Capricorn mutual, and very differently from what we've just been talking about with the amusement parks or with motor traders, this covers business buildings, contents, burglary, interruption, customer vehicles and public liability. Much more specific product delivery provides a different part of a market. Perhaps you need less competition when you've got more collaborative, collective need, properly identified and risk managed.
I think you're spot on, Chair. And in fact, when you've got increasing concentration, it's often a cooperative model that's the only way smaller businesses can aggregate to have the scale and, frankly, the system sophistication that Mr. Riley and his people do. That's why this model is so exciting. The Business Chamber for Cooperatives and Mutuals did some excellent work off the back of that report to start to try and shape up what does the best practice look like in this discretionary mutual space, so that they can then go to regulators and say, we've got great governance, we've got great prudential oversight, we understand the claims history, we've got the data. To your point, we work closely with our members not only to protect consumers and those that are using it, but to lift standards and have real rigour, and where there's new insights, new reporting technologies.
Responding to innovation.
Absolutely, and it's like a joint effort to lift all boats in that space to make sure that that risk management tool, which is all insurance is, that instrument, if that can't be insurance, it's something that meets those objectives, and actually I think has some virtue in other areas like you described.
Back to you, Senator Scarr. Last question, I think.
Oh, last question. If I can go to recommendation 6, there are 2 points you raise. Review regulatory barriers to new market entrants. So interested to know what those regulatory barriers are in your particular space. And secondly, encourage specialised underwriters to re-enter the motor trade sector. So interested to know why they left, and what can we positively do to re-engage them so they re-enter the sector.
Look, I'd have to probably take the second one on notice, but my colleague, Ms Johnson, may have some more insights on why they left. Often it's a question of how you want to make your capital work, and also an assessment of moving parts. I think the transition in the vehicle fleet is something we need to be aware of, because that's been quite difficult. You remember when hybrids came in, people weren't sure about battery life and resale value and things of write-off expenses. In this space, we've got nearly 60 brands operating in the Australian economy. There's more coming, and they're offering an incredible array of vehicles. One thing that our members are telling us and there's good work being done on the right to repair, so that there's not this story that you can only get the original equipment manufacturer to attend to maintenance. And I think, Senator, you've been very involved in the extension of that to farm equipment, which we support. One of the things, though, is if you've got a right to repair, you should have a right to parts as well. So at the moment, we're hearing stories, and I won't mention particular brands, but they are popular EV brands, where if you happen to back over your kid's bike and you damage the back bumper, you could wait 24 weeks for a bumper. Now, three things happen. One, well, if the vehicle's off the road and it's sitting in someone's workshop, that's expensive because you need those areas, those bays to do your work. Two, that's not great for the customer. They can't get their car back. But three, if you're insured and your product has a rental car available where your vehicle is unavailable, we are hearing stories of vehicles being written off for a little dent in the back bumper because you can't get hold of a part. And they're looking at what the cost of renting a replacement vehicle is and then writing the car off. Now, that's in nobody's interest. That pushes up in the cost of insurance more broadly because it's an unnecessary write-off. Why? Because the parts aren't available. And so, when we're talking about rights...
That's extraordinary on so many levels.
But this is sort of what our national advocacy is about, bringing these examples and then working with lawmakers and government and regulators to say, it's great to have a right to repair. There's things about that and the tooling and the technology, but if you can't get the bits to actually, keep you moving, as is our mantra, then that idea then runs into some obstacles.
Ms. Johnson?
We will have to come back to you in terms of the specific reasons why some specialised underwriters are exiting the motor trades market. But what we're hearing from our members is that either insurance products are no longer available to them or their insurer has withdrawn from that market altogether because the vehicles are becoming so increasingly complex. So advanced driver assistance systems, complex telematics and sensors, electric drivetrains. If our body repairers and then, one of those vehicles is in a collision, they need to undergo extensive works. Insurers are telling them this is too dangerous, it's too complex, we do not want to insure it. So as the risk profile of these vehicles, or the perceived risk profile, starts to increase, the insurance products
written off as well.
And write-offs are becoming more frequent.
And the first limb of that question, review regulatory barriers to new market entrants.
Do you want to add it? Yeah, no, what we're finding, and even with some of the measures to deal with poor customer experiences, we're seeing codes increasingly used. Like right now, there's the general insurance codes being reviewed. In our space, the smashed vehicle repair codes. Some of the obligations are now making it harder for smaller insurers to compete. You need this behemoth capacity to actually engage, and at times the regulatory framework, I would say, is not right-sized for smaller and mid-tier entrants. So when you get specialist insurers, they're having to climb over hurdles designed for some of these multinational behemoths, and that can be very challenging. I'm not sure whether Mr. Riley wants to reflect on his experience, but he's navigating an environment and a regulatory landscape that much larger organisations might. So I'm probably...
No, I think it's good to put you in it, Mr. Riley. But you'll have the last word. So Tasmania rules the day.
Excellent. So certainly there is a significant regulatory burden, and it is often a one-size-fits-all for all participants in the market, and that increases costs in delivering sort of on our promises to our members. And we can spend significant amount of time sort of navigating that regulatory environment rather than actually sort of resolving the members' issues in a timely basis. We would always encourage, there are reasons why regulation exists, and we would always encourage that not only at the time that regulation is put in place, but at regular points afterwards, that sort of the regulatory settings are reviewed, and the question about are they actually sort of resolving the issues that they originally put in place for, and what are the consequences, if any, of that regulatory burden in terms of competition and the ability for particularly smaller insurers and mutual insurers to deliver on their promises to their members.
Could I just cheekily add one last point?
I would be disappointed if you didn't try.
Thank you, Madam Chair. You're very
Mr.
kind.
Wilson.
The other part is for our...
It always goes back to the mainland, doesn't it, Mr. Riley?
I'm going to... I mean, there is we've got the South Island, the North Island. This is kind of a westy central island. Pick Kangaroo Island. A natural disaster goes through, extraordinary impact there. If you're a farm repair business, a farm equipment repair business, you might not have been caught by the fire, but all your clients have been. And it's not my phrase, it's one the fire industry emergency services use. The fire scar, no discourtesy to you, Senator, might not have kissed your premise, so you haven't been directly affected. Those businesses are often left out of the disaster response because all their clients have been affected. They have no business. And when they go to claim on, say, business interruption insurance, the insurers will say, but your business is fine. Nothing's directly impacted on you. That can be devastating for those businesses. So I'm just throwing that into the mix, that those small and family businesses that support regions that are impacted by natural disasters are often left out of the support and may not even be able to claim on their insurance because they've not been directly impacted. They just have no clients and no customers for an extended period of time, and I saw it on your island as well.
That is certainly the big risk and the experience in Tasmania. We have lots of very small regional communities which are very important in Tasmania, but to what extent after a big event can you get sort of the community back on its feet, particularly when there's people who move away, there's no business. This is definitely a regional
Really
concern.
starting to make me think about, how many discretionary mutuals do we really need, and what's the reason that we ended up with larger mutuals, which actually brought many separate mutuals, I expect, under one heading, which is really what you're doing to provide the necessary counterweights as one part of the business might be drawn on and another part is more successful. At the moment, we've got an equation where a lot of money in a good year goes to shareholders rather than is held for the leaner or more dangerous times. So here we are coming full circle from privatise at any price to let's deal with what looks like market failure. And I note from your submissions, you all mentioned access, affordability, and there was one.
They carve out bits going, we don't want to touch that. It's half my business.
Accessibility, yeah. So thank you very much for your your evidence today. The committee thanks you for submissions and your answers to questions. And if I can ask the next witnesses to prepare, and we'll suspend for 1 minute. I now welcome representatives of the Housing Industry Association. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, would you each state your full name and the capacity in which you appear today? We might start with you, Ms Cameron.
Natalie Cameron, Director of Workplace Relations.
Simon Croft, HA, Chief Executive, Industry and Policy.
Thank you very much. Now I invite you to make a short opening statement, and my colleagues and I will proceed with questions. Thank you.
Chair and members of the committee, thank you for the opportunity for HA to appear today. I would like to focus on the growing challenges facing small building businesses in accessing insurance and the broader implications this has for housing supply, competition, business viability and productivity across the construction sector. Insurance is no longer simply a business cost. For many builders, it has become a major barrier to operating, growing and in some cases remaining in business. Over recent years, builders have experienced substantial increases in premiums across public liability, professional indemnity, contract works and residential warranty insurance. It is not uncommon to hear examples of businesses that were paying $15,000 to $20,000 annually for a package of construction-related insurances now facing renewal costs of $40,000, $60,000 or more. In some cases, builders report premium increases of 100 to 300% over relatively short periods, despite having no claims history and no change in business operations. The issue is not only the price of insurance, it's also access to insurance. In construction, we have mandatory insurances, quasi-mandatory insurances, and business operational insurances. Many insurances have become increasingly risk-averse towards the construction sector. As a result, builders are required to provide extensive and growing levels of documentation during underwriting. A small business owner may be required to provide detailed financial statements, tax returns, work in progress reports, cash flow forecasts, project pipelines, subcontract information, quality assurance processes and detailed histories of past projects, often every year and sometimes multiple times per year. For a large construction company, the administrative burden can be absorbed by dedicated finance, legal and compliance teams. For a small builder, employing 5, 10 or 20 people is often the owner completing this work late at night after managing projects during the day. The regulatory and administrative burden associated with obtaining insurance is becoming a significant cost in of itself. A particular source of frustration is that many builders believe insurers are not adequately recognising long-term risk performance. We hear examples of family-owned businesses operating successfully for 20, 30 or 40 years without major claims, significant defects or disciplinary action, yet they continue to face blanket premium increases similar to businesses with a much higher risk profile. In many sectors of the economy, a long history of safe operation is rewarded through risk-based pricing. Builders are increasingly asking why decades of successful trading, strong compliance records and clear claims histories do not appear to result in materially different insurance outcomes. The result is a growing perception that builders are being assessed as part of a high-risk industry rather than as individual businesses with distinct risk characterisations. There is a broader policy issue that deserves attention also. Insurance costs do not exist in isolation. Small building businesses are simultaneously reporting to a wide range of regulatory reforms and compliance obligations. These include increased licensing requirements, changes to building codes and standards, taxation changes, expanded documentation requirements, strengthened consumer protection measures, changes to building codes and standards, workplace reforms, reporting obligations, and evolving contractual risk allocations. Each reform may be justified individually, however, small businesses experience them cumulatively. The challenge for small builders is not one single regulation, it is the combined impact of dozens of regulatory changes, additional compliance tasks, and rising business costs occurring at the same time. When rising reinsurance premiums are combined with increased compliance costs, labour shortages, material cost volatility and tighter financing conditions, the overall effect can be significant. The businesses most affected are often the smaller sized firms that form the backbone of local building industries and housing delivery. The consequence is that some builders choose not to expand, some decline work that carries higher insurance premiums, and some leave the industry altogether. Ultimately, this reduces competition, constrains housing supply, and places further pressures on construction costs. From the perspective of small businesses, the key policy objective should be to ensure that the insurance market remain accessible, affordable and appropriately risk-based. Builders need greater transparency around underwriting decisions, better recognition of demonstrated long-term performance, and a regulatory environment that considers the cumulative impact of reforms on small business operations. Accordingly, HA's recommendations to this inquiry reflect the reality that legitimate market dynamics are being materially amplified by policy settings that could and should be corrected. This is not by another round of parliamentary inquiries, but by meaningful and lasting reform, and with small businesses designed front and centre, not as an afterthought. Thank you, and we look forward to assisting the committee with this inquiry.
Thank you very much, Mr Croft. I'm going to go to the Deputy Chair for the first round of questions, and then to my colleague, Ms Lawrence.
Thank you, Chair, and thank you, Mr Croft, for your submission. And I really value reading your submission. And one of the challenges we have as a committee, picking up your latter points there around, just another committee with another recommendation, is when I give thought to what the scope of the recommendations that can come from this committee, I want to tease that out and share what they potentially look like. When we look at the insurance market, there's evidence to suggest that the broader the insurance footprint, like compulsory third party, everyone's in. No market player gets to determine or pick winners and losers. Everyone's in, and everyone shares the cost equally. Workers' comp, exactly the same thing. Different, health insurance. Everyone's in. You choose to go out, you'll get caught somewhere. So when we look at the breadth, the last person we spoke to around when the Motor Traders Association, they were suggesting hybrids of mutual funds to try and take back power. What I want to explore with you is that if we look at the extreme of the other end of the juxtaposed position of everybody's in on those products, but when it comes to housing, what about if everyone was out? That if we created legislation so that there was no compulsion for insurance, you cover it yourself. You want to jump out of a plane on the weekend because that's where you get your giggles from? Go your hardest. You want to go rodeoing? Enter at own risk. Why should your neighbours be subsidising that risk? In the housing sector, when you share those stories of builders with workers, small businesses, what would their world look like if that compulsion of insurance was removed? And what would be the opportunity cost of what would they do with those funds? What would their world look like? We have to explore all places. And I just want to start there, Mr. Croft.
Blow up the show.
Okay, so I might answer in three streams in listening to that question. The first part you mentioned about all of the different inquiries that have gone on over the past decade. I've been involved in probably 4 this year alone.
You have
climate risk assessment, I'm probably just listening today to the various people talking about. There's 20 different conversations going on. Insurance is so broad. We talked about the reinsurance pool. I've been involved in 5 different inquiries on the reinsurance pool, and over the course of its lifetime and back when it was designed, we've helped with its design and originally. We've been talking about bushfires, floods, about mitigation, the building codes that go into that, about can you get insurance, massive underinsurance. We've seen out of the Northern Australia inquiry, we've seen out of the Black Summer bushfire. I was down recently down in Rosedale, down the south coast of New South Wales, and the home's only just been rebuilt now. And that's from the 2019 bushfire. Tarthra, the 2017 bushfire, they're only just starting to get rebuilt now. So there's so many things going on in this conversation. Firstly, I'll just mention about the different inquiries. And we said, let's not have another inquiry. What I would like to see is a dedicated federal minister for insurance reform that brings together all of the inquiries that have gone on to actually unpick some of these issues and say, okay, there were some great reforms out of ASBEFO's report, had 9 key recommendations in that one. We've had recommendations out of the Northern Australia inquiry. Let's bring them together and actually unpick these rather than add more weight to another report that adds more inquiries. Let's look at the recommendations that have been put on the table and unpick them further and where it actually can be influenced. The second part I'd say is, I think there's a threshold question that's coming through as well, is when is the point at which the cumulative insurance cost escalation is just unacceptable for business to actually be able
Let's
to
assume
operate.
we're there now. That's
And I say we're already there.
Yeah.
We're already there. We did an inquiry.
That's why we're looking at the absolute extremes of reform.
So I'd say we're there already. Businesses now, you're actually asking, can you even break insurance in the first place? So that brings a different question to it, and you've talked about market failure, Chair, on this one. And you'd have to say there is market failure, because if you can't get insurance and its cost and its actual weighting is not being considered on all these things, there's a market failure across the board. And it's not just about whether it's private or whether it's joint, there's market failure in just pretty much across all aspects there, about the system, the risk ratings that are happening, about the role of brokers are now being taken out of it in some reforms in New South Wales and other places. So again, it's unpicking the system as a whole. When people develop new regulations in this country, do they even consider about what does that impact on insurance? When they've changed our building codes and standards, it's now so costly, $562,000 in terms of the average new build cost for a home. So every time we add more codes and rules to this one, the costs are just going like this, and then insurance goes like this, and the ability to get insurance, and then when you actually have got an existing home, about 8 to 10 million existing homes in this country, which are the ones who face the biggest challenges when we have natural disasters, they're underinsured, have no insurance, and their rebuild costs are so far by what their actually coverage is. So the last point to your question is about if you blew up the whole system from a housing perspective. The one key insurance that we've had is about home warranty insurance, or whatever you call it around the country, and that is an insurance of last resort to ensure that your home gets finished if the builder dies, disappears, or becomes insolvent.
Consumer protection.
That's right. So, but over time, that has changed dramatically around it. Victoria's now moving to a first resort insurance. Queensland has a first resort insurance. But guess what? The QBCC, their biggest reports of complaints is about cabinetry timber, cabinetry installation, and about paint splocks. Really, should we be focusing our time on those things, or about making sure if the builder dies, disappears, or becomes insolvent, to ensure that the home can get finished? And that's what it should be about. These other things have just been risk mitigation and layers being added and added and added, and hence it's no longer affordable, accessible, and it also constrains what level of house building you can do, because you get capped at the amount of homes based on the monetary threshold. So people when we want to be boosting supply in this country in terms of housing, a lot of the time the builders get excluded from being able to do that because of the actual monetary thresholds.
So I don't know if you help me frame what a world without insurance would look like. What would be the opportunity cost of a homeowner investing that $3,000 to $5,000 annual premium into fire mitigation, etc., or some type of self-insurance model where the money goes into an account for the rainy day?
Yeah. So in terms of when does that last resort insurance get triggered, very, very rarely in this country. Very rarely. It's less than 1% of projects. So we are regulating for a very, very small portion around it. We see this on many things. We had this with the same thing with our mortgage delinquency in this country, 0.01%. But then you had to pay an additional $30,000 on lender's mortgage insurance, which added to the cost, then goes into the, over time, people are paying that off over the lifetime of their home loan. That's the first home loan deposit scheme, now called the 5% deposit scheme. That was introduced to remove that lender's mortgage insurance, which we designed back in the day with your colleague, the Housing Minister, Michael Suker, and has been expanded over time. But again, that was something that was never being an issue. but we were regulating and putting all those layers and caveats over the top of it, which was adding significant cost to consumers. So I think your question is right, Deputy Chair, is about how do we look at the system and reform it at a whole of government level, rather than we constantly just look at individual insurance components or schemes, rather than looking at the system collectively. We've always asked for a small business test when we're bringing new regulation and cost-benefit assessments. We talked to your small business minister colleague. We would think the same thing should be happening with insurance. Every policy should be looked at for the lens. What does it impact with housing supply? What does it impact for small businesses? And what's the impact for insurances on these things, rather than it being considered as an afterthought in the policy design?
The consumer's missing in that.
That's right, of course, the consumer's in that. Yeah.
Interesting. Anyway, I just wanted to get that on the record and get your opinion. Thanks, Chair.
Thank you very much, Mr. Buchholz. I'm coming to you now, Ms. Lawrence.
Thank you. And can you hear me okay?
Yes, loud and clear.
Lovely. Thanks so much, and thank you very much for your time. And I hear your frustration. I appreciate. I think you also participated in the flood inquiry done in the last term of the government as well. So I think your association is often engaged because you do provide such meaningful input into the policy debate. So thank you for that and for your patience and persistence in representing the members on this front. And to that end, I just wanted to the extent to which you've been able to collect data to better understand the. I know from within your submission you talk in particular about particular classes such as run-the-home warranty insurance, but I'm just trying to understand the extent to which you have line of sight to the different classes of insurance that your members are either having difficulty accessing or has become unaffordable or that they're no longer insuring against.
Yeah. Okay. Thank you for that question. We have just done it, and we can provide this as part of the Hansard, but just breaking down the different insurances. And I mentioned at the start in our opening statement, there's the mandatory insurances, then there's the quasi-mandatory, and then there's the ones for the business itself. But for breaking down, for workers' compensation, what we see there is it's mandatory if you're employing staff, of course, and the indicative annual cost is about $16,000 to $24,000. For home warranty insurance or domestic builders insurance or whatever it might be called around the country, mandatory above state thresholds, and that's generally about between $5,000 and $15,000. The indicative annual cost is between $6,000 and $20,000. Professional indemnity insurance, mandatory, where you're providing those designer certification services, $2,000 to $5,000. Public liability, $3,000 to $5,500. Contract works insurance, between $3,200 to $10,000. Plant and equipment. So this is where, for some of the other ones with the contract works, or where you might be tending for government work, like the HAF work or state government social community affordable housing, it may be an obligation to have certain types of insurance before you can tender for that work. That's what we call that quasi-mandatory. And then the other ones like plant and equipment, $1,000 to $3,000, commercial motor, $2,400 to $7,500, and cyber management liability about $1,500 to $4,000. In terms of accessing insurance, the documentation now to actually obtain insurance is becoming significant. New South Wales has made some fairly significant reforms around their home builders compensation fund, which has taken out the need really to have brokers who have acted as a very important role in trying to actually help you find the right pathway and the right type of insurance for you. And then also about when you're building in higher risk areas like flood, cyclone, bushfire prone areas, but that's pretty more for the insurance, the homeowners after it's been built. In terms of other ones we're seeing, so New South Wales is looking to introduce a scheme around apartment building and have decennial liability insurance, but there's not really a market for that in Australia at the moment. If it is, it's like a single provider. In Tasmania, they're looking to reintroduce warranty insurance. ACT, has a version of this, NT. So these smaller jurisdictions, what we see is there's a version of fidelity funds that exist there, which are very high-risk products because there's not a market for the insurers really to play in those spaces as well. So whilst the regulators might be wanting you to have a form of insurance, the product isn't there. If it is, it's very or it's got lots of exclusions in it. And lastly, I'd probably mention is our building certifier, building surveyor members have faced very significant challenges in getting insurances that meet their legal obligations post some of the cladding fires around the world, where there's now extensive exclusions in their policies for either a cladding exclusion or a non-conforming product exclusion. So essentially, state governments have had to make exemptions to their regulatory policies to enable them to have these exclusions because they can't get a policy without it.
Just to expand on that, so you've got a quantity surveyor, goes into a high rise, does a report. How is his insurance invalid if the external thing on the building is the cladding?
So this would be for building certified surveyors who are doing new projects, or they're actually, in terms of their yearly insurance. So they're saying you can certify that building, but if it's got combustible cladding on it, your policy would not be covering you for covering that component. So their policies are not allowed to have exclusions in them, but governments, because there's not a product available, governments have had to make exceptions to enable those exclusions in policies. So it's not a good outcome, and that was supposed to be a stopgap from when we had particularly the fires around 2017, but now it's become a permanent feature because the product, those policies haven't come back to the market.
Who's signing off on high-rises being made out of combustible cladding?
They're not signing off on them, but they're saying, our building code does enable people to be able to have either, limited combustibility products that you might see on them, but it's also just you're not actually covered for the cladding on that building.
Back to you, Ms. Lawrence.
Thank you, and thanks for taking the time to break all those different classes down. From that, and again, maybe one you might need to provide on notice, but have you got a sense from your members the extent to which you've spoken a little bit about some of the exclusions with the building external materials there, but do you have a sense from your members, one, about the level of coverage those insurance classes actually provides to mitigate against the risks that they are likely to have, versus where, perhaps, particularly like we were discussing yesterday in the hearing around cyber insurance, where there is a number of exclusions, or if you don't meet the requirements such as having multi-factor authentication by all your employees, then that immediately voids your insurance coverage. And so it's obviously a very specific example, but is there factors that whether businesses think they have coverage, but in fact when it actually comes to be tested, they find that their insurance is void or their claim gets denied? So just trying to understand the extent to which businesses feel that they've got the coverage or the risks that they're looking to insure, or they at least on the face of it think they do, and to the extent to which they've had net or denied.
Okay, I might give a general sentiment component first to that response to that question, and then I'll pass over to my colleague who's got a little bit more data on that one. But HA did a 2026 Small Business Conditions Survey report earlier this year, and in that survey, our members recorded that 45% of businesses have considered closing their doors in the past 12 months, which is deeply concerning, and 68% had considered scaling back due to the cumulative regulatory and cost burden, of which insurance was the primary and growing driver. And when we dug down a little bit deeper to that question, rising insurance premiums and access to appropriate insurance was the number one concern that members identified to that survey. So that probably even surprised us more than anything. We knew it was a growing concern, but you would think that it's skill shortages, rising red tape, access to shovel-ready land, housing finance, but rising insurance premiums was identified by them as a particularly growing concern around it. But I might, in terms of your specific...
Indulgence, Chair, and our friend Ms Lawrence, you describe it as their number one concern. Is it the number one concern, or is it the most common concern? Do you understand what I mean? Is it the number one issue which is potentially going to lead them to leave the business, or is it the most consistent material concern across all the businesses? Do you understand the distinction?
Yeah, good question. So we did a survey and there was a lot of questions in it. One was about red tape and about skill shortages and other things. Then when we went down to the more specific about of the concerns you've got, what are the different areas? Is it time to get planning approval? Is it changes to building codes? Is it of those ones, increases insurance costs, and accessing it was the one that they identified as of the line items in there. So I would still say that if I talk to my members around the country when I go around, skill shortages is still their biggest one for actually to be able to get their hands to build the homes. But from a running and operating of a business perspective, in terms of growing compliance burden, insurance was that one where we, you speak to most builders, if you want to mention and have a long chat, National Construction Code or energy policies is probably the one that they can chew your ear off for ages. This one come through higher than we have seen in other surveys in the past.
Okay. Back to you for the last question, Ms Lawrence. I think Ms Cameron wanted to make a contribution though.
I'll first just follow on from Simon's comments or Mr Croft's comments that we did attach a copy of the Small Business Survey report to our submission, so a lot of the details are there. And to answer your question, Senator, it was 72% of survey respondents that listed rising insurance costs as their primary concern.
It's not their primary concern, it's a concern.
A concern.
Sorry.
Forgive me.
Ms Lawrence, and then we'll go to Senator Scarr for the last set of questions.
And to answer the question, I believe it was in relation to the cyber insurance around some figures that we might have.
Sorry, no, it's just more broadly. More broadly about the extent to which claims are denied.
We will have
versus claims paid out.
Yeah, we'll have to take that on notice to provide that granular detail. But I do happen to have a figure for cyber insurance in particular. So 71% of sole traders are reportedly lacking cyber insurance coverage.
Thank you. And Chair, if I can just ask again, perhaps one on notice, but if you have any data that sort of shows how we are as a sector compared to, say, like the US market, like in terms of the different insurance categories that the construction sector is looking to take out, the pricing points, and just trying to get a comparison to another jurisdiction, doesn't have to be the US, but a comparable jurisdiction, just so we've got some sort of benchmark as to where we're placed relative to other comparative countries, particularly with those going through a significant housing build the way we are too.
Mr Croft?
So thank you, Ms Lawrence. We actually, HA is part of an international housing association, which has United States, Canada, Japan, Norway and the UK, and there we're actually hosting a meeting here in Melbourne in a couple of weeks' time. So I will ask that question because most of the time when we have these conversations, particularly with Canada and the UK and others, it's pretty much insert country here in some of the same challenges on skill shortages, access to land and insurance and things like this. In terms of a broader piece, in late last year I went over to Japan and we did a tour around their flood mitigation strategies that they're undertaking over there, and mitigation, adaptation, resilience, design of community infrastructure is in stark contrast to what we do in Australia, where it's very much at a building or household level, where there they do it really as, if you could think of work health and safety, where you have a reverse or an inverse of a pyramid, where you have eliminate the hazard, isolate, substitute engineering controls and things like this, where Australia we go straight to the household level, where they look at it at a community level. And therefore, whilst that's a lot more cost up front in designing communities, they are having significant results out of that in terms of flood mitigation, that when they have things come through now, individual households are getting very limited damage. So they're doing, widening of rivers and things like this, designing large-scale piping and stormwater systems. It's part of design of suburbs, and they're doing it in established areas. So their Tokyo Olympic Stadium is part of their flood mitigation for the surrounding suburbs, where we do a lot of the sandbags after the fact, and we do a lot of payout after the fact. We do a lot of, where we do it, and then we look, let's change our building code. We've been reviewing our bushfire standards and our flood standards and our cyclone standards for the last 25 years non-stop. We're struggling to find things to change there. Whereas they're looking at very much at the system-wide level, and that's where we're falling short in Australia and how we design and think about some of these considerations.
More engineers and fewer accountants.
That's right. Yeah.
Interesting model. Thanks very much, Ms Lawrence. I'm going to go now to Senator Scarr for a short block of questions.
Thanks very much. If I can come to your survey again, which I think's really important piece of information. You've got a state-by-state basis considering the current pressures currently facing your small business, and I was just looking at the insurance aspect. So rising insurance costs are nominated as a current pressure facing small business or members by 72%. But there's a big difference between Victoria, 86%,
yep.
New South Wales, 79%, Queensland's only at 51%. Yep. Do you know what the reason is for that?
So we had a very large percentage of respondents from Victoria, firstly. There's probably, and quite a bit of frustration from the Victorians, as you could probably see and feel and you hear in the media
Sure.
as well.
Sure.
Victoria's going through very substantial insurance reforms at the moment.
Okay.
So some of this follows some of the insolvencies here in Victoria,
right.
But there's also broader consumer protection work. They've just introduced a first resort insurance into Victoria rather than the last resort. That's only just come in recently. Also, they've done a new developer bond scheme here in Victoria. So there's very substantial reforms happening while we were talking about that in our survey.
It was front of mind. Trigger for them.
Okay. And they've had significant insurance premium increases over the past 2 years. We've got some examples which we can provide on notice.
Sure. But
some Victoria's had pretty much the last 3 years had very significant premium increases year on year, like 53%, 46%, and now we've already seen it come in with this new insurance. So it's probably in terms of that survey, it had some sentiment side to it, and the Victorians were, across the board, were very active in their responses.
Okay. All right.
I wouldn't say it's
But even then, if you exclude Victoria as an outlier,
yep.
because of the current issues, you've got, well, maybe New South Wales.
New South Wales is also going through very substantial reforms as well, yeah.
Okay, but Queensland's still doing, it's still materially less of an issue in Queensland than it is in South Australia, Western Australia, Tasmania.
Yeah, I think probably, as I said, those two states have got massive reforms underway, which have been talked about a lot through our membership. Queensland, I wouldn't say it's because it's operating effectively well or anything like that. It's probably just there hasn't been major changes that have occurred through there.
Okay.
There has been quite a bit of the QBCC has had a bit of overhaul over the years, but their scheme has been in place now for a while. But if you went up North Queensland, obviously there's different challenges.
Yeah.
The reinsurance pool has been well received up there in trying to lower premiums and just access to insurance. But yeah, that's probably, I wouldn't read too much into not as many respondents from Queensland as to other states.
Okay. Well, page 8 on HIA's survey results for 2026 is horrifying.
Absolutely.
Absolutely horrifying. I mean, we're in a situation at the moment where there's a chronic national housing shortage. Targets have been set. We're falling behind meeting those targets. And when I look at page 8 of the survey, answering the question, have you considered scaling back or closing your business as a result of red tape and compliance burdens? 68% of your members have said yes in the face of a chronic shortage in relation to the services that they supply. That's horrifying, isn't it?
It is. A number of the statistics across this survey were extremely sobering. You know, I think this one probably doesn't get as much attention, but do you anticipate that your business will make greater profit this year than the year before, with 60% saying no? So what if you're not waking up and think that you're going to be able to run a business and be doing better than the year before? What's the motivation to wake up? You know,
and in our biggest states, New South Wales, it's 63% say no. Victoria, 66% say no. The ACT, 88% say no. And again, this is in the context where there's a massive shortage in relation to the end product which they're providing.
Yeah, absolutely. And
so you'd think if the in a well-functioning market, what you would expect the answer to be is, of course, I expect to make more profit next year because there's so much demand for my services.
Yeah, and we know, the government, to their credit, have set out a target to build 1.2 million homes by the end of 2029, and that's just to put a dent in our housing affordability and supply. We need a far larger supply of housing than that, and that's 250,000 we need to be building year on year, every year. We've done some analysis on skill shortages, and to meet the 1.2 million homes target across our top 12 housing trades, we're at 83,000 shortfall of trade. So the Melbourne cricket ground just down the road, that's every single one of those seats is empty that we need to be filling with workers into our industry. And in our survey, the results say that 73% of people are not expected to employ more staff this year or in the next 2 years. That's extremely concerning when we are facing such a significant shortfall of workers.
So how many homes did your members build, say, last year? Just a ballpark figure.
Yeah, so our members build about 85% of all homes in the country. We then are forecast to build about 195,000 homes this financial year.
So your members are absolutely fundamental to us meeting that housing shortage, which has been recognised by everyone, all levels of government, all political parties. It's recognised as a major national imperative to fix it. And yet you've got 68% of the members responsible for building 195,000 homes a year are saying they're considering scaling back or closing their business. It's horrifying, isn't it?
It absolutely is. And that's why we did this survey, to shine the light on how concerning some of these matters are, and about, for small businesses made up 97% of our industry. Most of them are micro businesses.
So if we come back to a fundamental question about the provision of housing and the quality of housing. You mentioned in your opening remarks how many inquiries are on about insurance, and the nature of the rising requests for different forms of insurance is arising as a response to failures in the market. I expect generally not from your members, but from others in the sector who have created undue risk for the purchasers of those products. and I'm thinking in particular of some in inner Sydney that I'm aware of because I'm from New South Wales, where they were, built with incredible faults and no capacity for people to actually live in them, with huge debts in an unlivable property. That's just one example. So that's a complex story that we're talking about, all of those things. And every time something goes wrong, the community that elect all of us and our state colleagues and the local councillors say, we can't have this happening to Australians. So we've got this sort of layering as a response to the failures. That is a part of what's happening with the pricing as well. It's not just the multiplication of compliance elements, it's not just the multiplication of insurance products that need to be acquired to comply. It's what we're facing in other sectors, a deprofessionalisation, a lack of professional acceptance of responsibility by particular builders. That's a really heady mix if we go back to that part of it as well, the moral dimension of building a good product, charging a fair price, because when that doesn't happen, it undoes the business model for everybody else who's doing the ethical thing and building a great sustainable product that they're proud of and they bring their kids to see, etc. Right? So I guess the complaints about increasing compliance don't come from nowhere. And I'm worried about increasing burden of compliance with the recommendations from this committee, right? So what does a less burdensome compliance model that actually addresses the fundamental risk to Australian consumers look like, at the same time as it provides a sufficiently robust business model for businesses to thrive? We've got to do all of those things at once. Right? And that's a different proposition from how do we just change insurance, right? Because this is part of that whole mix. So I guess think on it. If you can't give me a response immediately, have a think about what a more holistic response to the entire frame might look like. And I urge you to give us something that doesn't further create burden and further compliance, which you have very ably described. Yeah.
Thank you, Chair. There's a couple of bits to unpick on that one that I'll just firstly mention about. There's been a lot of building reforms that have gone on post some of the, particularly the high-rise fires and other things that have happened. Our members generally do work in the low-rise detached housing space where there is a lot of those insurances. Once a building's over 3 stories, there's generally not those same insurances. It's not a requirement and there's no product available, hence New South Wales looking at decennial liability insurance. So in our space, as I said, there's that insurance to ensure the home gets built. But there has been a number of reforms to the high-rise, the Shergold-Weir report that was done in 2018, and the Building Commission in New South Wales, Victoria's been going through a whole range of reforms as well. So again, this is where the interaction and the interplay with different sectors and for different components of insurance, consumer protection.
Which comes back to your recommendation about a dedicated ministerial responsibility.
That's right, exactly.
For that, and a
whole
of government, a whole of industry, whole economy task force to start to tease out a very wicked problem that's growing like topsy every day.
Yes, that's right.
Okay.
And that's what I was going to land on, was that exact point. Was about
back to your beginning. I was listening.
Yeah.
I think we are out of time.
Yeah.
We're a little over time, in fact. So can I thank you for your evidence today, invite you to provide us with anything further that you think would assist the inquiry. And if you can, take my question on notice as a bit of a thought about a holistic.
If I may just give a very, very quick final piece, is we'd mentioned earlier about rebuilding in natural disaster-prone areas. As I said, we're still seeing work being done in 2017, 2018 from the fires down there. That also adds significant strain to business as usual work in those areas, as well as the costs For insurance work, for just say I do a roof on a normal home, that might be $7,000 or $8,000. For reinsurance work on a roof is something like $30,000. So there's also a workforce pooling piece here about how much that adds to it all. And Bruce Bilson mentioned that similarly with the automotive area. We see that has a big impact in our sector as well on business
Maybe
visual
you
work.
can explain that for us in writing in some way. So a roof is a roof is a roof.
Yeah.
If it's 7,000 or it's 30,000, I don't exactly understand why that would be the case.
No.
So thanks very much for being with us
And
today.
also give some thought to which insurances we can.
Yes. Okay, thank you.
That concludes this session, and the committee will suspend until 3:15. I now welcome the Law Society of South Australia and the Law Society of Tasmania. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, will you please state your full names and the capacities in which you appear today?
My name's Anthony Kerrin and I appear for the Law Society of South Australia today.
Thank you very much, Mr. Kerrin.
My name is Luke Weinberger and I appear for the Law Society of Tasmania.
And in what capacity?
I'm the Executive Director
And
of
Mr.
the
Kerrin?
Society. I'm a committee person on the Accident and Compensation Committee, representative.
I now invite each of you to make a short opening statement, and then there will be questions from committee members, starting perhaps with you, Mr. Kerrin.
Thank you, Chair. Yes, the Law Society of South Australia greatly appreciates the opportunity to submit a paper initially, albeit a brief one, but a lot has already been said by the time that arrived. Secondly, to speak today, the views of the Law Society of South Australia, representing about 4,200 professionals, come from all walks of life, both plaintiff and defendant. The ACC, the committee on which I am a member, has a balance of practitioners from each side of the litigious fence, which is a good thing. In essence, at the end of this brief opening, the Law Society of South Australia agrees with the executive summary of the Law Council of Australia, paragraph 5, the last sentence, which says, the Law Council considers civil liability settings and processes are broadly appropriate and that are primarily a matter for the states and territories. We agree with that, but we go a little further to say, and we have seen other submissions, that the evidence before the inquiry to date is not complete and will affect the ultimate policy settings and recommendations that the inquiry will make. And I'm happy to answer questions on that topic. We also say that there's no evidence of a litigation explosion, certainly not in South Australia, and the suggestion that I've seen regarding that Australia is becoming more litigious than the United States of America or America is also without foundation. And again, I'll come back to the data issue. The problem is that faces, and it's a serious problem, which the Law Society acknowledges, and it needs to be addressed, and of course that's what the inquiry is about. But we do say it's a multifactorial thing, and a phrase that is interesting that I've read was the decomposition of premiums, which I think was referred to in the Economist report from Mr. Liveris. It is a multifactorial matter that the inquiry needs to face and not rush to judgment on suggesting that tort reform is the obvious answer to it all. That is essentially what we will be saying, or we are saying, and we would ask that very great scrutiny be given to that submission. Thank you. I'm happy to take questions.
Thank you very much, Mr. Kerrin. And now over to you, Mr. Reinberger.
Thank you very much, and yes, thank you to the committee for the invitation. I'm here today to speak only about professional indemnity insurance in the context of the Tasmanian legal profession, and in particular the PII scheme that the Society administers. The legal framework for the scheme is based on the Legal Profession Act, which says that barristers and law practitioners must obtain professional indemnity insurance, and that the Society can make rules with respect to claims in respect of civil liability.
Mr. Reinberger, can I just stop you for one moment?
Yeah.
And the same question to you, Mr. Kerrin. Are you speaking into a speaker of the phone, or are you speaking into the handset?
I'm speaking into Apple earbuds.
Okay.
I'm speaking into a speaker. I'm happy to change that.
No, Mr. Kerrin, that was you, the last contribution, wasn't it?
Yes.
Yeah, I can hear you quite clearly. I'm having trouble discerning what you're saying, Mr. Reinberger. So,
I'll let you change to the. I'll take my earphones out and maybe change to the speaker on my phone, or speak directly into it. Okay.
Is that better?
Absolutely. It's much crisper. So if you could
All right.
proceed, Mr. Reinberger, thank you.
Thank you. Yes, the Society has made indemnity cover rules, rules of practice, and that says that the Society may enter an agreement with an insurer for the operation of a scheme, and that firms are required to take out cover under that scheme unless an exemption is granted. It's important to note that we're talking here about law firms, not, for example, about barristers or community legal centre practicing certificate holders. And so under the scheme, the Society, through its brokers, negotiates annually with an insurer or insurers. It reaches an agreement on premium and then collects the premium from its law firms during its annual practicing certificate renewal process. In terms of management, we retain brokers who generally deal with the insurer and seek expressions of interest if we go to the market. We retain a local claims advisor who is a sole practitioner on retainer to the Society, and that claims advisor provides firms and individuals advice on claims, potential claims. She receives notices of claims and briefs panel firms to appear. So that's our PII scheme in a nutshell. It's also worth noting that the Society provides to all firms covered under the scheme with a foundational cyber risk policy also, which covers firms to a maximum of $50,000 in respect of cyber claims. Thank you.
Thank you very much, Mr. Reinberger. And just to make sure we're on time for our international call to Lloyd's, I'm just going to indicate we'll stay with you till 3:55 and then we'll move to the Chamber of Commerce for South Australia and the Northern Territory. So we have till 3:55. If I can ask you to kick off our first block of questions, Senator De Liga, and then I'll go to Senator Scarr to complete that set. Thank you. Senator De Liga, you have the call. While we see what's going on there, we'll take the call from Ms. Senator De Liga and give it to Senator Scarr.
Thank you very much, Chair. I might first just start with the insurance cost, which is met by lawyers, and I think we should remind ourselves that lawyers wear several hats with respect to this inquiry. They, of course, have their own, in many cases, small businesses, which have to procure insurance, and that includes professional indemnity insurance. So I might just start with you, Mr. Reinberger, and then I'll ask Mr. Kerrin from an SA perspective. But what have there been any material increases in professional indemnity insurance in Tasmania over the last 5 years, or what are the sort of annual year-on-year increases are you seeing?
Well, we've had the same premium for the last 3 years.
Okay.
Luckily enough, so we've been pretty steady. And so, in effect, of recent times, there has not been an increase for professional indemnity insurance costs.
Okay, and Mr. Kerrin in SA?
Yes, Senator, I can confirm it's been a very similar position here, and it is a well-run scheme, which I don't believe there's been a significant increase for some time. I couldn't tell you how many years, but I can certainly find out. But very similar experience as described by my learned friend.
So why is that? Why? So I'm just speculating here. So we're taking evidence from a whole range of different industries and sectors who are facing mounting insurance premiums, but the schemes which are run by the two law societies seem to be quite very well managed, and premiums are not going up, certainly nowhere near the rate the premiums are going up in other sectors. What would you attribute that to, Mr. Reinberger?
I think it's a number of factors.
I think with a captive market as we have, we can educate our practitioners, which is a very important thing. We're lucky enough that we go to the market, unlike South Australia as a general rule, but we have a good relationship with our insurer. I think having our own claims advisor locally makes a difference for us. But in the end, it comes down to actuarial figures, a lot of it. And if claims don't go up and payments from claims stay fairly steady, so does the premium.
Okay. And Mr. Kerrin?
Similar reasons here, I suspect, although I defer to Mr. Reinberger's experience in that area more than my own. But nonetheless, the education process is extremely important, and it is taken very seriously by the unit that governs that and premiums in South Australia. Again, I don't believe there's been any huge increase in claims over the years. I think that they too are reasonably steady, although that can be not the complete answer. It is certainly a factor. And it's a well-run system. I think those are the remarks as far as I can make out in terms of the South Australian scheme. Can I possibly just add, if I may, I think the fact that we're talking about schemes is important. So for my smaller jurisdiction, with about 590, 600 practitioners insured, having a scheme means that risk and means that claims data is aggregated. So we're talking about the whole of the profession being insured, as opposed to, in my case, 165 separate businesses all going to seek insurance from different insurers who provide different premiums. If one business has 2 claims in a year, then premiums inevitably go up. That doesn't happen with a scheme, and that's the real advantage of the scheme. Thanks.
Okay, understood. Okay, I'll just move on to the broader question then. And Mr. Kerrin, to summarise, as I understood your opening statement, you acknowledge that different stakeholders, including the Insurance Council of Australia, I should add, have raised the issue of tort reform, as it's referred to, civil litigation reform, as something which needs to be looked at. However, from your perspective, from the profession's perspective in South Australia, it is of key importance that before any decision were made or any recommendation were made by this committee, it would need to have the benefit of all the data, and at the moment we don't have that. We shouldn't rush to judgment, and it's a very complicated issue, and you described it as multifactorial. Is that a reasonable summary of your evidence?
It is, Senator. Yes, I agree with that summation.
Okay. Mr. Reinberger, from your perspective, I know you wear a bit of a different hat, but would you agree with that general proposition?
I don't disagree with it.
Okay. All right. Mr. Kerrin, you said that, and this is of course right, we have typically the legislation dealing with civil litigation is dealt with by each of the individual states and territories. Having said that, there is an ability, though, isn't there, for us to consider, and we've had the benefit of travelling Australia and having hearings in different jurisdictions, there is an ability, isn't there, to consider what different processes are in place, what the processes are in place in different jurisdictions, and to the extent that those processes are working or having some positive benefit, to give consideration as to whether or not there could be a national benefit in terms of those procedures being looked at in other jurisdictions?
Yes, Senator, I absolutely agree. The law is not static, sometimes slow, but it changes, and there are processes, and indeed South Australia has adopted some already. I think there's a fairly well-known scheme in Queensland. I'm not overly familiar with New South Wales, but Victoria has its TAC or DAC protocols, and I understand they work reasonably well. So the answer to your question is yes, and certainly South Australia is not averse to looking at those matters to create, if possible, some uniformity that doesn't necessarily diminish rights, but increases efficiency.
Yeah, exactly. And it isn't, from my perspective, it's certainly not about taking away rights. It's increasing efficiency and making sure that where there is a valid claim, that's processed as quickly as possible and the claimant receives the compensation which they're due in accordance with law, and that process happen as quickly and easily as possible. Mr. Kerrin, have you had an opportunity to have a look at the submission made by the Queensland Law Society?
I saw, yes, I did see it, yes.
Right. So I'm interested in your, and maybe you can take this on notice, and maybe Mr. Reinberger, you could take it on notice as well for the relevant panel of experts in Tasmania to consider, but they go through a number of elements of the Queensland system, and I'll just raise one in this context because I'm interested to see, to hear what the practice is in South Australia. But one of the issues they believe, and very experienced practitioner gave evidence to our committee in Queensland, one of the things they're finding is working in this area and has worked over a number of years is having a pre-trial conference involving the parties as soon as possible and the exchange of evidence at the earliest stage possible, including the exchange of medical reports, etc., so that the greatest opportunity is given to try and settle or resolve matters at the earliest stage. Does South Australia have a similar sort of process?
It does, Senator. It's called a pre-action notice or pre-action procedure. It's not given the same name, but it's to the same effect. You produce a claim, you set out why the opposition's liable, and I practice mostly as an applicant or a plaintiff lawyer, and you attach your evidence, the medical reports, the information as to why they're liable, and then you wouldn't necessarily deal with the issue of quantum at that stage, and I'll come back to that. And then the opposition or the other party files an answer to that document, and then there is an actual meeting that has to occur under the rules. Sometimes it's effective, sometimes it takes time. One of the factors that I think I haven't seen highlighted, but delay in personal injuries and work cover cases for that matter can often be due to the lack of stability of the injury, and so that a proper legal assessment can't occur at that time. That's a factor too that I think I haven't seen a lot of mention of it, but it is something that needs to be borne in mind. But yes, we have a similar procedure.
Okay. And in terms of that pre-action conference you refer to it as, is the defendant obliged to, in their response before the actual meeting takes place, to provide details with respect to their evidence?
Not so much their evidence, but they will refer to some. They will certainly set out their position and why they're not liable, which is very handy to know at a very early stage. And again, it does speed up the process. And whilst there are still occasions where that can't occur with efficiency, someone sees you a month before a time limit runs out or something of that kind. Overall, it's been a positive development in South Australian procedure.
Okay. Well, look, I might, if I can just ask each of you, just take on notice. I'm interested, if you wouldn't mind, and it's giving you some homework to do, but if you've got any particular comments with respect to the Queensland Law Society submission, and any further thoughts with respect to whether or not there's an opportunity for there to be, and I don't know what the appropriate forum would be for this to occur, maybe the meetings of the Federal Attorney General and the State and Territory Attorneys General to consider whether or not, since the last wave of civil law reform in the early 2000s, there's a potential for for us to consider what different states and territories are doing and roll out. If something's working in South Australia, well, it should work in Victoria or New South Wales. And we've got the benefit of experience in terms of seeing how it's worked and making sure that it's not taking away people's rights, as you referred to, Mr. Kerrin, but promoting efficiency, which has to be good for the system. Is that something you could both do, or both societies could do?
Certainly, yeah. Yes, Senator.
Okay.
Thank you.
Okay, thank you.
I'm just going to check and see of which of my colleagues remain online. Ms. Lawrence, are you there?
I am, thanks.
Mr. Moncrief, are you there?
Yes, thank you, Chair.
Thank you. Senator De Liga, are you there?
Yes, I am, Deb.
Oh, fantastic. Thank you very much. So we'll go straight to you, Senator De Liga, and Mr. Reinberger is here from the Tasmanian Law Society.
I don't have questions for this panellist, mate. Thank you.
Okay, no problem. We'll go to you, Ms. Lawrence, then. I know you have questions.
Thank you. Thanks very much, and thank you for the time in preparing the submission and your time to give evidence today. I just want to follow on a little bit further from Senator Starr's line of questioning around your scheme. Firstly, how long has it been in operation for, and how did you attract the capital to underpin it?
Gosh, the scheme's been going for about 30 years, and it didn't require capital because we simply insure in the market. So our current insurer, for example, is CGU. Before that, CG Bureau for a number of years shared the risk 50-50, and before that it was QBE. So it's not like the South Australian, for example, scheme where they, in effect, insure the first part of any claim. So we didn't need capital, other than to raise the premium every year, and that's done by on a per practitioner basis that we collect it every year. Similarly, in South Australia, we collect premiums from practitioners, and Mr. Reinberg probably knows this better than I do, but it's also been around for at least 30 or 40 years, most of my time in any event. So that's how that is proceeds.
So that would mean in both cases then you'd be exempt from the requirement to hold an Australian Financial Services licence under the Corporations Act, because you're not technically offering a statutory insurance scheme. Like, would that be correct? You're not regulated under the Insurance Act or under the Corporations Act for that purpose?
Yeah, that's right. From the Tasmanian perspective, the regulation, the insurer is certainly regulated.
Yeah.
We don't offer that insurance product.
Right. And so because membership is essentially compulsory,
yes,
how do you convey to members then that, because there isn't a failure in the marketplace to acquire, professional indemnity and the various other insurance categories, but so there isn't a market failure there. So how did you manage to arrange it so that it was compulsory for lawyers to be a member of your mutual when there isn't a market failure, where they could potentially get their own pricing and insurance coverage?
It's topical you asked that. I saw an article this morning about a group of lawyers, I think in New South Wales, who are challenging that they have to insure with the local New South Wales scheme or body. In South Australia, it's joined in with the issue of membership and all the benefits that go with that. And to be a member, you have to have the insurance. So it's been made more palatable, if you like, just having to pay the premiums by making it a bigger picture than just liability insurance. I think that's probably the answer in South Australia. Look, I can't say whether the genesis of the Tasmanian scheme wasn't from a market failure. I'm afraid I don't have that corporate memory. So that is a possibility that is where it stems from. I can say, though, that we do grant exemptions from the scheme. And as a general rule, that's to firms who are based interstate but have a Tasmanian office. So it's not every firm that must insure. We don't make firms doubly insure, if you like.
So has there been contemplation to, say, join up with the WA Law Society and to basically build the mutual base to have even more of a competitive offering? Or what's the rationale for having it jurisdiction by jurisdiction?
Cost is my understanding. That was looked at a few years back when the uniform laws were coming around the country, although they're not uniform, nonetheless. And it was found to be that it just wasn't viable for some smaller states, including, I think, South Australia and possibly Tasmania. I'll let Mr. Reinberg speak to that. And so it was far more competitive and cheaper to do it individually, as South Australia has done for some time. And Mr. Reinberg's triggered my memory. I think, in fact, I wouldn't call it a market failure, but back in the day before it started, it was difficult to find insurers who would take the risk at competitive prices. The work was done, and as I understand it, the scheme grew out of that from back then.
And just before I'm cutting you off there, no, just to try to understand that further, how is it that for law practitioners there can be such a price differential across jurisdictions? Is it because the state laws, what's the exposure differential against professional indemnity?
From one perspective would be both Tasmania and South Australia would be probably the smallest other than the Northern Territory Association of Lawyers, I'd say. The ones in the eastern states are very large. That would be a big factor, I'd imagine. I'm no expert in that area, but I can see that.
Okay, so it's just because of the volume of practitioners who are actually having so in this case, it may actually be beneficial to have a smaller mutual because your exposure just, okay, interesting. And then so we've heard from different witnesses an interest in seeing whether this kind of model could operate in other sectors, such as in the hospitality and hard-to-insure sectors. Are you surprised that there aren't more associations who are not driving a similar model as the law societies have done? Does it surprise you, given it's clearly a model that works for your members?
From my point of view, I think the breadth of, or the number and the volume of people makes a difference. And also, I think the point Mr. Reinberg earlier about the captive market and in those other industries you mentioned, there'd be people far and wide who would want to try their luck, I assume, on the open market. That doesn't seem to be as attractive to the professions, and particularly from South Australia's point of view, the lesser volume or number of practitioners. Surprising, yes. I think, and to go back a couple of questions ago about why different states have done it themselves, I think that's just a historical, cultural thing that we are a federation of separate state-based organisations, and that's the way that insurance has proceeded. I think it's also important to note that law cover insures not only in New South Wales but ACT and the Northern Territory as well. So they're across states and other sectors not doing it. It perhaps is surprising, but I think the legal profession has benefited from the fact that historically
our lawyers must be insured and must be insured to a certain level, monetary level. And so I think that has helped get schemes up and running.
Thank you, and Chair, if I can just squeeze in one more.
Yes.
Have you got data that, and I'm happy for this to be on notice if necessary, that helps us get line of sight to the extent to which claims are made and to what extent it hits or exceeds the cap of liability that you impose on your schemes?
Senator, I'll have to take that on notice. I couldn't answer that today. I'm sorry. Happy to do so, though.
Certainly got data with respect to claims made and the value thereof, which is another great advantage of having a scheme. We've got 25 or 30 years of data that covers the profession.
That'd be really helpful because I think, there's certainly a push for consideration to talk law reform, but it's a case of understanding the extent to which it's actually needed if the caseload hasn't really shifted dramatically over especially if you've got that extensive period to look at. It's quite interesting to understand that. Thank you. Thanks, Chair.
Thank you very much. Could I just get some data from you on the public record? Your opening remarks and your submission indicates that this claim that Australia is now profoundly litigious doesn't accord with your perceptions. In a data poverty situation in which we find ourselves, we have very competing narratives around this. So what do the real numbers look like, including the ones that we seem to find very difficult to access, which are the ones where settlements occur perhaps on the steps of the courthouse when and no one knows exactly what happened at that point? Can we start with you, Mr. Kerrin?
Yes, Chair. The point that starting where you ended off, the point about how things resolve and what needs to be considered, and not just those factors, but a breakdown of the insurance, claims costs, reinsurance, acquisition, the premium decomposition definition put forward by the economists is very important. But to give you an example, in South Australia in 2015, our CTP scheme, our motor vehicle personal injury insurance scheme, was, I would say, reduced in damages markedly. The right to sue is still there, but damages have been reduced by various mechanisms, through Parliament, of course, through the will of the people, but nonetheless, it took until, I think it was 8 years before a decision on the new provisions went through the courts. Everything was being settled, all claims were being reduced. And I can also indicate that in the last, and there is a CTP regulator in South Australia, in the last report, a representation of people injured whilst the collisions hadn't gone down, the people represented had reduced to 25%. Prior to the changes, it was double that or thereabouts. So there has been undoubtedly a reduction in some costs, but again, you have to look at that 25%. Obviously, you can have one or two cases that skew the figures. And most recently, we had a case where, and it included more than damages for personal injury, which is another complication. You have to actually look at what the claim was about. But at the judgment of $2 million, in excess of $2 million, was reduced to about $300,000 on appeal. So there are so many different factors, it makes it very complex. But certainly to suggest that litigation is increasing, that's not something that even the data that I have seen in this, I think it is at the ROGS committee, there was a reference to a report from 25-26 from 2021. Excuse me a moment, I'll find that. So in civil lodgements in the District Court of South Australia, and most of the civil proceedings are in the District Court or in the Magistrates Court, but they went from about a level of excuse me, sorry, a moment, from about 1,210 lodgements in 2020-2021 to 1,136 in 24-25. That's not a big increase. In fact, it's a decrease. But again, it's not the total picture, because those lodgements would have included all civil lodgings, not just personal injury work. It would have been commercial as well. But nonetheless, the trend doesn't show that there's any explosion in litigation in South Australia.
Were you interested in adding anything to that, Mr. Reinberger?
No, I'm not in a position I'm able to. I'm sorry.
Not a problem. Earlier today, we heard from a representative of a nightclub here in Melbourne. Her name was Miss Martha Samus, and she spoke about 2 claims that have been brought against her business, and the need to report them to insurance companies meant that even though one was dismissed, and she expects the other one to be dismissed since they found the video evidence to refute the claim, means that reporting has increased her insurance premium, in addition to ongoing escalating costs which are related to property valuation plus other, general rises in insurance costs. What's your view about the intersection between, claims being advanced and the insurance industry?
And perhaps, Chair, if I can just provide a bit more colour to that question. And Mr. Kerrin, I'm a lawyer by background, so I guess I see things in a certain way. But some of the additional context in relation to those comments was a frustration on behalf of the owner of that nightclub that the insurer had taken over management of the claim, and the insurer had made a decision to pay a certain amount to cover the plaintiff's costs, although it appeared that there wasn't any, on the evidence we received earlier today, any payment made to the plaintiff themselves. So the matter was resolved, the first matter was resolved, but a frustration on behalf of the business owner that the insurer took over management of the claim and made a payment to the plaintiff's lawyer for their costs, where the owner of the club thought that was inappropriate. And the second matter, and this comes back to your point, Mr. Kerrin, I think about the effluxion of time, a frustration that they have 24/7 video recordings or cameras watching what's happening in the club, and there's a cost involved in keeping that evidence. And if a claim is made after a certain period of time, even though the event occurred, say in January one year, but the claim's not made until January the next year, they might have lost the footage of their ability to defend the claim because they only keep the video footage for a certain period of time. So a bit of a frustration in that regard. And in the second case, the evidence we heard earlier today was once they did find the video coverage, and that provided a very strong defence to the claim. So those were the frustrations. That's some additional context to the question from the chair. So hopefully you find that helpful.
Thank you. Yes. The Chair, can I ask again what the final bit of your question was? I'm sorry.
I can't even recall now. It's a while ago.
I was trying to be helpful, but
I appreciate
the argument.
She had a $60,000 cost that won't get recorded.
It was the increase to the premium. So it's
the increase
intersection between the insurance agency, the insurance company, and kind of the sidelining of the owner of the product, and also a flow-on effect of an increase in premium when the matter is still on foot.
Yes, and that is one of the matters that I'm glad the inquiry is looking at, because you do need to ask the insurer in a case that is, let's say, without foundation or it can be dismissed in due course. I mean, I'm not sure why that would necessarily result in an increase in premium. I'm no economist, but those sorts of questions need to be answered by the insurer.
Karen, I don't think the economy has much to do with it. It just seems there's a lot of power that's operating in this kitchen, and prices vary without any rhyme or reason, it would seem.
If that's the case, then that's not how it should be, is it? If there's no increase in any risk analysis, as I understand it, from a lawyer's point of view, then you wonder why that justifies an increase in premium. I guess in the capitalist world you shop around, but there may not be a lot of other alternatives. But yes, it is an anomaly. And in terms of the evidence rule, I think one of the good reforms that has been in existence for a while now in some states is having to give notice of a claim. Not change the time limit for bringing proceedings, but just notice of a claim within a certain time. That may do away with some of the prejudice that occurs where film and the like is lost. Does that help, Senator?
It does. I just think that there are so many problems with this sector that we're going to have trouble pulling together a really cohesive report that covers the entire economy where there's incredible variation. I've got one final question from Senator Scarr.
No, and I should say, Chair, we're lucky we're under your leadership in that regard.
Oh my goodness.
So the other point that was raised by the nightclub manager was that she put forward the proposition that perhaps there should be limits on those who can make claims on the basis of the proportional percentage of injury. So I'm interested to know in a SA context whether or not there are any caps or that have to be exceeded before a claim can be brought. So the figure she provided us was people with minimal injuries, perhaps at a level of 5%. That was, from her perspective, that was too low, and that needed to be increased up to 20%. That's on the basis of her evidence. So interested in any thoughts you have on that.
Sure. The system in South Australia varies depending on whether you're bringing it in a public liability context, a motor vehicle context, or a work cover context. There are different hurdles you have to jump in each of those jurisdictions to bring a claim. In the work cover, the refinement of the test about arising out of liability over the last decade has narrowed the field. I won't say considerably, but certainly has made it harder. In the motor vehicle collision, there are caps on all sorts of damages that you can recover. There's also the interest component where we have a 5% discount factor. In most states it's less than that, which diminishes the return on damages and not in accordance with real-time interest discounts. And in the public liability sector, it's probably the easiest of the three to bring a claim. But having said that, it's certainly not easy. And there are exemptions that flow for which grew out of the IP reforms. For example, councils in South Australia have exemption from quite a few areas of liability, footpaths, slips and falls and the like. So whilst there are caps and there are limits that already exist, and in South Australia, I'm of the view that it's not out of proportion with the right to bring a claim. And it is also the case that the courts are equipped with various mechanisms to deal with spurious or claims without merit, and they do so not infrequently. And it's also an incentive to conclude a matter if someone were to bring such an application. So I think there are a number of things that do operate in the field to assist in dealing with the sorts of claims that the Chair was talking about.
So from your perspective, the checks and balances are already there, at least in an SA context?
Yes, I would say that.
Okay, thank you.
Thank you. And if there was anything that you would like the committee to know upon reflection after you're giving evidence today, we'd be happy to receive that.
Response to the Queensland Law Society.
And there is a question on notice from Senator Scarr with regard your professional view of the Queensland Law Society submission. Could you provide those to this committee? The Secretary will be in contact with you. And the date for submission would be Tuesday, the 18th of August, to assist the committee in our deliberations. Thank you very much.
Thank you.
Thank you.
And I now welcome the Canberra Business Chamber and South Australian Business Chamber and the Northern Territory Chamber of Commerce and Industry. Just confirm who we have online. Do we have you, Mr. Shepherd?
Yes, online, thank you.
Thank you very much. Mr. Kay, do we have you?
Yes, I'm on.
Excellent. All right, well, we'll commence now. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to each of you. For the Hansard record, will you please state your full name and the capacity in which you appear today? We'll start with you, Mr. Kay.
Andrew Kay, CEO, South Australian Business Chamber.
Thank you. Mr. Harford.
I'm Greg Harford, the Chief Executive of the Canberra Business Chamber.
And Mr. Shepherd. Mr. Shepherd.
Dwight Shepherd. I'm representative of the Northern Territory Chamber of Commerce and Industry.
In what capacity, Mr. Shepherd?
As a member, I'm an insurance broker. I run the largest insurance brokerage in town and a member of the Chamber of Commerce.
Thank you. Thank you. That's very helpful. I now invite each of you to make a short opening statement, and then there will be questions from the committee. Mr. Kay, do you want to kick us off from South Australia?
Thank you, Chair. The South Australian Business Chamber welcomes those inquiry and supports the submission and recommendations made by the Australian Chamber of Commerce and Industry. At a time when our survey data shows that small businesses are facing the toughest conditions they've experienced in decades, with a profitability squeeze driven by rising costs across energy, rent, wages, inputs, compliance and more, spiralling insurance costs have moved from being a necessary cost of doing business to a constraint on doing business. In our March 2026 survey of business expectations, the cost of doing business was listed by 76.3% of businesses as the main issue affecting their business, with the profitability listed by 63.7% of businesses. These were number one and number two of the main issues affecting businesses. We're seeing the cumulative impact of all the costs of businesses increasing at a time when consumers are enduring a cost of living crisis. When a cost of doing business crisis meets a cost of living crisis, there are no winners. Insurance has always been a necessary cost of doing business. Today it's becoming a constraint. Businesses don't buy insurance because they want to, they buy it because they need it. It gives them the confidence to invest, to employ, to innovate and to grow. But when it becomes unaffordable, unavailable or no longer fit for purpose, those decisions are all put at risk. Our evidence is showing this isn't an isolated problem. In our September 2025 survey of business expectations, almost 85% of South Australian businesses reported higher insurance premiums over the previous year, with 32% experiencing significant increases. In regional South Australia, it was even more severe. 86% reported higher premiums and more than 40% described those as significant. It's also concerning that this wasn't a catch-up. They've had significant premium increases year upon year for the past few years, so these increases are now just coming on a higher base. How they're responding should also be of concern. So businesses are responding by increasing excesses, reducing cover, self-insuring parts of their operations, delaying investment, withdrawing from higher risk activities, and in some cases questioning whether they can continue to operate at all. Our September 2020 survey, 5.2% of businesses reported as knowingly underinsured, but we believe that given the lack of insurance literacy and understanding of the true costs of potential claims, this number is understated and likely to be closer to 10%. Now, businesses with decades of claims-free history are telling us they're considering operating underinsured or without insurance altogether because they simply cannot justify the cost. And if I speak to a business in the ag, forestry and fishing sector, they told us that machinery and equipment insurance that's required for finance is particularly problematic. To be honest, with the difficulty in obtaining insurance, we simply have moved to not having insurance on our machinery and equipment, simply having insurance on the items subject to finance. We have never been this exposed to equipment failure from disaster. A manufacturing group told us that in reality they're paying the same, but if they were to face a claim, they would probably breach several covenants, rendering their policy useless. We're likely to run uninsured next year as a result. When prudent businesses conclude that taking on uninsured risk is the most commercially rational decision, the market is no longer functioning as intended. Underinsurance shifts risk from individual businesses to employees, to customers, to communities, and ultimately to governments. Its weakness weakens business resilience, discourages investment, reduces competition, and leaves our economy more vulnerable to future shocks. 9.3% of businesses are already experiencing difficulty obtaining appropriate insurance, while many more report restrictive exclusions, limited competition, and policies that no longer reflect the actual risks they face. If I quote from a manufacturing business in South Australia, even as a small, clean, 30-plus year business with zero claims history, we were declined by a number of insurers. Problematic insurances include building, business interruption, and product liability. These pressures are particularly acute for regional businesses in sectors such as agriculture, tourism, manufacturing, marine industries, education and social services, businesses that are often essential employers and service providers in their rural communities. Their ability to trade, tender for government work, expand or recover from disruption increasingly depends on whether affordable insurance is available. The Chamber doesn't believe there's
Mr. Kay, I'm just going to have to stop you there because we've got two other witnesses to give us some evidence and we do want to ask some questions. Thank you. You can submit that in writing to the committee, but I'll go now to Mr. Harford.
Thank you very much. Look, I'd echo many of Mr. Kay's comments. The cost of doing business is a significant issue for small businesses in the ACT. It's the biggest problem for 2/3 of our members. Insurance is obviously really critical to support the resilience and growth of small businesses, but the costs of it are problematic, and we think many small businesses don't have the cover they need. There's a real lack of insurance literacy out there, a lack of knowledge and awareness of both the insurance options that are available, but also the risks that businesses face if they're not fully covered, and that really worries me. I sought some feedback from our members in advance of coming along to this committee meeting today. About 1/3 of our members are saying they don't have enough information to manage their business risks and insurance. Only 1/3 have actively undertaken some sort of business continuity and insurance risk review over the last 12 months. And only 55% are confident they can afford to cover any excess that they might face in the event of a claim. Insurance bills are going up year on year over the last 12 months. Most of our members are saying they've had increases of 10 to 20% in the costs of insurance premiums. I see there's a report out today from AMP Bank Go suggesting that insurance costs for small businesses have increased by 51.7% over the last 6 years. So that's a really big increase. And 45% of our members are saying insurance is unaffordable for them. So there's a problem. One of the real issues we see in the ACT is around uncapped common law liability, principally for workplace health and safety claims, workers' compensation claims, and that seems to be driving up costs. Insurers, to your questions earlier about the litigiousness of society, insurers are not necessarily are wanting to avoid going to court, and therefore are incentivised to settle. And in a world where there are no thresholds for impairment, as there are not in the ACT, and where the potential costs are uncapped, those incentives are very strong, and they translate into higher premiums, we think. So that's probably enough as an introduction. Very happy to take any questions.
Thanks very much, Mr. Harford. And I'll go now to you, Mr. Shepherd. If you could make a brief introductory comment, that'd be helpful. Thank you.
Thank you very much, Chair. I do have a wonderfully written submission, but I'll send that through to you. I'll touch on a bit of what both the other two chambers have said. In our experience here in the Territory, the pricing and the costs of insurance, in particular for SME businesses, is continuing to rise year on year. We have some clear limitations with regards to some of the statutory risks, workers' compensation, largely where there is unstructured underwriting practices being undertaken, which means that if you have a claim or a notification of a claim on a policy, the insurers can then pick a number that they want to charge for the next following year, and you just have to pay that essentially. We do have a competitive market for workers' compensation here in the Territory. However, there is some fundamental issues with how that is structured, which certainly doesn't bode well for an employer to foster more and more staff to bring them on when they've got essentially uncapped increases on the whim of an insurer and their balance sheets. We also see some limitations in the north with regards to the cyclone reinsurance pool. The implementation of that over recent years has seen some benefits in the domestic markets, home and contents and landlords coverage. However, for SME businesses with their property risks and the like, we've seen little to no impact from that scheme at all. We've also seen one of the main premises was to drive more competition into the market, especially for Northern Australia. Unfortunately, we haven't seen those results deliver. We have a competitive market in most of our eastern states. We call it southern states from here, where we are in the Territory. However, here in the north, we've got a very captive market. We've got one or two players, and that's about it. And that certainly makes it very difficult for nearly every industry, whether it be tourism, hospitality, construction, transport, even our care sectors. We have a very limited availability of affordable insurance capacity, despite many attempts to welcome more capacity from broader markets. Now the market is softening in the southern states, trying to get more attention focused on the north.
Thank you very much, Mr. Shepherd, and I'm going to go to the Deputy Chair, Mr. Buchholz, for a series of questions.
Thank you, Chair. Thank you, gentlemen, for the work you do with the chambers around the country, and I appreciate your sense of loyalty and service to your members. And interesting to hear the opening comments of Mr. Kay, where insurance policies are growingly more not fit for purpose or not available or not economically viable. When it comes to the crunch, where the risk of not being able to be fully insured is one consideration, or exiting the market, what would the Chamber's position to be to let them remain but be underinsured? Let me start with Mr. Harford.
Look, I think our advice to members is you're always better off to make sure that you've got full levels of insurance cover that you need for your business.
Of course. I'm just feeding on from the evidence that they gave, that it's getting to a point where they can't do both.
Yeah,
they're either in the market or they're underinsured.
Yeah, I think from a Canberra point of view, we're seeing businesses remain underinsured rather than leave the market at the moment. But insurance is only one of a number of cost pressures that are impacting business, of course. So there's issues across the board.
Sure. This inquiry gives us scope to look at insurance, and that's probably what we're going to focus on here. I understand, and I'm not talking about all insurances. I'm just talking. I'm loyal to the compulsory third-party insurance for motor cars because it's a broad base. Everyone's got to pay it. It's part of the rego. It's court. I'm loyal to the workers' cover. Everyone's in. There's no exemptions. Where I'm trying to shift the balance of power back to the businesses from the insurance companies who seem to cherry pick the insurance coverage that they wish to undertake, and where they deem that one of your clients or one of your members might be a risk, to either price themselves out of the market, which we have seen done, through no fault of the operational professionalism of your client. I'm trying to land in my place a recommendation where that business is released of, after they meet these, released of their compulsion to have the insurances. If the insurance companies don't want them, I don't want them exiting the market. Is there some type of self-insure mechanism that we can make a recommendation to forward, which will ultimately lead an underinsurance, but still tick the box of an insurance? I know it's a bizarre concept.
No, look. Hypothetically, I think we would certainly support the concept of self-insurance in theory. The problem is that when you're in a jurisdiction like the ACT, where you have uncapped liability claims potentially, the viability of a self-insurance model, I suspect, would be pretty limited, and we see that coming through in the price of insurance premiums in the ACT compared to other states as well.
It is uncapped, that's correct. In other jurisdictions, on different measures, like we're seeing caps being increased in other jurisdictions like Queensland. But assuming that sorry, what was that?
Mr. Kay, yes.
It's Mr. Shepherd here. Just touching on the I suppose the structure around essentially picking a limit and having a business buy up to it. There are some structural issues within business insurance, in particular property insurance, say, where the underinsurance is an impediment to businesses having it. So there are penalties written into a policy wording that says if you are less than 80% of the perceived replacement value of that property, you are deemed to be underinsured and you are then penalised as a result of that. And say, for instance, you are 50% underinsured, you will only receive 50% of that underinsurance value as a payout in time of a claim. Where there is, in my opinion, where there is certainly structural benefit that could come out of this, would allow the removal of that conditions of contract within the insurance companies, which would then allow businesses to say, well, I think my limit is, say, 500,000. If I was to have my building burned down tomorrow, 500,000 would allow me to rebuild to a certain point. That may be 50% lower than the actual rebuild cost, but that would then allow the business to still have funds in their account to move forward. However, the way it's currently structured with the underinsurance clauses, they would only receive 250,000 if they would only insure for 500. So some of those structural and contractual limitations within these policy wordings are certainly not understood by SME businesses in particular. And so that's where the issue of underinsurance really hits home in a business setting. On a home and domestic policy, those clauses aren't applicable. They've been removed from existence on those domestic lines because the literacy isn't there. I'd also implore that this should happen on an SME basis because the literacy around insurance and contracts, we best part need to be a lawyer to understand what the conditions are for just the basic property coverage for an SME business.
What do you say?
The SME, for a level of insurance for SME business was the last line.
Roger. Can we go to Scar?
Senator Scar, you've got some questions?
I'm interested to know, are there any particular sectors amongst your members who are having particular issues procuring public liability insurance or other insurance? So the context for that question is we have heard from particular sectors that are finding it extremely difficult to obtain any insurance, and it's as if the insurance market is almost vacating the sectors. So examples are live entertainment venues, caravan parks, amusement, recreation, tourism sort of activities. The hoteliers associations are saying it's getting more and more difficult to get insurance, especially if you're serving alcohol and have dancing or DJs after 12 a.m. So I might ask each of you if you can give your insights with respect to your membership in relation to those particular sectors. So I might start with you, Mr. Harford.
Look, I haven't heard too much about businesses not being able to get insurance. It's a question of price and about adjusting the risk profiles. For example, I'm aware of an outdoor entertainment business that no longer has a bouncy castle in its operations because it could not get liability insurance with that bouncy castle. So the solution is to take it away. I've heard of other businesses that have tried to adjust their operations to take account of that. Probably the bigger issue I hear about liability insurance is around federal government contracting and requirements for $20 million worth of public liability cover on very small contracts. So you might have a contract worth $20,000, $50,000, and you're being required to take on a very high liability cover, which seems out of proportion to the work.
Okay, and that's certainly been raised with us. It's also been raised that there are discussions with the relevant minister about how to address those issues to the extent they're real barriers for providing opportunities for small and medium-sized enterprises to participate in government procurement processes. I might ask you, Mr. Kay, have you got any insights you can provide us with respect to any particular sectors where the market has just failed, or your members in various activities, engaging in various activities, are finding it extraordinarily difficult to procure insurance even at all? Mr. Kay? We lost you?
Okay, we've lost Mr. Kay.
All right, I might move on to you, Mr. Shepherd.
Yes, we've certainly seen here in the Territory some limitations around remote risks and remote occupations. Hospitality industry has been severely impacted. Also the likes of tourist parks, caravan parks, accommodation type risks. We've also seen some very limited capacity in construction, in particular construction liability around those. But yeah, the public liability, as you mentioned, for live events, hospitality type risks, nightclubs or bars that operate into the late hours, they're certainly very difficult to find adequate coverage for.
Okay, and in terms of construction liability, is that in particular insurance to cover defects?
A lot of it's to do with civil construction in particular. So there are the defects liability isn't necessarily the main factor of concern on. Our wet season here in the Northern Territory makes it difficult. But we're also seeing some issues in that liability space around the workers' compensation schemes. Any injuries sustained on a worksite are then being taken out against the public liability. So the recovery actions between the workers' comp insurer and the public liability insurer, that's seen some massive restrictions around capacity in those sectors.
Okay. Mr. Kay, are you with us again?
I'm back.
You're back. Excellent. Did you hear my question?
No, I don't think I did. Sorry.
Could I just ask you to take that on notice because we need to jump to our next
Oh,
one. This is
okay.
very
So if
short.
I can ask you to take on notice, I'll just repeat the question for Mr. Kay. If you can simply take on notice whether or not they're your members participating in different sectors, say, for example, tourism, recreational activities, live entertainment venues, whether or not there are particular sectors or segments of the business community in South Australia who are finding it more difficult than other sectors to procure insurance, including public liability insurance.
So if you can take that on notice, please, Mr. Kay, and provide a response, that would be helpful. I believe, Ms. Lawrence, you had one question for Mr. Shepherd because he is a broker, and that would be the last question for this session.
And again, I'm happy for it to go on notice in the interest of time. It's just expanding on Senator Scarr's line of questioning anyway, just with respect to mutuals, because I understand there are mutuals out there such as our ARC mutuals, Venue mutuals, providing insurance coverage to caravan parks and hospitality venues and the like. So as a broker, I'm just interested to understand the extent to which they mutuals that are recommended, or are they just too restrictive for what's required for the sectors you're endeavouring to seek coverage for? Because looking at their websites, they do seem to be, limited to different categories of insurance coverage, but they are out there.
One of the biggest limitations around mutuals are the fact that they're not a regulated insurance product. They are discretionary trusts, discretionary funds, and discretionary being the ultimate word here. So as a broker, we wouldn't recommend somebody move into that because it is at the discretion of the fund itself as to whether they pay a claim. There is facilities within most brokerages, large multinational brokerages, to facilitate mutuals on behalf of certain sectors. But it wouldn't take on all of the risks in that sector. It may be just for, say, for instance, the hire car industry. They've got a mutual within their Capricorn mutual. They look at pretty much servicing that sector and some of that higher risk stuff that the insurance market would say, look, it's unsustainable for us to take on as an industry. However, that sector has found validity and viability in their own mutual to cover certain risks. It wouldn't cover the entire risk profile of that business. However, there is benefit in certain sectors for a mutual. It is worth a discussion with some of the larger brokerages around the establishment of and serviceability and management of, because it is an unregulated form of insurance, and certainly adds some complexities when you have an SME business buying into it, which is ultimately discretionary, and in the event of a catastrophe type event, there may not be the funds there to actually return the business back to its pre-loss position.
Thank you very much. Can I thank you?
Appreciate that. Thank you.
Thank you. Can I thank you, Mr. Shepherd, Mr. Harford, and Mr. Kay for bringing those perspectives. Mr. Harford, last word to you because you are in the room.
Thank you so much. Just one final comment. One thing we really think the country would benefit from is more consistency and standardisation between states and territories. There's some big differences there about what's in and out of scope, particularly for workers' compensation. To give you one example, we have a member who has 23 staff in Queensland and is paying $16,000 in workers' compensation cover. In the ACT, they've got 45 staff and are paying $140,000. So that's about 4.5 times the cost on a per employee basis, based on really the scope of the scheme and the uncapped liabilities.
Okay.
That's just most Australians agree with you, with the exception of the bureaucracy of each of the relevant state departments.
Thank you very much for being with us today, and we will now suspend for one moment, or just a couple of moments, to confirm that we have our next witnesses online. Thank you.
Thank you.
want to discuss with you is what Lloyd's is. So let's just start with the formal words and get on the record who it is that we've got from Lloyd's with us. I understand that information about parliamentary privilege, the protection of witnesses giving evidence to Senate committees has been provided to you both. For the Hansard record, could you please state your full names and the capacities in which you appear today?
Yes, my name is Rachel Turk. I'm the Chief of Performance and Strategy at the Lloyd's Corporation. I'm joined by my colleague Tracy Bryan, who's a General Representative for Australia.
Thank you very much. I now invite you to make a short opening statement, and after that the committee members will have some questions.
Wonderful, thank you. So thank you, Chair, and thank you, Committee, for the opportunity to appear today. We recognise the importance of the committee's work, particularly its focus on the affordability and availability of insurance for Australian businesses and communities. And we at Lloyd's support these efforts to better understand the pressures affecting the market and to identify practical, sustainable responses. I think at the outset, it's important to distinguish the Lloyd's Corporation from the insurers operating in the Lloyd's market. So the Lloyd's Corporation itself does not underwrite insurance. It does not set prices and it does not assume risk. It's a body established under UK law to provide services and infrastructure to facilitate a marketplace for insurance subject to UK and, in this case, Australian regulations. Lloyd's has a very unique structure. So our members provide capital to support the insurance businesses that they each undertake, and they are the insurers for policies underwritten at Lloyd's. Insurance is then underwritten through syndicates, which take slices of risks in line with their risk appetites. And then each syndicate is operated by a managing agent. And there are two key distribution channels within Lloyd's. Firstly, the brokers, which act for policyholders. They present risks to managing agents either directly or through a wholesale broker into London. And secondly, the managing agents themselves, which can authorise locally regulated third parties, known in Australia as underwriting agencies, to enter into insurance contracts or pay claims. So part of the role of the Lloyd's Corporation is to regulate and supervise the market, and we use what is known as principles-based oversight regime, which covers 13 areas relating to solvency, operations and performance. It also includes principles on high-quality claims, good customer outcomes, fair value and inclusive cultures. At a global level, we also maintain our market's capability to write global business through reinsurance authorisations in over 200 territories and with around 80 direct insurance licenses. And this breadth allows significant geographical diversification of risk and global experience combined with the local relationships, inherent diversification and underwriting expertise enables us to provide bespoke solutions for risks that are otherwise difficult to cover. Australia is one of Lloyd's largest markets globally, and we're incredibly proud of our long-standing ties to Australian businesses and communities. And if I can turn just to the focus of this inquiry, we recognise that some businesses in Australia are experiencing pressure from rising insurance premiums and, in some cases, difficulty attaining cover. Given the Lloyd's Corporation's market role and global footprint, we believe we have a good perspective on these challenges across multiple markets. We engage regularly with authorities on pathways to address these issues, and I'd be happy to share some of our experience from other markets. So thank you once again for the opportunity to speak today.
Thank you very much. Never having had to deal with Lloyd's, I lived in a world where it was something a little bit like Gringott's Bank, perhaps for me, like a very substantial building in which magical things would happen that involved insurance, and that's kind of where it lived in my imagination. And it's been quite an education to come to terms with the fact that it's actually a marketplace. And I thank you for your description of the policyholder's role, the local broker's role, the Lloyd's broker's role, the underwriter, the syndicate, the managing agent, and all the other terms that you've just put into your opening statement, because it creates a very different perspective from a physical entity to the sense of a web of experts that consider insurance and have a variety of roles that collectively provide the underwriting globally. I think you said for 200 territories, is that correct?
We have 200 reinsurance licenses and 80 direct licenses, so pretty much global coverage.
If you can hold for one moment, we just want to check our sound, that Mr. DeLiga and Ms. Lawrence can't hear what's being said. Just Broadcasting is checking this, a little technical issue at our end. Okay, so we'll continue and hopefully that might get resolved. Mr. Moncrief can hear. So we continue with that. If I can go to your offer at the end of your opening remarks to us there to talk about the multiple markets that you serve. I'm always proud, like we are after the Commonwealth Games, that we did well in the pool. We are always looking to be a large market and a significant economic place of activity. But what are your multiple markets telling you about lack of accessibility, lack of affordability, underinsurance, and what sustainable and creative responses are being offered in other jurisdictions that could inform the Australian context?
Okay, so...
Could you just state your name before you speak? I'm not sure.
Okay, so this is Rachel Turk responding. Globally, we would hear. So just a reminder, so obviously, Lloyd's at the corporation, we don't price the risk and we don't take the risk, but we do engage with regulators across the world, and hear a similar story that the risk environment is increasing. And that could be due to increased prevalence of natural catastrophe risks. Sometimes it could be due to new risk vectors such as the use of AI to drive more cyber crime, through to rising costs of litigation awards from social inflation, where the awards tend to outstrip economic inflation. And then other factors include increasingly complicated geopolitical arena and interconnectivity of risk. So it's, broadly speaking, similar risk factors impacting across the world to varying different degrees. And then if we think about some of the solutions that have been enacted, or some of the ways that people have attempted to tackle this, there's a number of examples. If I take, so Florida was really struggling with the availability of property insurance, and a lot of that was coming. So there were two reasons. One was lack of resilient rebuilding, so sort of the Build Back Better idea. And so actually many states across the US enacted more stringent building codes that required, in the post a disaster, much stronger build quality. And now you can see, when the storm tracks go through the hurricane season, you can see which buildings are subject to the new building code, because they tend to survive the windstorms. So that's been one piece, which is sort of building code and Build Back Better. From a litigation perspective, we saw in Ireland, Ireland was really struggling with increased sort of huge surging premiums for SMEs through to very high personal injury payouts. And the government launched a comprehensive reform agenda and sharply reduced awards for minor injuries. And then they also enacted a process to resolve claims more efficiently and tightened laws to deter false claims. And as a result of that, there was a significant reduction in personal injury awards. And then competition began to return. So the Lloyd's market had always stayed in the Irish market, but domestic competition started to return. So they're two examples that we've seen sort of in recent times that have made demonstrable impact to addressing some of the risk environment directly. I'll pause there.
Saying Australia's a very big country. And, we can't get off the continent for a weekend jaunt in another place, but we can see across our country implementation of schemes of the kind you've just spoken about, with caps on liabilities in some jurisdictions and uncapped ones in others. We can also see the Build Back Better and changes to the rebuild that vary from state to state. We've also had the innovation of a reinsurance pool established for the northeastern parts of Australia in particular. So we are implementing a number of the things that you've just spoken about, but we have had a litany of complaints across every possible imaginable sector across the entire country about an inability to actually access insurance, increasing under-insurance or self-insurance now becoming people's only option to survive in keep their business in the marketplace. I wish I was more heartened by your evidence. I was waiting for some magic bullet from somewhere, but those things are happening here, and we are not seeing any respite from increasing premiums.
So if I take it back to how do insurers, as a general rule, price risk, and again I'm talking as a marketplace here. So within the Lloyd's market, every insurance, every syndicate or managing agent will run their own pricing models, which is one of the reasons why when you approach Lloyd's, it's a competitive marketplace. So you could, I mean, if you approached all 54 managing agents, you could theoretically get 54 different prices for the same risk because they all have their own pricing models. And the way that they're building those pricing models up is a combination of historic information, because that's the data that's there, and a forward-looking view of risk. What we've seen, and so Ireland, for example, it was in the mid-2010s when that legislation sort of started. It took a number of years for that to filter through into insurance, and some of that is because of the requirement, if you like, for some form of demonstrable evidence that's taking impact, that's changing the risk profile itself. So it's that combination of historic, but then the forward-looking view of risk and the time that it takes for that to demonstrate that it has reduced the risk factors. Because ultimately, the insurers are looking at the risk factors that they're facing and then pricing those risk factors appropriately.
Okay, so the risk factors that our businesses are talking about and risk mitigation is being undertaken, but there is no there is not a sufficient variation in the pricing points of them purchasing insurance that reflects that risk mitigation in any way. Are there any jurisdictions where the information flow is transparent and risk mitigation is being managed on a case-by-case basis that you're aware of?
Jurisdictionally, not so much. I think data flows and transparency of data flows is a sort of a holy grail for almost everybody, insurance, financial services throughout. So the one sector where you see this more is cyber. And so again, if you take an average cyber policy, so Lloyd's is the leading market for cyber, Lloyd's overall, and one of the elements that's offered within the majority of cyber policies here at Lloyd's is what we call pre-loss services. So that's really helping the individual client become more resilient to a cyber attack. So that's helping them, in fact, multi-factor authentication or whatever that may be. And in the event, and if you just took MFA as an example, a client that had MFA and a significant amount of cyber resilience already built in would see a differential in price to those that would require the pre-loss services in order to get them up to some form of cyber resilience. So you do see differentiation on a per-risk basis based on the individual risk characteristics of a particular firm. So cyber is a good example of where the insurance industry has really lent into making resilience part of the product offering rather than pushing it onto being the pure responsibility of the individual insured.
Where in the world would you say does best practice exist in terms of affordability and accessibility to insurance products?
So Lloyd's operates a global marketplace, and we see risks from all around the world. I'm not sure that I'd be able to tell you, if there's massive differences between jurisdictions in terms of affordability. We see huge variations in sort of regulatory approaches and appetites. But the data that we collect as a Lloyd's Corporation point of view is much more sector-based rather than geographically based. So I wouldn't have that data to be able to give you a comprehensive answer on that one, I'm afraid.
Okay. So one of the challenges I guess we're facing here is there are sector-based concerns. Some sectors have data that relate to the mitigation or a quality assessment tool for participation in the scheme. Others just get caught up in, you're in that general industry and we're not insuring that anymore. Risk appetite, for example, here in the live entertainment industry appears to have all but dried up. We've got, venues operating without any public liability because it's no longer available. Is that happening in other places, or has that problem been resolved in other places, and by what method?
So I'd say, again, with Lloyd's, again, noting that from a corporation point of view, we don't price or take the risk, but the risk appetites are set by each individual organisation within the Lloyd's market. And their risk appetites will vary based on other business that they write, the appetite potentially of their capital providers, what else, I guess how geographically diverse they are. So we do, I'd always say that from a Lloyd's perspective, one of the, you mentioned earlier on the sort of the building and the iconic building. One of the elements of Lloyd's with the building is it's the concentration of expertise in one place, and by expertise, I'm not saying that the Lloyd's underwriters are by no means more expert than others, but it's the concentration that there's 60 different product lines written within one place, and all of the risk mitigation services and solutions and all of the brokers are all within the same sort of half a square mile. And that concentration of expertise tends to mean that the Lloyd's market is better able to provide a solution when domestic insurers are not able to. And part of that is because of the geographical and the product line diversification that Lloyd's can achieve because of the global nature of risk that we see, such that we're better able to sort of spread the risk. So in terms of how have other jurisdictions overcome it, I'm not aware that there's been particular legislation or reforms in particular areas. What I am aware of is that given as I said, the diversification of risk that comes into the Lloyd's market and the concentration of expertise, you tend to find the Lloyd's market is able to find a way to provide a solution and also find a way to look through the generic sector badging and be able to provide a little bit more nuance into the genuine risk characteristics of an individual risk.
Thank you very much, Ms. Turk. I'm going to go to Senator Paul Scar now.
Thanks very much, and thank you for joining us from a beautiful English day. Maybe you can take this on notice, but we're really keen to understand, and let me provide you some context. We had earlier today participants in the live entertainment industry in Australia. So these are nightclubs, these are venues that maybe one night of the week have a comedy act, the next night cabaret, say 200 people in the venue. Once a week they have a DJ and a dance floor, right? And literally they cannot find public liability insurance that is remotely affordable unless they agree to desist or stop activities involving dancing and the service of alcohol after midnight, or substantially cut down their numbers. So it's a question of total market failure in terms of particular segments of the Australian market, which is putting an onus on this committee to try and work out, well, how do we address this, or else we're going to lose culturally significant activities because small and medium-sized business simply can't procure the insurance. Can you take on notice, perhaps, to explore with some of your members as to what they're seeing in terms of how to address this? Because we're trying to come up with ideas, suggestions and recommendations whereby this pressing community concern is addressed.
Yeah, look, I think it's a significant concern. I agree. I'll take that one on notice because I think, as I said, I'm not directly pricing or taking the risk ourselves, but we can definitely talk to some of the members and the managing agents within Lloyd's, take that one on notice and revert.
Yeah, if you can. So the particular segments we've heard from, and if you could take each of these on notice, live entertainment venues in particular, tourism recreational operators, and, for example, caravan parks. So, again, just to provide some context for you and some colour with respect to the issues that we're considering, there's an example in... Have you been to Queensland?
Sadly, I have not.
Oh, well, you must come to Queensland. And when you come to Far North Queensland, you should stay at a Far North Queensland caravan park. But what you'll find is those caravan parks in Far North Queensland, they can't procure insurance. And we've had an example of 90-year-old owners of a caravan park being unable to sell the caravan park because they can't find someone to purchase it who can procure insurance. So, again, it's almost like a complete market failure.
It's because the caravan park's on a creek, and there's the potential for risk for flooding, but by the very nature of a caravan, you just pick it up and tow it away and avoid the risk.
So this situation where clear mitigants aren't being considered. We've had another example today of a small business, a hobby farm in a particular area, which has been subject, which hasn't ever been directly impacted by bushfire, but they're in a broader region where parts of that region, maybe 40 kilometres away, have been impacted by bushfire. They've done everything from installing fire hose reels to all sorts of mitigations. And again, they're just getting no response from the market. So the collective impact of all of these issues is for us as a committee to sit here and say the insurance market's failing. It's failing the people of Australia in a number of ways. And what do we do as a Senate committee to address that issue? Which is, it's unacceptable that that people carrying on small businesses or living their lives simply cannot secure either the insurance protection at all or on terms that are even remotely affordable. So happy for you to take that on notice, but I just wanted to reinforce to you the context of what we're hearing. And we're seeing small business owners who are left with potential liability hanging over their heads like the sword of Damocles because they can't get that insurance at all. And potentially it's they're facing devastating loss if an event occurs and they're facing the prospect of being wiped out financially. So happy for you to take that on notice, perhaps consult some specialists in those areas to give us some advice, drawing on the wisdom of your membership to give us a bit of additional insight, because from our perspective, we're looking at what can only be characterised as market failure in certain segments.
I massively appreciate that context. Thank you very much. And as I said, we'll take that on notice and come back.
Okay, thank you.
Can I ask just a couple of fact questions? We're sending you a lot of our concerns and worries and large structural problems, but just to get the shape of the connection that you have here, Lloyd's mostly engages with registered brokers, is that correct?
Yes, that's correct.
How do brokers register with Lloyd's?
So there's two ways that business can come through into Lloyd's. There's through the brokers, so the intermediated. So they tend to use what's called a wholesale broker into Lloyd's, and they're registered as Lloyd's brokers. And that just have to sign up to a certain set of standards as a Lloyd's broker. But any broker can form a relationship with a wholesale or Lloyd's broker, and so effectively the distribution. So if you would have a broker based in Australia, they would have a relationship with a Lloyd's broker, and they would send the risk through to the Lloyd's broker, who would then put it into the Lloyd's market. Alternatively, the brokers directly on the ground in the domestic market, so in Australia, can access the underwriting agencies directly themselves, who are obviously delegated, who have the delegated authority from the Lloyd's managing agents.
So how many registered brokers are there in Australia?
I don't know the answer to that question. Tracy, is that something that you can take?
Yeah, thank you for the question. Tracy Bryan speaking. So when we talk about Lloyd's registered brokers, there are only about 4 in Australia. But to Rachel's point, most of the business will be either through a local wholesale broker who has a relationship with a Lloyd's broker or places a lot of business through them, or more commonly is through the underwriting agencies that are approved by Lloyd's locally, of which there's 188.
Okay, so this problem, let's just go to the one with the caravans and being unable to get insurance. So there's 188 places in which a seeker of insurance could go here in Australia. Is that correct?
It is, but they're not all approved for all the same classes. So some of them will have specialties. So we actually do have a specialised caravan park agency, but there's only one of those that I'm aware of, for example. Out of the 188, there's probably about 70 of them that might have a liability binder or professional indemnity binder of some sort, but sometimes they're limited in terms of what their individual expertise might be as an agency, and so their binding authority agreements from the managing agents in London will reflect what their expertise is locally. So that's one of the, in terms of distribution, that's obviously the important thing about those agencies is that they come with expertise and a particular distribution that they've got direct access to. So okay. Some of them will, and not all of them are all Lloyd's. I'll just clarify that too. So some of them might have binders with Lloyd's syndicates. They might also have binders with local company market insurers here as well. Okay.
So in terms of the Lloyd's Association, could you provide on notice for the committee identification of the 188 approved sources of potential loan, potential insurance providers, and identify their expertise. So 70 in liability, what particular kinds of liability or professional indemnity are they associated with? And the caravan park one, clearly that's a problem for us. So why only one?
That's a good question. I guess she is a small business owner herself with a history of underwriting caravan parks. So that's why she's got a specialty and she's been able to get that book supported by Lloyd's. We can certainly take on notice to provide you with a list of the 188 cover holders. What I will say, we can provide you at a higher level the types of business that they're writing, but we don't have, like, every binder has the granular detail as to what they're committed to write, and one agency might have a number of different binders with a number of different syndicates, so that would be quite an exercise.
Okay, so this is part of the problem. This is knowledge that is not in the public place and people don't know where else to go. I don't know that the caravanning associations or the caravanners would know that there's only one provider that they could access, that the caravan industry could access in Australia. And where that's failing us locally, what are the opportunities for any assessment of risk from Lloyd's when the reality here in Australia is so difficult? Is it just up to that individual person, that one business owner, to, you know, act in the national interest, or are there any flags that go up that says, okay, there's a problem in Australia with regards to access to insurance for caravanning?
Yeah, look, I will clarify. I'm not sure that they are the only providers of caravan insurance. That is not what of caravan parks, I should say. That's not what I'm saying. It's just that I do know of one in particular that is with the Lloyd's market, but that's not to say that there aren't others. In terms of, you know, to your point, it is very much a local agency will have a certain amount of expertise, and they will go to the Lloyd's market and find which syndicates are prepared to support their books of business based on, you know, their prior experience, their knowledge of the risks, and their distribution.
So I'm thinking about evidence we received in Sydney from representatives of tattooists, and they had really significant difficulty in getting reassessed in terms of risk when the profile of risk had really reduced for their businesses. And I think there was one that was able to get onto one broker and get something out of Lloyd's, but that information wasn't generally known in the marketplace, and it wasn't distributed through any mechanism that we've got here, including, you know, the Society of Tattooists or the peak body for that. I guess, are there any other jurisdictions that you're aware of where there is a degree of transparency around this? Because at the moment, this is like, I've got a mate of a mate of a mate who might be able to help you out, perhaps, but I'm not sure. That's kind of where we are, and it's actually having an impact on our national markets. And businesses are looking at going out the door backwards across the country because this insider knowledge is absolutely inaccessible and there is no transparency.
How profitable are
they? So if we just go back to sort of like how the risk is placed, I mean, clients can obviously directly approach cover holders, but the majority of the market works on an intermediated basis through the broker. And where we've seen the greatest transparency is where the network of brokers are very sophisticated, such that they are aware of the risk appetites within the Lloyd's market, within the domestic markets, within the cover holder market. And so they're able to, because the broker acts on behalf of the client in order to secure them the best available pricing and the best available coverage. So when we've seen that sort of, you know, slightly more transparency from a client perspective, a lot of that has been driven by the broker being able to provide the client with some very good advice as to where to go, rather than it being, as you say, through a friend of a friend of a friend of a friend.
What are the profit margins for brokers who are registered with Lloyd's?
We would not see that information at Lloyd's because we don't actually, although they're registered, we don't regulate them, and so we don't see their financial information.
Okay. What kind of information do brokers provide to Lloyd's when they're seeking cover for their clients? How granular is it?
So to Lloyd's Corporation, zero, because we obviously don't get involved with pricing the risk. What information do they provide to the market? That very much depends on the type of risk that they're trying to cover. But it would, again, typically be pretty granular. Depends slightly on the size of the risk, but it will, sector information, revenue information, number of employees, risk characteristics, the mitigations, all of the various risk factors, and then the way the rating process would work is an underwriter would review the initial submission that a broker has brought in, likely ask some follow-up questions. Sometimes there's a call with the client. Again, it depends a little bit on the premium and the size of the organisation seeking insurance, but sometimes there's a client call and then terms and conditions are offered and firmed up.
Would you describe Lloyd's as hungry for business at this point of time, or is there a risk appetite that's reducing because of the factors that you mentioned in your opening statement, including geopolitical realities, supply chain interruption, and climate impacts?
Yeah, so Lloyd's is a thriving marketplace, a very competitive marketplace. I think there's sort of over 50 different managing agents here, and there's over 120 different syndicates, and then we've got the delegated arrangements all around the world. The risk profile is changing without a doubt. Is it increasing? Possibly, yes. Lloyd's has been around for 330 years and has also managed to underwrite its way through 2 world wars, etc. So I think we are a marketplace that is used to the changing risk landscape and being able to adapt to that. So I don't think it's fair to classify as being hungry for business. I think our appetite remains relatively stable year in, year out. I think to say that we are risk aware is probably the right way to typify it. So I spend a lot of time with the role that I have of overseeing the market from a performance landscape. Just to reiterate the risk aware piece, we're not risk off, but we're aware of the changing nature of risk and ensuring that that's fully factored in to the decisions that the underwriters make.
Thank you very much. Look, we appreciate you coming online so early in the morning there to speak with us. And I think that there'll probably be some more questions on notice as we reflect on what you've provided and, hone our questions a little further. So we'll be in touch with you about that from the Secretariat. If there's anything we've said that triggers thoughts as you process through the day of information you think could be helpful for the committee, we would be very happy to receive that. I believe we have one final question from Miss Lawrence before we let you go. Over to you, Miss Lawrence.
Thanks so much, Chair, and happy for this to be on notice as well. But we have heard from a number of witnesses an interest in essentially setting up a model of a mutual to address those hard-to-insure sectors, but equally we've heard from brokers where, because they're generally set up as discretionary, that is not necessarily a product they would recommend for a client to purchase or buy into. But I understand that Lloyd's does underwrite a lot of the mutuals in Australia, so just whether you can provide any insights or commentary around the pros and cons to mutuals where there is those hard-to-insure sectors, and the context for some of the risk because it's not a regulated sector through APRA like other insurance companies would be. So, yeah, just keen to get your insights on that, given you do actually underwrite those mutuals.
Thank you very much for that question. So I think if I can take on notice the specifics around the Australian mutuals, because that's something I'm slightly less familiar with. I can give you some generic comments around mutuals. Certainly my background, I used to insure an awful lot of business in the US, so my experience is more based on that. mutuals are quite heavily used in the US market, especially in medical malpractice. So you get a lot of physicians mutuals, you have some energy mutuals as well. And they have been a pretty successful way of a group getting together and pooling their risk and then being able to capitalise themselves. And then the mutuals themselves seek some form of insurance or reinsurance coverage on behalf of their members to smooth out. And so they have been successful mechanisms for groups that believe in their own risk mitigation and believe that the market isn't pricing adequately for them. So we've seen them being pretty successful in the US market, but I'll take on notice the Australian specifics and come back to you if that's okay.
Thank you.
Thank you. So there's a couple of questions on notice and additional information you might provide. If you could do that in conversation with the Secretariat by Tuesday, the 18th of August, that would be much appreciated. Once again, thank you for your participation today. That concludes today's hearing. Thank you to all witnesses who appeared, to Hansard Broadcasting and to our fabulous Secretariat. I advise all other witnesses that questions on notice should be provided by the Tuesday, the 18th of 2026. And the committee now stands adjourned. Thanks, colleagues.